Good morning and happy Monday to you. You're watching NDTV Profit. My name is Alex Matthew and this is all you need to know. Like the name suggests, over the course of the next half an hour, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. US futures indicate a slow start to the new trading week after a record rally powered by tech stocks in the previous week. Caution extends to the Asian markets as well. Japan's Nikkei is an outlier, hits a fresh record high as investors return from a long weekend. Walt Disney Co. and Reliance Industries are said to sign a binding pact to merge their media operations in India. Reliance Industries is set to own at least 61% of the merged entity, and that's a Bloomberg report. Indian household spending more than doubles over the decade, according to the latest government's household survey. The US FDA sees a 150% increase in inspections over the last year, according to Country Director Sarah McMullen. She says that data integrity is a leading concern. That's an NDTV Profit exclusive. Now, it's a bit of a cautious start to trade in the new week. We've seen narrow ranges in most of the Asian equity markets this morning, and this was to be expected given the rally that we saw last week in US stocks that fueled risk-on sentiment the world over. Nvidia's blockbuster result and revenue outlook had bolstered expectations of AI-powered development in the tech world at large. Now, as things stand, though US futures are pointing to a muted start in trade this week, you also have a few Asian markets that are trading positive. One of them, of course, is the Nikkei 225, which we've already mentioned. They are returning after a bit of a break, and they're trading at an all-time high with gains of about 0.7%. And like I said, narrow ranges across the board in the Asian markets this morning. Keep an eye on oil prices as well. There have been warning signs of a shortage in oil tankers already. According to a Bloomberg report, shipping rates have increased, and also voyage durations have been up for quite a while now, but most of the ships being diverted amidst Houthi attacks in the Red Sea. As things stand, though, Brent crude is trading above the $81 per barrel mark. What you see on your screen is NYMEX. Let's turn to the Indian equity markets now and talk about the latest cues from the F&O space. Samina is standing by to give you some perspective on that. Samina, new week, what are the latest cues?
New week and last 4 days of the Feb F&O series. And this one has been one of records, right, in every way possible. So the Nifty, of course, has scaled to new highs. It has been an exciting Feb, beating the seasonality factor, where Feb over the last 3 years has actually been weak for the markets. Remember, in Jan, the Nifty lost about 450 points. So far for the Feb series, we are already up 850 points. Well, just to break this down for you, the Nifty futures shed 1.2% in open interest. It trades at a premium of 16.5% versus 28.2% that we saw on Thursday. You also seem to have bank open interest, like I said, it's also down about 8%. On Bank Nifty, there's a premium of 30.90, while open interest is down about 3.84%. And that's pretty much the picture we are picking up on. The PCR ratio as well has declined, indicating that the volatility in the index has taken a little bit of a break, down about 1%. That is the put-call distribution. On the weekly put-call ratio on the Nifty 50, what we've seen is maximum open interest clearly stands at levels of 22,500, followed by 22,300, and not far behind is what we are seeing on 22,300. So that pretty much becomes a range on the downside. On the put activity, maximum open interest addition has been seen at levels of 22,000, followed by 22,200, and not too far behind is 21,900 and 21,800. Well, for the week's monthly F&O expiry, the call strikes really range between 22,300 and 22,500. And we've also seen open interest addition in that range of 22,100 saw maximum open interest shedding. Well, those are the stocks, and these are the fair futures you want to watch out for. You've got Vodafone, Grasim, and India Cement and Canara IndusInd Bank, which have actually lost open interest. So they've seen a massive decline. These counters are one you want to watch out for in today's day of trade. Well, on the other side, those are the stocks that have seen a shed of open interest. On the upside, of course, there are counters that have actually seen a gain. But all in all, Alex, it seems like its markets would like to maintain momentum for this week. Remember, last 3 years, we've seen Feb actually go home negative. This is going to be the first time in a Feb series you might beat the seasonality factor, and markets may actually keep that momentum going, even though it looks like a quiet start this morning.
All right. Thanks so much, Samina, for wrapping that up for us. Now, a big story that is developing in the media space, and this is source-based by Bloomberg, of course, but it could be a significant development if it pans out. And this is that Reliance Industries and Disney have signed a binding pact to merge media operations in India. Mahima is joining in to give you some perspective. Of course, there are several questions that will need to be answered. We will ask the experts over the course of the day. But Mahima, at the start, what are the key details that you would pay attention to?
Right, Alex. So as you rightly mentioned, now this is a Bloomberg story that had come out yesterday, where Reliance and Disney have signed a binding pact to merge their media operations in India. Now, Disney has been mulling options for its India business. However, Disney now has reassessed its strategy amidst intense competition. Now, if we talk about the merged entity stake and investment, well, the media unit of Reliance will hold approximately 61% in the merged entity, and the total investment of approximately $1.5 billion will be made by Reliance Industries. However, this is not final yet. The stake split in the partners might change over a period of discussions that will take place. Well, there is a Tata Play angle also in this. Disney owns majority stake. Disney owns, beg my pardon, Disney owns a minority stake in Tata Play, where so Reliance may consider even acquiring this stake from Disney. Now, how is this beneficial for Disney? Well, Disney has been grappling with challenges in India with respect to its retaining subscribers and securing the media assets. So, Reliance has, as you've seen over a course of time, it has cornered a larger slice in the local media and entertainment space. Recently, even the IPL rights, where both Reliance and Disney were competing for it, Reliance did back the IPL rights, and it has also backed a multi-year pact with to broadcast the HBO shows as well, which was priorly done by Walt Disney. So this is very important for Disney in these terms. And how will RIL benefit? Well, the merger is larger consolidation effort for the Indian media and entertainment space. And after the Zee-Sony merger call-off that has taken place, this is a very big news for Reliance, as it will be one of the major players in this space. Got it. And several questions, of course, will have to be answered. Thanks so much for giving us that perspective. Among them, where will this sit if it indeed joins the Reliance stable? The question about Viacom 18 and the merger with Viacom 18, or whether it sits separately. We'll find out soon enough when there's an announcement. Let's move on, in fact, and talk about the pharma space. We've got my colleague Monal Sangvi, who spoke to the country director of the US FDA, the Food and Drug Administration, Sarah McMullen, on quality checks and evolving standards of the US FDA. Listen in.
We are starting to pick up our inspection pace post-COVID, and in fact, just this past year, we did over 2.5 times the number of surveillance inspections than we did the previous year. So we have seen an increase in terms of compliance from Indian industry over the past year, and a lot of that came right post-COVID. We had a lot of compliance follow-up inspections, and so this past year saw an increase in surveillance inspections and a lowering of the OAI rate of inspections here in India. That being said, I think we do need to address some of the concerns, as you mentioned, specifically surrounding data integrity. We've addressed data integrity issues in India and globally for many years, and it's concerning to see them come up again and to come up in prevalence. And so, you know, for us, when we see significant data integrity issues, it really speaks to quality culture in facilities. And so we really want to see facilities take ownership for creating a quality culture that empowers everybody at every level to make the right decisions about product quality, and also the accountability to follow that up.
So when you talk about data integrity, the Form 483 is always quite exhaustive and a little difficult to figure. So what exactly do you think are the trigger points when we get a copy of the Form 483? What exactly are the points that we should highlight as maybe a high risk versus a moderate risk? If you could just help us understand how to look at it.
So any breaches in quality are undesirable, right? So whether it be a moderate breach or a significant breach. And I think what you'll see when you look at our 483s is that they're really put in order by level of significance. So as you read through, the most significant items should always be the ones that are listed at the top of the 483. And most of those will be related to the quality system. So if there's any findings relating to the quality system, we take that very seriously because that could also give indications about systemic problems within the quality system. So it's not just that one violation, it's that there might be a problem within the system itself. So those are the concerns that we really address and take more significant concerns about on our findings.
And I mean, U.S. drug shortages has also been quite in discussion for the last couple of years. So, are you taking any steps towards? Is the ramp up also kind of related to that? A, and do you believe that there are issues that are getting cleared out, and how are you looking at addressing the whole drug shortage issue?
So, drug shortages are very complex. So it's not just one set of issues that lead to drug shortage. And they're actually not new. We had a high amount of drug shortages dating all the way back to 2011, where we hit our peak in terms of the number of drug shortages. And so Congress tasked us to work hard to mitigate shortages, and so we instituted many things to help mitigate shortages. We actually did a study, and in that study we looked at drugs that had gone into shortage, and the majority of those went into shortage because of production problems within facilities. So for us, we want to make sure that we have a consistency of quality in facilities, which will lead to a consistency in supply. Now, there's other aspects of drug shortages, like a discontinuation in production or a sudden surge in demand. Those are other areas that we have other ways of addressing. But really, for us, ensuring that we have consistency of quality within facilities is a pretty easy way to help ensure that there's fewer drug shortages.
All right. Now, that's a small part of a larger conversation, and you can catch that full conversation on India Market Open at 9:30 a.m. For now, we have to slip into a very quick break. We'll be back on the other side with all the stock-specific action that you need to pay attention to. Do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
There are different
Welcome back. You're watching All You Need to Know. Let's focus in on the stocks that you need to watch out for in trade. And first, look at those that have announced significant order wins. We've got Varsha joining in to give you some perspective on a few of those stock names. Morning, Varsha. What's on your list today?
Good morning, Alex. So let's start with Skipper Limited, wherein it has got an order of rupees 737 crore from Power Grid Corporation. Now this contract is for design, supply and construction of 765 kV transmission line project, and now after this year to date order intake exceeds almost 3,900 crores. Then we have Transformers and Rectifiers India, wherein they've got an order of 232 crore from Power Grid Corporation for auto transformers, and this contract need to be executed within 21 months. Then lastly we have Shakti Pumps, wherein they've got an order of 84 crore from Haryana Renewable Energy Department for 2,443 pumps, and this order need to be completed within 90 days.
There are also a few more stocks that have sent out operational updates, and one of them, of course, is HDFC Bank. What's the latest here?
Yeah, so HDFC Bank has got an RBI approval for sale of 90% stake in HDFC Credila, which is the education loan subsidiary of HDFC Bank. Also, they're going to sell this stake to BP, EA Equity and Chris Capital. Then in April 2023, if you see, Central Bank had asked HDFC to reduce stake to under 10% in next 2 years. Now HDFC will retain 9.99% stake in HDFC Credila. Also, if you see, HDFC Credila has extended loans to over 1.24 lakh customers since its inception, and current loan order book stands at 15,000 crore. Then we have Tips Industries, wherein our board is to consider proposal buyback of shares on Feb 28. Earlier in Jan, Tips had declared almost 300% dividend. Lastly, we have Sona BLW, wherein they've executed definitive agreement with Clean Max Enviro Energy, wherein they're going to set up a captive power generating facility having a solar capacity of 4 megawatt.
Got it. All right. Thanks, Varsha, for getting us those details. Now, often when you look at the volumes of a particular stock, you see quite a lot of detail that emerges from bulk and block deals. We are looking at a few of those trades, and in fact, Harsh has put a list together to tell you more. Harsh, what are you picking up this morning?
Well, yes, some very interesting data coming through, Alex, with regard to bulk and block deals. Let me first start off with AMI Organics, the most interesting of the lot. Sage One Investment Advisors have bought 2.5 lakh shares, which constitutes roughly 0.2%, 0.67%. They've picked it up at 1,075 rupees a share. This one, I think, is probably going to be the biggest of the lot, but let me quickly highlight some of the other big ones. One is Kolte Patil. Naresh Aniruddha Patil has sold around 15.5 lakh shares. Promoter holds around 16% currently, 2% of that being divested. Will continue to hold around 14%. 487 rupees is what they've sold at. Buyer being White Oak Capital Mutual Fund, bought around 0.5% thereabouts at the same price, 487.5. Then switching focus, Arvind Smart Spaces, Kausalya Real Serve LLP has sold around 7 lakh shares, which is roughly 1.5%. The entity holds around 6.3% shareholding in this Arvind Smart Spaces. ICICI Pru was the buyer, 1% plus is what they've bought out of the 1.5% sold. Last off, Electra Green Tech, Ujjwal Kumar Pagaria has sold around 5.5 lakh shares. He currently holds a 1.1% stake. He sold around 0.67% of that at 2,096 a share. All of those in focus.
Got it. Thanks so much, Harsh, for getting us those details. There's a brokerage report on Grasim that you should watch out for, and this is post the successful launch of its paint business. We've got Mahima joining us to give you some details of the bullish stance that has been given by Citi. Mahima, what can you tell us?
Right. Alex, so the Citi reiterates buy on Grasim Industry and maintains a target price of 2650. Now, they're backing this on multiple reasons. The first one being that they're confident about the ability for Grasim to become the #2 player, and this plan to be pan-India by FY25 will go through. They've also said that it's the first company to launch paints at this larger scale, and it also says that they've developed differentiated products versus competition, and they have a clear dealer to pull the plan in place. They've also said that they expect aggressive pricing and promotion likely to become EBITDA profitable by FY25. Capacity will be higher than the combined capacity of second, third and fourth largest players of paints in India, and they also plan to add 500 million lakh per annum in capacity in the next phase, and lower incremental capex cost going forward. So these are the reasons that Citi has given for its maintenance of bullish stance on Grasim Industries.
All right. Thanks so much for breaking that down for us, Mahima. Let's talk about the latest update on the economy. And we've got the household consumption expenditure survey that the government has released, and that reveals that the gap between urban and rural household consumption has narrowed quite significantly. Pallavi is joining in to give you some key takeaways of that survey. Pallavi, one way to look at it, of course, is that purchasing power is increasing and perhaps poverty is reducing. But what else can you tell us about the report?
Hi Alex, so the survey was released over the course of the weekend, and household spending has more than doubled from when the survey was last done over a decade ago. Now, average monthly per capita consumption expenditure in rural areas has come in at about 3,770 rupees, while for urban areas the figure is closer to 6,460 rupees. This is at current prices, and this is for the survey period of August 2022 to July 2023. Now, average per capita consumption per month for the bottom 5% in rural areas currently stands at about 1,370 rupees, while for urban areas the figure is at about 2,000 rupees. For the top 5%, the figure is at 10,500 rupees for rural areas and 20,800 rupees approximately for urban areas. So like you said, the gap between rural and urban spending has come down, and the gap between spending by the lowest rung, the top 5%, and the bottom 5% has fairly significantly increased. Some of the other interesting observations from the survey was that the share of food fell to 46.4% for rural households. This was at about 53% the last time the survey was conducted. For urban households, it was at 40% in 2023 versus about 43% in 2012. Now, some important takeaways, of course, is that the findings of the survey will be critical to rebasing the inflation index. But that's, of course, a while away. I think before concluding, what I'd like to point out is that the gap between urban and rural areas has declined, but the higher growth in person on a per capita expenditure for rural and urban is in contrast with the narrative that we've seen about rural areas suffering in recent years. So, frankly, the survey leaves us with as many questions as it answers.
Absolutely, and we'll delve into those in over the course of the day. Thanks so much, Pallavi, for getting us those details. All right, that brings us to the end of this particular edition of All You Need to Know, but a lot of stocks and stock-specific action that you need to know about before the start of trade. You'll find all of that and more on India Market Open, so do stay tuned. This is NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
Hello and welcome to India Market Open. It's early Monday morning. We're gearing for the week, last 4 days of the Feb series. Guys, it's been actually a pretty solid February, one of many highs, if I can say that.
Yeah, I thought that Indian markets were solid. Then I look at what the Nikkei has done.
Just look at what China has done. How about that?
No, yeah,
you feel great about us.
4% for the last 1 week, but Nikkei is in a league of its own, right?
No stopping the Nikkei.
Yeah.
You know, I was reading a piece that actually young investors have come into the market in Japan because of what's happening in the Nikkei. So pretty much perhaps what our moment has been
for the last 3 years.
3 or 4
But
years.
here's some numbers, guys, just before we get down to the brass tags. 2023, if you thought Nifty was great, 20.1% or thereabouts, Nikkei 28%. Fabulous. Then cut down to 2024, Nifty all of 2.5%, Nikkei is a whopping 18%.
Yeah.
The Japanese
And
markets
all
have
this,
gone through the roof.
and all this when they're in a technical recession. So this all comes in. So if you think markets are a reflection of real economy, you might want to take a step
Get another
back
thought.
and take a check of that. But yeah, Japan's on a roll. Wall Street's also not doing too badly. And India might, of course, reverse the seasonality. So Feb usually, or rather in the last 3 years, has actually been a weak month for equity markets. So far for Feb, we're up 850 points. So it could be, again, some sort of a record, guys. Not Japan, but nevertheless, we have enough to cheer about.
Absolutely. And the point that you're making about sometimes the real economy and markets don't have a dissonance, we're seeing that in the US as well. I mean, over the weekend, you had a number of statements from Fed officials, Christopher Wallen's one of them, saying that we need more data before we can decide on rate cuts. We might extend them by 2 months. You're not really seeing that dampening any spirits. So no huge gains in absolute terms, but the momentum definitely continues. Look at it this way, the S&P 500 again has hit a 5100 mark for the first time. It closed a little lower. The Dow closed at all-time highs as well in Friday trade, so the mood overall is positive. Of course, now there are two factors which the US markets are going to be tracking. One, you're going to have PCE data on Thursday. That's what the Fed tracks. That's personal consumption expenditure data. That will be important. And can NVIDIA really continue its rally? Can this entire AI boom continue? That's going to be two factors really that determine Wall Street. Quick word on the yields. The yields have come off a bit, actually, have been about 4.28 or so, considering, that there is a lot of uncertainty there. Crude has come off as well. Again, if their interest rates are going to be in later, that could be a dampener for crude. There's also a very important meeting going on in Paris to try and find a solution for the Middle East crisis and the Gaza conflict. Maybe that's another reason that you've seen Brent at about $81. And last word on Asia, mixed cues, important data going to come in from China. But yes, like Neeraj and Samina was saying, the story is completely the Nikkei. No stopping the Nikkei. Incredible kind of gains for an economy which has not shown any great sort of, upside. But definitely, I suppose, for investors hunting for opportunities, they have stumbled upon the Nikkei. Shanghai down about 0.5%, and so is the Hang Seng. So what direction will we go in is really the big question when it comes to Asian markets.
Nowhere.
Yeah.
Because
range bound.
Yeah, you're right. Taman, I was looking at the numbers. So let's just putting this into numbers. I mean, we tried to put that Nifty versus Nikkei thing into perspective, 2023, 2024. So 2024 Nifty, all of 2024, if Nikkei is 17.43%, Nifty is a measly 2.17%. I mean, we talk a lot about what's happening, right? The benchmark indices have gone nowhere. In fact, for the last 2 months, it's a 2.6% range that we've been moving into. So hardly any moves there on the benchmark indices per se. I mean, 2% is nothing, right? And we're starting to see PSU stocks starting to consolidate. So from the 7th or 8th of February, they've been completely flat, and this is after a 57% uptick since October 25th. October 25th, 26th was about the time from where the markets made a bit of a U-turn and PSU started moving up. 57% has been strong till about Feb 7th or 8th. Since then, it's been very, very flat. In fact, in the last 1 or 2 weeks, the action seems to have shifted to the Adani and the Ambani Group stocks versus the PSU stocks, because the last week was also all about the kind of moves that some of the Adani Group stocks made. And to an extent, Friday, Geo Financial Services did well today. Some of the media assets of the Ambani Group could be in focus. So the focus seems to have shifted here. So that's the other interesting piece. The third thing that, at least what the data seemed to suggest, was that there was significant short build-up in the IT companies ahead of expiry. Remember, the expiry is on the last day of the month, this month, which is 29th of Feb. And ahead of the expiry, IT majors, LTTS, LTI, there was, I think, if I'm not wrong, Wipro has seen some short build-up come in. So keen eye out for what the IT majors do in this week, particularly because of the build-up that we've seen. So that's the third pocket. And from a data perspective, but just from looking at what the indices did, real estate big bang move the whole of last week. Can they continue doing that? So Nifty Realty was up 1% in Friday, but the whole of last week was about 4.5%, the best performing index. The 1 month about 11% gains. So Nifty Realty comes in focus. And you know, guys, small cap chemical stocks, we were talking to Mihir Vora the other day about chemicals, etc. I was looking at some data. The 5-day move for some of the small cap, tiny tune chemical names. Look at that list. Make Money Organics, 19%. Yasho Industries, 23%. Vipul Organics, 8.5%. Deepak Fertilizers, 5%. Fairchem, 8%. So the tiny tune chemical stocks.
Archean Chemical also to that.
Archean Chemicals,
You
yeah. I
can't
mean,
get your
I'm sure
eyes
I've
on
missed
that
the
one too,
names.
yeah?
Yeah, so the larger ones are flattish, Samina and Tamanna, but the smaller ones are making a move, so could be an interesting pocket to monitor this week.
You know, very quickly, and I want to add to that Japan story, because I know the biggest concern or the biggest growl with India has been that we are an expensive market. You look at Japanese valuations, their price to book is at 1.37, and the record high for Japanese stocks was at 4.72 in 1989. So that just gives you a sense that despite such a strong up move in 2023 and in Jan 2024, there is further more upside that could be expected for Japanese equity markets simply on valuation plays. So easy money, technical recession, and of course valuations is what makes the case for Japan. Talking about India, Neeraj has already highlighted everything you need to watch out for, but very important 3 data points. You've got fiscal data, GDP data, and core sector data. So those are the 3 data points that the markets will be watching out for in expiry week. I think that'll be important. Momentum markets would like to continue with, but it may be a week of consolidation, but more than likely that the Nifty will see a pretty strong close for the Feb series. Bank Nifty remains a laggard. It's been 2 months that it's closed above levels of 46,000, and that's what you want to watch out for. Bank 47,000, pardon me. So you want to keep an eye on Bank Nifty. That's been an underperformer. The Nifty itself at up 850 points for the month of Feb. Primary markets are also going to be full of activity. You've got 6 new openings and 5 listings from that. Juniper Hotels will list on 28th Feb, and GPT Healthcare will also be listed on the exchanges on the 29th of Feb. So primary markets are active, secondary markets as well, enjoying some excitement. Lots of stocks, or rather not too many stocks to watch out for this morning, but the top of the list is going to be Reliance Industries, and this comes in with reports once again where Walt Disney and RIL have signed a binding pact to merge their media operations in India. Bloomberg reported this on Sunday, stating that the media unit of Reliance and its affiliates are expected to own at least 61% in the merged entity. Remember, the Wall Street Journal earlier this month had reported that Disney had agreed to sell 60% of its India business to Viacom. The deal size is a significant one, especially on the heels of Sony and Zee deal collapsing last month. Disney has agreed to sell 60% of Viacom at a valuation of 33,000 crores. Viacom is, remember, owned by RIL, and last month it was reported that Disney and Viacom were both gearing up to fight the advertising rights in the upcoming IPL 2024. So, and also just to put this out there, RIL market cap crossed 20.72 lakh crores, Geo Financial crossed 2 lakh crores. So the whole group has been buzzing with activity in the last few days.
You know, Geo Financial, I think, is one of the most memed stocks over the weekend, because people are wondering, what is the business?
Yeah.
What is the business so far?
Treasury income.
Yeah. I mean, what is really explaining the valuations and rally? A couple of weeks ago, it was the whole Paytm play before they came out and denied that, no, you know, Baba, we're not buying Paytm. But yeah, Geo Financial's definitely the big story, and we'll have to wait and see. But yeah, you're very right. RIL's going to be back in focus.
No, but also brings TV18, Network 18 in focus. Viacom 18, if Viacom 18 is the vehicle, which is very likely to be the case, and if the valuations have come in at $3.9 billion for 61% stake, it's much lower than the earlier envisaged $10 billion for the entire thing. Yeah, so if this is the number, I mean, we don't have a confirmation from the group as yet, but if this is the number at which it is done, certainly brings TV18 and Network 18. Now it's going to be a merged entity, TV18 getting merged into Network 18, so you could very well just argue that it's Network 18, which is the key driving vehicle. But if that is indeed the case, then could be, I mean, if we see a positive reaction into Network 18, TV18 today, well, could be on account of the valuations at which this deal supposedly is being struck.
So I think media as a sector could be in focus. I believe Zee has set up a board as well to investigate and, of course, school of everything negative for the sector.
Know. So, you know, yeah, they put out a press release over the weekend and they said that now we have a board which will look at all of the quote-unquote malicious rumors about us. But I'm not sure what that board is going to do in terms of bringing confidence or negating those rumors, because if there are reports about investigations by the Ministry of Corporate Affairs or by SEBI, then those only will go away once you have clarity from the ministry itself. So I don't know what this board of Zee is going to come and say apart from what the press release is saying. So I'm not sure.
Probably, I think it's just commentary, right? That stock has been reacting. I mean, it's still in an F&O ban, and despite that, we've seen very sharp reactions coming in on Zee pretty much every other day. So if it's up 5% on a given day, it ensures it collapses 5 to 10% the following day. But media is a sector to watch out for. There's enough and more news that will be keeping the sector quite active. Another sector that's on top recall and has been is railway stocks. The daybook indicates the Prime Minister, through video conference, will be announcing railway infra projects to the tune of 41,000 crores. Now, this could be big. Some of these counters have posted disappointing earnings, remember, and hence have been on the sell side for most part of Jan and for some part of Feb as well. This morning, though, you could see some sort of an upside on anticipation of order wins for the railway sector. Another quick one I want to mention is Kotak. This is not going to be big in terms of stock movement, but important because it's a large bank we are talking about here. Zurich Insurance is now going to buy 70% stake in Kotak Mahindra General Insurance. Why this is important and what it means, this will be done in a single tranche through the primary and secondary acquisition. Initially, remember, Zurich Bank was expected to acquire 51% and 19% within 3 years. The business is small. It only controls 0.5% of the premium market share, 0.3% of net worth, and it incurred a loss of 120 crores in FY23. This is Kotak Mahindra General Insurance I'm talking about. The SOTP, which is the valuation by sum of parts, is expected to only see a 1% upside. This is, of course, Jeffrey's note that has shared an update on what this Zurich buy of Kotak Mahindra General Insurance means for Kotak Mahindra Bank. So definitely worth a mention because it's an important notification coming from the bank. And given the size of this bank, we have to address it. May not be very large in terms of stock movement this morning.
Yeah, absolutely. There are, though, a lot of pockets of news, and one company that I want to bring on the radar is Dixon. We're going to be speaking with Atul Lal also just in a bit from now, but only because of interesting things happening in the space and with that company as well. So the latest news is that they're launching a manufacturing unit in Uttarakhand to make washing machines now, and their company unit Paget is in pact with Compal for manufacturing of mobile phones. Let's just pull up the one-year chart of Dixon Tech, and we'll hope to get more details today on what mobile phones exactly are being made. You know, a lot of focus on this company and this stock as well in terms of the new version of PLI schemes that we will be seeing, and a lot of this will come in the July budget post-elections. So we'll hope to get clarity. Look at that stock in the last 1 year, 145% on Dixon Tech. Well placed for India's push to make our own semiconductors, etc. Zydus Life is the other one. So it's received a WHO pre-qualification approval for an API formulation of something called miltefosine. Now, this is used to treat a parasitic disease called leishmaniasis. Now, it's not a huge market share. It's not a very prevalent disease, but this particular API is life-saving. There could be some positive play on Zydus Life today as well. And Sona Comstar is the other one I'll talk about. Up and down swings through the whole of the last week. But a fresh bit of news. They're going to be setting up a captive power plant, a power generating facility in Maharashtra. So clearly for their own use. An SPV is being created for this with CleanMax Enviro Energy, and they will have a solar capacity of 4 MWP. Now that stock again, 6% only in the last close. Of course, in the whole week, there has been quite a bit of fluctuation, but again, a stock really to watch out for, because as you go into that EV play, excellently positioned. This is something you were covering last week as well, Neeraj.
80% of the order book, electric vehicle focused.
Yeah.
So quite firmly already in the future, if you will, is Sona Comstar. So could be an interesting one to monitor yet again after a strong move that they've had. I dare say, before I get to specific stocks, and there are 2 or 3 that I have, but I was mentioning about how the focus seems to have shifted from PSU stocks to Adani and Ambani and Geo Financial, etc. Now, Adani Enterprises could well be in focus today because Lucknow Airport is now operational. There's so much of fanfare around the airport holdings business and the demergers, etc.
Those visuals over the weekend were fabulous.
Yeah, Anand Mahindra tweeted this out, and it became the talk of town, but could be a very interesting one to monitor because Lucknow Airport could be a large one as well, with Uttar Pradesh going through the metamorphosis that it is going through, and therefore do watch out for Adani Enterprises in the session today. As amongst the stocks to watch, something tells me that there could be an interesting move there as well, so keep an eye out. Standard disclaimer, of course, the Adani Group owns NDTV, and you're watching NDTV Profit. So whenever we talk about an Adani Group stock, just wanted to lay out that disclaimer, but keep an eye out on that group. Amongst the newsmakers, Suven Pharma could be in focus. It's said that the US FDA has completed the inspection at the Hyderabad API and formulation units. No Form 483 has been issued, so could be construed a small positive for Suven. I don't quite know the contribution of the Hyderabad units for Suven's overall top line, but no Form 483 typically be construed good news, so watch out for that one. Monal is going to join on Editor's Cut. Maybe we'll ask Monal about that as well. She tracks Pharma very closely. The other one is Grasim and Asian Paints. Considering that paints were the talk of town last week, now Citi's come out with a note on Grasim with a buy and a target price of 2650. They went to the units and they said that they're confident of the ability to achieve the desired vision of becoming a number 2 player. More importantly, they're talking about pricing being a key strategy as well. And I think Sajid, when he went to the Panipat plant, spoke about how Grasim has said that they haven't given out the pricing as yet, but they would want to give 20% more area for the same can of pricing or something like that, which means effectively that pricing will be very, very strong a strategy for Grasim. And while that may not be a big trigger for Grasim upside, but it may certainly be an issue for the existing paint companies like Asian Paints, Berger, etc. And CLSA has come out and cut Asian Paints to a sell with a price target of 2425 rupees. And I was also looking at a note from Macquarie, guys, which said that they are constructive on Asian Paints. Their target is 4,000, by the way. So
it's the only one with the constructive call on Asian Paints.
Yes. But the interesting piece that they said that if Grasim moves to number 2, the thesis is that the ones to suffer will be Berger, Kansai Nerolac, and some of the others.
Of course, have to consolidate.
That's where the market share will get cannibalized.
Yeah,
first.
but do Asian Paints premium multiples come off? Because it's been the perennial buy at any price, BAP stock, right? And is that already coming under pressure? So that's one. The last one on my list, Ami Organics, Sage One Investment Advisors, Samit Vartak buying into a chemical stock makes people take notice. So keep an eye out for Ami Organics as well.
I'm going to add 2 small companies, but these are the ones that usually see the big moves. 2 to 3,000 crore market cap, so not large in nature, is Rain Industries. They posted numbers. Huge disappointment, actually. Very weak set of numbers. They posted a consolidated net loss of 107 crores versus a profit of 12.6 crores that was seen in the same quarter last year. Numbers were impacted by lower top line, impairment loss, and higher finance costs. Consolidated revenue as well from operations has declined 25% YOY to 410 crores. That is one, and the other one is for Seco. This one has actually had a good quarter. Small company, like I said, 2,500 odd crores of market cap, but they've registered a 33% growth in net profit, posted a profit of 16.3 crores. And this was on back of better other income and better top line. Revenue from operations also grew 15.7%. So these 2 small companies will see a gap up in early trade, I'd expect, this morning.
Just a few more. Zaggle Prepaid is one of them, and Samina, you spoke with them last week as well. Again, a lot of news flow here. So they've signed a customer service agreement now with MCure Pharma for benefits and expense management. The list of very decent clientele is increasing, so Zaggle might see some positive moves on the back of that. Skipper is another one that has been in the news. It has an order of 737 crores from Power Grid. They will design, supply, construct a 765 kV transmission line project. And Max Healthcare, now they had during their quarterly conversation also talked about how they want to expand fairly aggressively. So the board has given an in-principle approval for the acquisition of a land parcel in UP. This will potentially develop a 500-bed hospital with a built-up area of 8 lakh square feet. So this is in line with their stated capacity addition plans, but definitely Max Healthcare is another one that could be on your radar today.
Yep, so a long list of stocks. Hopefully this helped you cull out the most important ones. We'll try and delve in deeper detail on 2 topics in particular on Editor's Cut this morning as usual. Alex, what do we have in store?
Morning, Neeraj, and morning to everybody else joining in as well. We're looking at the oil marketing companies and the stocks of which have dropped quite precipitously over the last week. But if you zoom out, the picture changes quite dramatically. And you will notice that they're not off their highs by a very large margin, at least 2 of them. And the second topic, if I may draw a parallel, back when we were in school, we used to wait for a report card. And there were a few of those notations that your teacher or your principal made that you would dread quite significantly, right? So for the Indian pharmaceutical industry, I guess the equivalent would be the US FDA and any observations that they would have through 483. What we're trying to give our viewers is a bit of an understanding of what the latest observations are and whether or not the Indian pharmaceutical industry is scoring well on the parameters that it needs to. But let's start with the OM. Okay, well, let's start
Can we start with her?
Of course we can.
This is so interesting that we may just drop off my thing, really. It doesn't matter.
So let's start with the report card for the Indian pharmaceutical companies. Of course, all of this comes because you spoke to the country head, Monal, of the US FDA over the weekend. There are more inspections, but what is the key detail as to why those inspections are taking place?
Yeah, it was a very interesting conversation that I had with Sarah Macmillan, who's the country head. And she did say that there's quite a ramp up in the number of inspections post-COVID. Of course, there's a little bit to do with the fact that they've not earlier inspected during COVID. But it's also that now a lot of companies increasingly want to export to the US. So it could also signal that. So an increase in the number of facilities. My conversation with her brought about, so just talking about what are the issues that they are now persistently seeing. So it's data integrity. And now, of course, I've been looking at a lot of 483s of late. And if you realize, there's always been one issue there. You have complaints that are raised by the customers, but all those complaints are not really seen through the end. As in, there's just it just so happens that the complaint is raised and then it's left open. So not enough investigation is done into it, and that is a problem that's consistently brought up.
So, one second, I'm so sorry, I'm going to have to make this even simpler, right? When you say 483s, you're talking about a particular form that has been sent out by the US FDA to these pharmaceutical companies, in which they list out certain observations based on inspections that they're doing. One of those observations is data integrity. But what does that entail?
So it typically deals with quality. So now it could mean that there's a quality issue in terms of the manufacturing process that's put in place. And the conversation with her also indicated that a lot of Indian facilities are sort of old. And there's a regular upkeep which may not be happening. So that was something that she was alluding to. And it's an interesting fact because my conversation with a lot of other analysts, pharma analysts out there also indicates that maybe a lot of facilities are old and the cost of upkeep is quite high. Versus we're always seeing a margin pressure in terms of price erosion in the US, right? That's a common question. So that's some trade-off that you have to manage.
The other aspect was whether or not, as a percentage of the inspections that are being done, whether observations are significant. And I think the answer to that question is positive.
It's positive. It's surprisingly positive. The number of observations you're saying have gone down. Like the observations are there, but the official action indicated, which means that now the company would have to follow the US FDA's directions to resolve the issues that are happening at the facility, have actually lowered. So that is definitely a positive. Most of these inspections are clearing and are ending at a VAI, which is voluntary action. So the companies decide on how to remediate, so they're not that serious.
Is that
so
because Indian pharmaceutical companies and the administration here has been pushing for an improvement in quality?
Absolutely. So in December, we had a revised Schedule M. So Schedule M deals with quality and the upkeep of facilities and the kind of, the standards that you are supposed to maintain in terms of manufacturing. So that has been revised and it has been brought up at par to the European import standards. So that's a positive. Now, if this were to actually come into place, which will take some time to play out, but in general, we should see that an overall improvement that is going to tackle with the spurious drugs issues that we've been suffering since the past 1 year. So it should tackle that. And overall, yes, there's going to be an improvement in quality. Let's hope for that.
But yeah, I just want to lay it out for the benefit of our viewers that Monal, this is on back of an exclusive conversation that you had with the head of US FDA in India, right?
Yes.
Yeah. So this is not some analyst or anything else, which is also very important. By the way, not decrying anybody, but the US FDA's views top the list of the most important voices.
I got a chance to listen to a slice of that conversation, Neeraj, and what I thought was very interesting is from the perspective of somebody that studies the sector, she was asking the country head of the US FDA, what's the best way to read your 483s? So she was saying...
What was the answer?
Yeah, so they list the most... The difficult issues at the top, and that's how in the order of importance, and the most prominent ones are at the top. So that's how we have to look at it. Every time, watch out for the order in which we put out the observation list, and you will know how detrimental it is.
Okay, so I must point out that the conversation that we've been speaking about right now is going to play out in just a bit. In fact, on India Market Open as well. So do stay tuned for that. Neeraj, let's shift very quickly to the OMC conversation. Because as I was pointing out, some of these stocks have seen quite a bit of a drubbing over the last week. But in a larger context, it's not a big drop.
It's not a big drop. By the way, it's topical because Morgan Stanley's come out with a note today and they are bullish on OMCs amidst all the flurry of negatives. And Citi last week mentioned this as well. But I'll make this very quick. So look at the data firstly. 1 year returns, BP, HP, IOC, 92, 146, 128%. That's the 1 year return, right? So there is a significant upside that has already happened. From the highs, BP is down about 6%, HPCL down about 8.3%, IOC is down 17%. So 17% for a stock which is actually in a good run is good. Now, there are a few notes that have come out which are negative. So say I chose CLSA, you can choose any of those, but I've chosen CLSA. Why is it that they are negative on OMCs? None of the concerns that CLSA mentions are about business. All the concerns are about valuations, relative to global peers and otherwise. So CLSA says stocks are pricing in much higher than historical marketing margins, stocks are pricing in continuation of near record refining margins, and stocks are trading at notable premium to the global peer average EV/EBITDA multiple. No concerns on business, by the way. No concerns on whether something else is coming to the fore individual company wise. So that's the first thing. It's a valuation concern, not a business concern. Part one. Is there reason to be optimistic? And there are a clutch of people who are optimistic as well, including Morgan Stanley today. So very quickly there, FY25 earnings outlook is still very strong for all of the OMCs, by the way, pending any crude price upticks. Now that's an imponderable, you can't really dwell too much on it. So that's first. The government, remember, has deferred the capital infusion plans and has brought it down from 30,000 to 15,000 crores. So lower equity dilution and deferment of that equity dilution, which is also to some people a positive. Third, the companies individually are doing great. We highlighted this in an earlier editor's cut. BPCL's net debt, as per the management, is 6,000 crores. Net debt 6,000 crores is the lowest in its recent history. So therefore, that's a net positive too. And then when you look at multiples, Jefferies, for example, has come out with a note on multiples. They say that the peak cycle multiples for OMCs, as they've seen in the past, leave room for further upsides from where they are right now. So that is part one. They see over 36% upside for BPCL, by the way, if we go back to the Goldilocks scenario. So that's part 2 as well. And that could be multiple things, you know. And they enjoyed peak cycle multiples in calendar year 14 to 17. So that's to be kept in mind. So keep an eye out for that, that if indeed the sector, if the government doesn't intervene too much on the pricing, if crude doesn't go haywire, then we might see peak cycle multiples as well. And therefore, a buy on dip strategy, as Citi was recommending, is not ruled out. The only other risk that I see, which is maybe non-business or otherwise, but nothing company specific, any cut in the retail prices of diesel or petrol, which the government...
It's an election year.
But the government has shied out thus far, right?
Correct.
So that's a positive. A crude price rally of 7 to 10%. They may raise worry on marketing margins as well. And any fuel taxes post-election to meet the deficit glide path that the FMS laid out for that, and large global refining capacity additions. But aside of that, there's no business risk that people are pointing out. People are only pointing out to valuation risk.
Absolutely. All right. So there you go. And also on the crude part of it, we've seen over the last year and a half, it's been more or less range bound within a certain band, because at the higher levels, you see more supply coming through. But fascinating conversation as always, both of you. Of course, if you'd like to weigh in and you'd like to tell us what you thought of this conversation, then write to us on any one of our social media platforms. And do stay tuned. We've got lots lined up before the start of market. And we have to slip into a very quick break before that. So we'll be back on the other side. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity. Co-powered by
Bandhan Bank, aapka bhala, sabki bhalai.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching India Market Open. It's 8:30 and it's time to take stock of the F&O setup this morning. We are, remember, in the last 4 days of the Feb F&O series, and it's been one of full records. The index, we expect, would maintain this momentum as we go into the last couple of days of trade for the Feb series. Friday's session, remember, was a range-bound one, with the Nifty trading in a 100-point range, and more importantly, it did try to scale to higher levels, scale to 22,300, but finally reversed that from an intraday high of 22,297. For the Feb series, remember, the index itself has gained about 850 points so far, contrary to what we saw in Jan, where the Nifty had actually shed 450 points. In terms of the F&O picture, the Nifty 50 has seen some activity. In fact, the futures have shed 1%. Current rollovers on the Nifty 50 stand at 28.2%, and they're currently trading at a premium of 16.15 points versus 25.8 points that we had seen previously. Well, on the weekly option data, 22,500 has seen the maximum call open interest, followed by 22,300 and 22,800. Call writing was seen at levels of 23,100, followed by 22,300 and 22,500. And call unwinding was seen at 22,100, followed by 22,000 and 21,900. On the put side, maximum open interest was seen at 22,000. As you can see over here, that was followed by 21,500, and you also saw movement on the put open interest at 22,200. Put writing was seen at 21,200, followed by 22,300, and unwinding was seen at 21,900, followed by 21,100. So what we're expecting is that the range is going to be fairly tight. Call strikes was seen at 22,300 and 22,500, which saw maximum open interest, while the 22,100 strike saw maximum shedding. Well, on the Bank Nifty as well, the picture was pretty interesting. Bank Nifty trades at a premium of 30.9 points. Open interest declined about 3.84%. Remember, Bank Nifty has been underperforming the Nifty over the last 2 months and has been unable to close above levels of 47,000. So it'll be interesting to see how Bank Nifty plays out, currently trading at a premium to the spot. Well, we have with us Amit Goel of Amit Ventures now, joining in with his top trades this morning. Amit, first, before I go into your call on HUL, I believe you've got a bullish strategy on HUL. A quick word on Nifty and its expiry. This is going to be a good Feb expiry for the markets, reversing the seasonality, where over the last 3 years, we've actually seen a negative close of the Feb F&O series.
Yeah, good morning, Samina, and thanks for having me on the show. Good morning to all the viewers. Yeah, this February is one for the books. We have reversed the seasonality of the long-term averages, and we are looking at a smart close on the upside. If I were to talk about the current week, I do not see it as a very data-heavy series week, and I expect the market to be fairly range-bound without any major global cues also coming in. Apart from the I guess there is this one important news bit, economic calendar, which is going to come out today. I think it is the retail home sales, I think. Apart from that, I don't think there is any major news before the conclusion of this expiry. So I am expecting markets to be, at least the broad indices, the action to be a little subdued, and the real action would be at the stocks. So from Nifty and the Bank Nifty perspective, again, I'm looking at a range-bound setups for both Nifty and Bank Nifty, wherein I would like to set up a short strangle sort of a trade, short strangle or an iron condor, at about 21,850 on the downside and 22,550 on the upside for this week's expiry. That's on Nifty.
Amit, that's a good point. Let's talk about HUL. I believe you've got a constructive strategy on that. Fresh longs and a bull call spread as well. So you are anticipating some upside, limited upside on HUL. So if you can share both the strategies with us for HUL.
Yeah, so HUL, it has been under pressure for some time in this month. But what I see is I see some bit of recovery on the technical charts. And there is a small sort of a breakout on the smaller time frame, because of which I'm expecting HUL to give a sort of a breakout on the upside. And since we are very close, we are in the current, this is the expiry for February. I would want to give some time for this strategy to play out, and hence I'm not looking to do anything in this expiry, but look to set up a bull call spread wherein time value decay can hurt. Hence I'm looking to go into the March expiry, wherein I will buy the 2400 call and sell the 2500 call, converting this into setting up a bull call spread, where the max profit, theoretically speaking, would be about 19,000, and the max loss, which is a defined risk trade, the max loss is going to be about 11,000. But we are not looking at incurring the entire max loss. We will exit the strategy if our view on the breakout gets failed. And I've given entry, stop loss, and target levels. Entry is about we will look to enter between 2,400 and 2,380. Stop loss at 2,350, 2,365. So at stop loss, the max risk that I'm taking is about 4,000 rupees on this trade. And if we were to achieve our target of 2,500 levels, the reward is about 8,000. So we have a healthy 2:1 RR on this trade.
Well, thank you, Amit. That was helpful. That's the word coming in on the Nifty. Like we said, it's full of records, and Amit having a constructive trade on HUL, a naked long call and a bull call strategy where he expects the stock, HUL, to see limited upside from these levels. With that, it's over to you, Tamanna and Neeraj in the studio.
All right, thank you for that, Samina. Now, before we get into more stock-specific news, I just wanted to highlight an important data set which was put out over the weekend on household consumption. Now, this data spans the last decade, and it's an important set of statistics, even from a markets and economy point of view. Neeraj, the reason I wanted to pick it up is because consistently the question and the worry has been on rural economy, consumption, and ability to really fire up, and how much are you going to focus just on your discretionary urban consumption. So a few interesting things over here. Obviously, if you take it over a span of 10 years, your average consumption is going to increase. So rural has doubled, so has urban, but the gap is narrowing. The gap, at least at the lowest level, is narrowing. Even in rural India, less out of your entire pie is being spent on food, and that is a sign of improvement. When you spend a lesser amount of your monthly income on food, less is being spent on cereals, more on protein sources, eggs, meat, etc. So that also shows better nutrition. So overall, the one reason of that could be because if government is providing cereals for free, then you need to spend less on it.
On them.
But overall, it's a positive sign for directionally where rural consumption is going. And isn't that something that consistently has been coming up as a theme?
Yeah, and in some sense, Tamanna, it's great, right? It's the upper end of the K curve on the food spend, if you will, if we can classify it that way, right? Because otherwise, if you are running paycheck to paycheck and spending only on the day-to-day items, then there's nothing left to do other kind of income, so other kind of spend. So that is one interesting piece, yes. And does this point towards some bit of an upliftment in the rural discretionary spend? That's the question.
Yeah, that remains to be seen. I'm just going through the Bernstein note on it as well. So while they say that premiumization and shift to discretionary items is evident, it's really the dependence on the free food program which is the question. You are going to be able to spend on other things if your basics are taken care of. And the free food program will end at some point. It's already been extended several times. So post 2024, that will be a big factor? Are you still going to continue to provide free cereals to these many kind of people? Because once that goes out of the picture, then these numbers will be skewed.
Yeah, and just the other interesting piece could be what we've seen, say for example, various economists, including somebody that I really like, was Pranjal Bhandari's views, wherein she had mentioned that there is a change seen in the balance sheet of the rural household because of the non-agri dependence now, predominantly on infrastructure. And if indeed that spend continues, capex drives continues, then the kind of income that the rural household gets could be meaningfully higher as well.
Absolutely. So positive in that sense. The only, I would say, ointment in the fly would be that the gap between the upper end of rural and lower end of rural is expanding. So that K-shaped sort of pattern can be seen there as well. Also, why this data is important, I just want to add one line on it. This is going to determine what your next CPI basket is going to look like, which is up for review by 2025. So on the basis of this, you could see lesser weightage being given to food, which is the most volatile factor. Your vegetable prices every month is the most volatile factor. So that is why this data is important from the larger perspective. But meanwhile, let's get to more stocks that you should keep on your focus today. And Varsha is joining us for more. Varsha, what's on your list this morning?
Good morning, Tamanna. So let's start with Transformers and Rectifiers India, wherein they've got an order of 232 crore from Power Grid Corporation for auto transformers, and the contract needs to be executed within 21 months. Then we have Shakti Pumps, wherein they've got a contract of 84 crore from Haryana Renewable Energy Department for 2,443 pumps, which needs to be completed within 90 days. Then we have HDFC Bank, wherein it gets RBI approval for sale of 90% stake in HDFC Credila, the education loan subsidiary of HDFC Bank. In April 2023, Central Bank had asked HDFC to reduce stake to under 10% in next 2 years. Now bank will retain almost 9.99% stake in HDFC Credila. So if you see, HDFC Credila has extended loans to over 1.24 lakh customers since its inception, and the current loan book is at over 15,000 crore. Then we have Tips Industries, wherein board is to consider proposal for buyback of shares on Feb 28. In Jan, company had declared 300% dividend to its shareholders. And lastly, we have Piramal Pharma, where US FDA has issued Form 483 with 2 observations. It concludes its pre-approval inspection of company's US-based facility. So this was around from Feb 20 to Feb 23. Yeah.
Okay, well, we'll watch out for some of these stocks as well. And mind you, today too, it could well be a day wherein both pharma and chemicals as a pack stay in focus because of news flow. More so pharma in terms of news flow. Remember, at 9:30, you will hear an exclusive conversation that the head of the US FDA in India had with our colleague Monal. So that is something that you can't afford to miss, because it gives a great insight into how the FDA, which is the key determining factor of what some of the exporting firms' fortunes could be, how the FDA is thinking about Indian companies and what is it that they have seen, observed over the last 12 to 24 months. So I think that's a key conversation to watch out for, and that is coming up at 9:30 on our channel. So keep an eye out for that. The other aspect amongst everything else is, how the PSU rally seems to have stalled a little bit, and how the focus seems to have shifted to some of the large private groups as well. We've been talking at length about what some of the Adani and the Ambani group companies have in terms of news flow for them, and therefore what happens to those stocks. So I think that is also to be kept in mind. Sudeep Shah of SBI Cap Securities joins us right now on the show. Sudeep, before we get to specific stocks, good morning to you. Let's start with the benchmark indices. A bit of a you could argue that there was some optimism, but largely been quiet over the last couple of months. Is it better to focus on stock-specific strategies as opposed to the index? Do you have a strategy on the index?
Absolutely. Good morning, Neeraj. See, what we feel is that last several weeks now we are seeing markets in a tight range. Although they have in the last week they have broken out and we have hit a new all-time high, 22,297. But still, we could argue that largely the indices have been in a tight range, and it is the stock-specific activity which has picked up. Now you see infrastructure, infra stocks, you see real estate stocks. A lot of these indices, one by one, we are witnessing sector rotation here. So I feel largely it will pay to be in the stock-specific side of the market rather than just focusing on the index and trying to capture trading ideas on the indices. So while the overall mood remains upbeat, we feel that from an overall perspective, 22,000, 22,050 zone will act as a strong support. On the upside, we could even see levels up to 22,450, 22,500 also in the coming few sessions, because indices have witnessed a breakout of the symmetrical triangle pattern that it had created in the last few sessions. So there the breakout is already there. The indices are sustaining above that breakout zone of 22,050. So the momentum is positive, but I feel it will still be the better opportunities would be there in the stock specific side of the market.
Sudeep, Bank Nifty, it's been 2 months that it's not managed to close above levels of 47,000 and continues to underperform the benchmark even now. Do you think in this series there is any hope or chance of Bank Nifty outperforming and closing above 47,000? I want to understand whether it's worth going long at these levels for the next few days.
Good morning. See, what I feel is that overall Bank Nifty, it is facing resistance around 47,500, 47,800 mark now. There was a pending gap which was created while there was a gap down opening on 17th of January. So that gap is yet unfilled. Every time Bank Nifty is approaching that zone, there is some kind of resistance at higher levels. But we also need to acknowledge one fact that the way PSU Bank Index has moved strongly, the way ICICI Bank has rebounded, and even HDFC Bank from lower levels has seen a good rebound. But it's again, the whole metal of the Bank Nifty would lie on HDFC Bank. So I feel HDFC Bank here would be the key. Any move in HDFC Bank above 1445, 1450, and if this stock sustains above this zone, then that would mean Bank Nifty directly moving up to 47,700, 48,000 on the upside. So while the other components are steadily getting bullish, whether you say ICICI Bank as well as partially Axis Bank also, but the key would remain on HDFC Bank from current levels to take Bank Nifty beyond 47,500 or 48,000 levels. Having said that, the support on the downside now lies strongly around 46,500, 46,400. That is where the 10 as well as the 20-day exponential moving averages are placed. And I feel the way it is sustaining above this zone, the supports will be held. But how and when and with what speed the Bank Nifty moves higher, everything depends on HDFC Bank from here on.
Oh, it all depends on HDFC Bank. Sudeep, before we continue talking about specific stocks that we've identified, you want to take us through your top trades that you're recommending this morning?
Yeah. See, the first stock that I like is from the real estate space. Now, we've seen a good breakout on the real estate index. And the top pick from there would be Godrej Properties. Now, the daily as well as weekly charts, the stock has given a strong breakout. The stock is now even sustaining above its previous swing high, which was 2450 on 30th Jan. And in the last few days, we have seen a strong build-up on the long side in terms of open interest also. So from the current levels, I feel 2410 could act as a strong stop loss. And on the upside, we could see levels of 2560 as well as 2600, which could be achieved in the next few sessions. Another stock which I like is Shriram Finance. Now, this stock also has given a good breakout, say on Friday, and the break in the last few sessions, the stock has got good support also around 2300, 2350 zone. So the way the momentum has been shaping up in this stock, the daily as well as weekly structures are quite bullish, and we feel that from the current levels, Shriram Finance could be bought with a 2400 stop loss on the downside and 2550, 2575 target on the upside.
All right, stay on with us, Sudeep, but let's take a look at some of the block deals that took place in the last couple of sessions. Anushi is joining us with more.
Tamanna. So I present to you 4 stocks that were in focus ahead of their bulk deals which happened. Starting off with Ami Organics. So over here, Sage One investors bought about 2.5 lakh of shares, which represents about 0.63% or 0.67% of equity at a price of about 1,075 per piece. Next is Electra Green Tech. Over here, Ujjwal Kumar Pagaria sold about 5.5 lakh of shares, which represented about 1.1% of stake. So he had a current holding of about 1.1% stake, from which he has sold about 0.67% of the stake at a price of rupees 2,096. Next is Kolte Patil Developers, in which Naresh Anirudh Patil sold about 15.2 lakh shares, wherein he was already a promoter in this, holding about 16% stake. So from this, he has sold about 1.99% stake at a price of 487 per piece, whereas White Oak Capital Mutual Fund has emerged as a buyer, picking up about 0.53% of the stake. And lastly on the list is Arvind Smart Spaces. Kaushalya Serve LLP sold about 7 lakh shares, which represents about 1.54% of equity. Their current holding, if you look at, that's about 6.3% of equity as of December 23. So over here also ICICI Prudential Equity Opportunity Fund has emerged as a buyer, picking about 1.02% of stake. So these are the 4 stocks in focus ahead of their bulk deals which happened.
All right, Anushi, they're talking about some of those bulk deals that may have an impact. Sudeep, but let me come to you on the railway pack. That's another space that is going to be in focus. Prime Minister is expected to announce projects worth 41,000 crore rupees. Now, we'll wait and see the details of that and what will get impacted, but sentimentally, you might have an upswing. I'm trying to understand if there's anything on your radar where you see more potential right now in a space which has already seen quite a run-up.
Absolutely. See, within the railway space, if we see stocks like Ircon, RVNL, now IRFC, these stocks have run up too much. And in the last few weeks, we are not seeing any specific signs of consolidation or even an attempt of a breakout in these names. But there are a couple of stocks within the railway space which are attempting to break out, or they have performed relatively well. Now, while there has been profit booking also, which was visible in a lot of these names which I've just mentioned, but RITES as well as RailTel, now both these stocks, if you see, they are in touching distance of their previous highs, and while the other stocks have been witnessing selling pressure in the last week, this stock, both these stocks, RITES as well as RailTel, they are registering higher highs on a weekly basis also. So I feel both these names should be on radar. They are just relatively better than all the other names that I've just mentioned.
All right, thank you for that, Sudeep. Stay tuned, and Sudeep, please stay on. We'll take a very short break. But on the other side, we're speaking with Dixon Technologies, Atul Lal. So 2 announcements that have been made in the last couple of days. We'll get more details on that and future plans. A lot to chat about after this very short break.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
We're speaking now with Atul Lal, Vice Chairman and MD of Dixon Technologies, a stock that has been in focus. In fact, the entire EMS space has been in great focus in the last year on the back of a push for Make in India for the world, PLI schemes, etc. A couple of news points that have come up over the weekend. One is the company's unit, Paget Electronics, in an agreement with Compal Smart Devices for manufacturing of mobile phones. The other one is a new facility to make washing machines. We'll find out more about those and, of course, future plans with Mr. Atul Lal. Very good morning and thank you for speaking with us here at NDTV Profit, Mr. Lal. Let's begin with the tie-up with Compal. What more can you tell us about it and where does it sit in your larger picture?
So mobile phones is the largest trigger for our growth. And customer acquisition is an extremely important endeavor at Dixon. So Compal is a large tie-up. We'll be manufacturing the high-end 5G devices for a large global brand, initially to start with for the domestic market and then finally for exports. These are the specialized lines because these are real high-end phones. We expect to start production sometime by August, September in 24-25.
And can you share anything with us in terms of what the brand is, what will be the contribution to your revenue mix from this high-end phone? Because what we've seen so far is the low-end part of it has been of a higher component, isn't it, Mr. Lal?
I humbly request you to give us some more time. Please appreciate there are confidentiality clauses. Presently, I'm not in a position to share the details of the brand. However, for the information of the stakeholders, these are really high-end phones, yeah.
So in terms of contribution to revenue, etc., or to your top line, is there anything that you can share or give us a sense whether now the focus will increase on high-end phones?
So I'm not in a position to share the revenue numbers also.
Okay.
There are confidentiality clauses in this agreement. Our product mix is going to be a mix of both high and medium-end phones. It's going to be 4G, it's going to be 5G, it's going to be high-end 5G.
Okay, fair enough. Let's talk about the other announcement that has been made about a new unit for washing machines. Give us more sense on that, Mr. Lal. How big is this and how significant is this in your bigger picture?
So we have set up a new facility in Uttarakhand. The factory was inaugurated by Honorable Chief Minister just last week. In this, we have made an investment of 100 crores. We have a capacity of 2.4 million machines. It's going to be one of the largest capacities in India. The production has already started. The order book is extremely good. We are confident that almost 90% of this production is already being serviced. The order book is already there with us.
In your Q3 mix, your home appliances revenues had come down. Is there an aim to buffer up this segment?
No, home appliances, which has been comprising of primarily washing machines till now, has shown a very significant growth. From 1.1 million units last year, we're going to close at almost 1.9 this year. And we hope to have more than 25 to 30% growth in washing machine segment in the forthcoming fiscal. And now our other factory for refrigerators also commenced production, which is having a capacity of 1.2 million units. So combined, it is going to be a high growth domain for us.
In terms of your revenue contribution, obviously, like you said, the lion's share is from mobiles. Even in Q3, your mobile division contribution had increased to 67%. Is this the trajectory you see increasing even as you shore up on home appliances and, of course, the IT hardware piece, which is yet to come about?
So as I shared with you, the largest piece in our revenue is going to be mobiles. That's going to be the largest trigger of growth because the opportunity pool in mobile is the highest. However, for us, IT products again is a large opportunity wherein we have tied up the two large global brands. The production for one of them should start sometime in April, May. For the other one should start in August, September. We are working on some more customer acquisitions. The market for IT products in India is $10 billion. And we have made a large commitment to the government over the next 5 years as a beneficiary of IT PLI 2. So it's again going to be a very large contributor to our growth journey. In appliances, we are extremely bullish, both on washing machines and refrigerators, and also in consumer electronics. We are the largest player in the country in televisions. So these are extremely important segments for us.
Just give us a sense of what is your internal time on the PLI 2 scheme on IT hardware? Are you expecting this now post the election season, etc., to be over? So are we looking at this coming in second half of this calendar year?
So the scheme tenure is 5 years. And we have already made the threshold investment as committed to the government. Order book is already there. We have signed the contracts. The production is being planned. The lines are being set up. The organization is being built up. And as I shared with you, our first year is under the PLI 2 scheme is going to be 24-25. For one of the brands, we are targeting production to start sometime in Q1. And for the second large brand, we are targeting to start the production in Q2 of the next fiscal. That's the plan.
And what would be the size of business in this 5-year period? Also, the question about whether there is any government now, agreement which needs to come in, or a government stamp which needs to come in for PLI 2. What are you waiting on that end?
So responding to the second part of the question, the government rollout of the PLI scheme has already happened. The guidelines and the rules are well in place, and we are complying with those, which are primarily on three elements. One is the threshold investment, second is the incremental revenue, and third is the localization. So we are working on all three, and we're confident of achieving it. We have kept a very large target for us under the PLI 2 scheme of 5 years. We have kept a targeted revenue of almost 48,000 crores. So that's the way, hopefully, it's going to pan out. We're working hard towards it. It's a very, very large opportunity pool for us.
How crucial, Mr. Lal, is what we will see in July when you will have allocations for all of the PLI schemes come in? Obviously, this was an interim budget. You will have the main budget in July. And right now, that figure is pegged at about a 20,000 crore capex. How crucial is that for you, and what would you expect from those announcements? Would you expect those capex figures to roll out as scheduled and increase over time?
So we are a beneficiary of 5 PLI schemes. And in all the PLI schemes, threshold investment is an extremely important element. In Dixon's case, in all the 5 PLI schemes, whether it's mobile, telecom devices, lighting components, air conditioning components, and now IT PLI 2, we are committed to make those capexes. In our case, in all these 5 PLI schemes, the government's rules and regulations and guidelines are well in place. So I don't see an issue. I don't see any impact in our PLIs due to the new government coming in or anything of that kind. It is just that now the focus has to be on execution, focus has to be on customer acquisition. Again, on that front, I think Dixon is very well placed.
A word from you, and I'd had the opportunity to ask you this a few months ago, but because there's so much interest, I just want to get your outlook on the semiconductor part of the business, where we're at and what your projections are for it.
So the government has rolled out an extremely attractive semiconductor policy. The capital allocation, the fund allocation for that is $10 billion, almost 80,000 crores. We are seeing traction on the ATMP and OSAT side. Possibly there's going to be an announcement on the foundry side also. In Dixon's case, we are going to be pursuing now the vertical bit. What we have been doing till now is the horizontal expansion. In vertical bit, we are seriously looking at display modules. So that's what the teams are studying. We are working and we are in dialogue with some partners. Let's see where it pans out, but we are seriously working in that direction of getting display modules for mobiles, for IT products. That's what we are targeting.
So that's the big sort of takeaway and forward-looking plan. Serious work on the display modules and semiconductors will be the next big leg for Dixon, as will be the IT hardware piece. Thank you so much, Mr. Lal. Always a pleasure speaking with you.
Thank you so much. Really appreciate it. Thank you.
Thank you.
Well, that's Dixon for you. Could be interesting to see how this one moves in times to come, or this whole EMS space, if you will. Devin Choksi, Managing Director of DR Choksi Investment Managers, joins us on the show as well. Devin, good morning. Thanks for joining in. Dixon entering into one more contract, a PLI scheme beneficiary, so on and so forth. I don't know if you got a chance to hear some part of the conversation. Do you like what companies like Dixon, Keynes, etc. are doing? Do you have a favorite in the EMS space?
Hi, Neeraj. Good morning. Well, I think the space looks absolutely fabulous from the point of view of seeing the growth in each and every vertical, wherein I think they have entered into. The likes of Dixon, I think, which you mentioned. I believe that I think they have got a long road going ahead. And probably I think each and every vertical in which they have gone into, including I think the one which I could hear some part of it. I believe that the growth program that they have put across with the clarity is sounding quite reassuring. Only challenge for people like us, I think, who want to buy the stock when the market is available at a compelling discounted valuation. That situation is not forthcoming in EMS case in most of the companies' cases. So they are growing at a rapid speed and they are slightly justified as far as I think the premium valuation that they command. I believe that I think at this point of time, the immediate opportunity is not seen, even if I think one would get convinced with the business and the prospects are in. So I will have to wait till I think the price gives the opportunity at a reasonably attractive level.
Okay. By the way, the pre-open rates have settled, and amongst other things, the notable mover has to be Asian Paints. Just look at that stock, viewers. While the pre-open rates are flattish, Asian Paints, if I'm not wrong, is down about a couple of percentage points. Yes, 2.21, 2920 currently for this one. We'll do a funda conversation on that. But Sudeep, come in on Asian Paints on the charts. It's now had 3 successive days of a downtick. Could there be more in store?
Yes, Neeraj. See, if you see Asian Paints, the stock is in a downtrend since December end now, and every time it has attempted a recovery, it has faced with selling pressure from higher levels. And even in the last several sessions, when it was trying to attempt to cross above 3,000 levels, every time it was doing so, it was getting. There was a resistance at the 20-day exponential moving average, which is around 3020, 3025 levels. So again, now with this move on the downside, with the expected opening, I feel the stock will start trading even below its November swing lows of 2960, 2965. I feel going forward, it is time whether for the stock to rebound or to have a good move on the upside. I feel 3030, 3050 will now be a strong resistance. So until and unless this level is crossed, levels of 2850, 2830 on the downside could be witnessed.
Who better than you to talk to us about RIL and everything that happens in the group company? This morning, of course, we've woken up to news that the deal is gotten one step closer between Walt Disney, and there is a binding agreement that has been signed. What do you think? What do you think about this? The valuation is, I believe, slightly lower than what was initially expected by the street. How would you approach TV18, Network 18 on back of the Viacom holding? And of course, what does this mean for the group company as well? So all in all, your thoughts on the deal and what it means for the counters.
Yes, Amina, good morning. Well, I believe that I think probably in the media space, the consolidation was definitely required, particularly when I think you hold the internet rights on the sports, and you also now hold the rights pertaining to, I think, the television rights also simultaneously. That is one important aspect, I think, which will probably give you the power of pricing power. Rather, I think the consolidation will give you the pricing power, which is where one, I think, is remaining absolutely very convincing and confident about. On one side, you have a distribution reach. On the other side, I think you have the content reach. And that is where probably the combination of content and the distribution gives you the power to get the better pricing. In media space, I think to make the best money out of it, I don't think that money comes out of the news or that money comes out of here for that, but enough money comes out of right from the entertainment. The larger part of the money comes out of the sports and the other events, which are basically producing the significantly large amount of revenue for them. So in my viewpoint, I think that is where probably I think one can argue that this deal is going to make a big success out of it. More comfortable I am with the consolidation which is happening in the media space for a company like Reliance. That was probably giving them the visibility of higher revenue and in turn, I think, larger market share in the profit. So yes, I think this deal should work well for Network 18, Reliance Group per se.
Okay, so yeah, remember viewers, for Network 18 and TV 18, which is the media arm of Reliance Industries, this is important as per Devin Choksi, and those stocks in the pre-open session seem to be starting off reasonably okay. So Deep, the pre-open rates have settled. You spoke about Asian Paints, but if I had to pin you down to one stock, 20 seconds, we are 20 seconds away from market open, one key stock to watch today.
See, one stock which has done well on Friday, and we've seen a good breakout there, is JSW Energy. Now, this stock is in an uptrend on a daily, weekly, as well as monthly charts, and it was in a consolidation since last 15 to 20 sessions. But on Friday, we have seen a good momentum on the upside. And
right, Sudeep, I'll have to come in here because the market's about to start. JSW Energy is Sudeep Shah's top pick. Maybe we'll talk about it in detail post-open, but here's how the markets are starting off. Well, flattish to marginally lower, pretty much in line with what the pre-open rates were, the implied open rates were as well. The Bank Nifty to about 1/3%, so nothing too great. Mid-caps flattish, small caps, are they doing better? Yeah, they are. 195 points, about 0.43%. So that end of the market continues to stay robust. We'll talk about that in detail. First, get the heat map on the large caps up on the screen. Asian Paints, is it at the bottom of the list? Yes, it is. 3% lower yet again. Third day on a trot now, Asian Paints is in the list of the top losers. Today's, I reckon, on account of the downgrade that's coming from CLSA, Macquarie has a positive view there too. BPCL is down about 1.5%. So that pullback continues as well. Weakness in IT today. We spoke about how there were shorts build up in information technology at the whole of last week. And I think IT sulking today. LTI, Wipro, LTTS is not a part of the list, but that's the other stock on which there is a fair degree of short build up. Overall, a lot of red, very little green, now about 1/3% for the Nifty as well. And what's gaining? Hardly anything. L&T up about 1%. Grasim are doing well. So Grasim and Asian Paints at the opposite end of the spectrum. There is Adani Enterprises. We spoke about this. Maybe the Lucknow airport being operational. They're in talks with Uber as per TOI to launch a green car, a vehicle system, if you will. Then there is Dr. Reddy's, JSW Steel and Cipla. So a little bit of a defensive flavor. But clearly, the stock of the morning, viewers, has to be Asian Paints, is now 4% lower. And if you look at the 5-day chart of Asian Paints, that will tell you the story of how much Grasim's foray has meant for the stock. We talk about how it was known and it was well discovered, but when the event actually happens and the scale of the event got discovered, I think there is some more pressure on Asian Paints. This may well get bought into, but for now, this is really sulking. Tamanna, what are you showing?
Absolutely, but what I find interesting is that the Grasim story has impacted Asian Paints more negatively than positively for Grasim. The fear factor on being displaced has seen a bigger hit. Probably. But, talking about news flow, Paytm is one stock that we should talk about. An MS note this morning has said that the RBI's clarification, which came in on Friday evening actually, saying that they've now asked NPCI to figure out how to onboard Paytm customers on the UPI module so that they don't have too much trouble. They're seeing that as a positive. Morgan Stanley has in fact set that target at 555 rupees. That stock up 4% again. So it's been an interesting clawback for Paytm from its lowest levels if you look at the last few days. Rail stocks is the other one that we should keep an eye out. You'll probably see more of action than this once there's actually an announcement, but the Prime Minister is expected to launch or to announce at least 2,000 odd projects worth 41,000 crore rupees. Now remember, this was something which didn't happen in the budget. It's happening ahead of elections, but you might see a spurt in rail stocks as well. Of course, please look at valuations and charts before you decide to invest. SBI Cards is the other one that's on our radar this morning. Morgan Stanley has retained an equal weight and set a target of 750. The data which has come in for cards is mildly positive for SBI Cards, but that stock not really reacting, to be honest, this morning. Embassy REITs is the other one. So just looking at some stocks which had brokerage reports on it, a buy call from Jefferies, about 1% up. Piramal Pharma is one stock that we should talk a bit about. There was a US FDA inspection which was concluded at a US-based facility as well for Piramal Pharma. And it wasn't too negative at the end of it, so that stock about 1.5% up. But some big moves this morning as well, Samina.
There are a bunch of stocks that are actually reacting, may not be too well this morning, and I'm going to pull up the big movers. So Rain Industries taking it on the chin, down 7%. Numbers were weak. They've posted a loss of about 100 odd crores versus a profit that we'd seen the same quarter last year. So a huge knockout for Rain Industries. The stock trades under pressure, down about 7%. Asian Paints, on back of that CLSA target price reduction, the stock is down 3.5%. In fact, paint as a whole pack is looking weak. Berger Paints as well, trading with a cut of 2%. Yes Bank is slightly lower. You've got some cuts that you're seeing for Titan. You've also got Emphasis. So across the board, there is some weakness across the broader markets. No specific sector really losing or leading the losses in today's trade. Across the board, there is some weakness. No major cuts except Rain Industries that is down 7%. On the upside, Idea Forge is up 5.5%. Let's pull up that one. That stock looks good. You've also got Genesis that is trading with a gain of 2.5%. Zaggle Prepaid is up 6% on back of the order win. Paytm continues its upward journey. Another morning of 4.5% gains coming in on Paytm. Indus Tower is up 3% as well. You've got Webhub Global as well that trades the gain of 3%. PNB Housing Finance is leading the up move with a gain of 5%. Mahindra Holidays is seeing a gain of 4.5%. Orchid Pharma is having a pretty solid morning, 7.5% higher on Orchid Pharma. Geo Financial, after 11% up move on Friday, continues to do well. Tarmat, that stock is worth a mention, from 69 to 143. It's pretty much been a one-way journey for Tarmat. Again, a small cap company, but the move is pretty fantastic on Tarmat this morning. Voltam Transformers also looking good on the upside. So lots of small cap names that are gaining in today's trade. Stocks like Rain are seeing some pressure on the sell side on back of weak earnings. Suvain also looking good this morning on back of no Form 38 observations coming from Suvain Pharma for their Hyderabad unit. So all in all, it's a decent morning. It is a morning of a little bit of profit taking, some consolidation. Remember, we are going into, or rather we're already in the last 4 days of trade for the Feb series. So you are seeing what you are on expected lines. A quick check on Geo Financial before I go back to our guest. The stock, like I said, has had a good run and continues to trade very solid once again this morning. Devain, I'll come to you fundamentally first on Geo. I mean, what is the story here? Their numbers for the quarter were largely on back of treasury income. Every now and then there'll be, some news, some sort of gossip on the street. It could be looking at buying Paytm. The stock gets a bump up, does well. But nothing significant that I can spot that's driving this counter higher. Could you share with me what you think and how would you approach Geo Financial?
Yeah, sure. I think the numbers will be following. The business model is already in place. On one side, you have got the NBFC vertical. Second vertical is the AMC vertical, where we have got tie-up with BlackRock. The third vertical is coming up, which is an insurance vertical. And the fourth vertical would be the distribution vertical for all the investment products. So as we see it, I think this entire company basically is going to grow on the large part of the fabric that they are creating through NBFC to, I think, distribution of investment product, giving the balanced income in the entire portfolio. Um, as I see it, I can elaborate, I think, at length on the subject about the NBFC vertical. They are addressing a total addressable market size of the Kirana merchant. They are also addressing the total market size of the retail borrowers who are basically buying from the retail shops. And both these put together, if one looks at it, I think the company is very well positioned. On one side, Reliance Retail has got the Kirana merchants already onboarded, about 1 crore Kirana merchants already onboarded, and they would easily require the credits largely for the purpose of doing the trade. Which currently these merchants have been operating by taking the organized source, I think, through which they would be taking this credit. So now this is the organized source through which I think the credit would go to them. Similarly, I think more than 18,000 stores on the ground, and particularly the electronics, which is a mainstay of with around 35-40% of the total revenue book in the retail. I think there again, the larger part of the credit uptake is around. So in my viewpoint, I think the NBFC vertical is likely to start the journey with a strong balance sheet of about 1,40,000 crore net worth, lendable balance sheet of close to 7 lakh crore. And I think most importantly, you have the customer base, which are already, as I explained, B2B customers through the merchants under the FinMart, and on the other side, the retail customers through the retail stores. So this particular format is likely to get started faster. And Geo platform is the technology backbone, which is likely to provide a fintech arm to the services. So that is where probably I think you are likely to see a growth. And marketers justifiably seen this particular move, and that is where probably we are seeing the rise in the stock price. To me, I think this is the beginning of a journey.
Beginning of the journey for GeoFin. Sudeep, your take on GeoFin, and on the other side of the spectrum, perhaps Paytm up again today after an MS note. But do you see a continuing upswing there? So your take on both GeoFin and then Paytm.
Yeah, so see, GeoFin on Friday has given a big breakout actually above its previous swing high. So the data from a technical standpoint is very limited. If you see the breakout, that zone has been around 300 levels, and post that we have seen a strong move on Friday. So I feel maybe for a day or two, the stock could consolidate here. But from a medium-term standpoint, I feel that the stock could head up to 370, 375, given the momentum as well as the delivery-based data that we are noticing. So on the downside, 318, 320 could act as a strong support. The stock could move up to 375, 380 levels in the next few weeks to come. Now, coming to Paytm, Paytm in the last several sessions, we have seen it rebounding from 320, and there were a couple of circuits on way up also. But if you see on the upside, we feel 450 levels will be the key levels to watch out for, because that is where the 20-day exponential moving average comes in. There will be some resistance there. So while there is a rebound rally on the way here, the support zone would be around 410, 408 on the downside. So till the time the stock holds above this, a move up to 450 is on the cards. But 450 levels needs to be watched out, because that is where there could be some resistance, as well as the previous on the way down when there from 800 levels, when there were several bigger circuits, that zone of 450, 470 was some kind of a sticky zone. So this zone on the way up could also act as a resistance from here on.
Okay. You know, the other set of stocks, I was talking about Adani Enterprises seeing that uptick. Can we just show that? Adani Enterprises now up about 1%. I don't know if it is indeed the Lucknow airport piece or otherwise, but it's up about 1%. But Adani Total Gas, Energy Solutions, etc. are all doing well too. And Devin, my final question to you is on Adani End, the airports business, the other pieces. There's a lot of chatter I think there was a newspaper daily report which spoke about 5 companies getting listed over the next 3 years. Should one invest into Adani Enterprises or avoid it?
Neeraj, I think this company has been an incubator and it has been demerging the businesses as and when they become ready to grow from their own space. So there is no questions asked on this particular aspect. I think the roadmap is very clear. Be it airport business, be it data center business, or even for that matter, I think the new generation of businesses which they have been incubating under the Adani Enterprise, they are likely to get demerged at some point of time. The value unlocking is likely to take place. The good part about this business is that the company follows a strategy way of working. On one side, there are infrastructure companies. On the other side, the use case pertaining to infrastructure companies, wherein I think they use the basic resources or basic output of the infrastructure company for that matter. I think, say, for example, power. The power is being used in different areas. I think they get into the forward vertical integration. The Uber News, which is basically right now taking rounds. Such kind of, I think, applications or the use cases, as we call them as, I'm giving you a good amount of clarity that on they're integrating the both the back end as well as the front end in a systematic manner. So one could possibly argue for investing into this particular businesses in a systematic manner, stay invested for a longer period of time. Mind well, I think that it takes time for producing the revenue. Like the footfall on the airport, and I think now producing the passenger revenue is becoming a reality. So I think if that business gets demerged, nothing like it. Similarly, data center business. So in my viewpoint, I believe that I think this is a good story, but long-term investment with patience could be required in these businesses for investors.
Well, on that note, Deven, Sudeep, gentlemen, thank you so much for taking the time out and being with us. Really appreciate your time this morning. Time for a quick break on India Market Open, but we'll be back with a big voice. US FDA's India Director, Sarah McMullen, talking about concerns surrounding domestic pharma sector and her outlook going ahead. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
Back with India Market Open on the sidelines of Flame University's Indian Drug Manufacturers Association 62nd Annual Day celebrations. My colleague Monal caught up with the country director of US FDA, Sarah McMullen. She started off by asking her about the leading concerns for Indian pharma industry. This is what Sarah had to say.
Is we are starting to pick up our inspection pace post-COVID. And in fact, just this past year, we did over 2.5 times the number of surveillance inspections than we did the previous year. So we have seen an increase in terms of compliance from Indian industry over the past year. And a lot of that came right post-COVID. We had a lot of compliance follow-up inspections. And so this past year saw an increase in surveillance inspections and a lowering of the OAI rate of inspections here in India. That being said, I think we do need to address some of the concerns, as you mentioned, specifically surrounding data integrity. We've addressed data integrity issues in India and globally for many years, and it's concerning to see them come up again and to come up in prevalence. And so, you know, for us, when we see significant data integrity issues, it really speaks to quality culture in facilities. And so we really want to see facilities take ownership for creating a quality culture that empowers everybody at every level to make the right decisions about product quality, and also the accountability to follow that up.
So when you talk about data integrity, the Form 483 is always quite exhaustive and a little difficult to figure. So what exactly do you think are the trigger points when we get a copy of the Form 483? What exactly are the points that we should highlight as maybe a high risk versus a moderate risk? If you could just help us understand how to look at it.
So any breaches in quality are undesirable, right? So whether it be a moderate breach or a significant breach. And I think what you'll see when you look at our 483s is that they're really put in order by level of significance. So as you read through, the most significant items should always be the ones that are listed at the top of the 483. And most of those will be related to the quality system. So if there's any findings relating to the quality system, we take that very seriously, because that could also give indications about systemic problems within the quality system. So it's not just that one violation, it's that there might be a problem within the system itself. So those are the concerns that we really address and take more significant concerns about on our findings.
And I mean, U.S. drug shortages has also been quite in discussion for the last couple of years. So, are you taking any steps towards? Is the ramp up also kind of related to that? A, and do you believe that there are issues that are getting cleared out, and how are you looking at addressing the whole drug shortage issue?
So, drug shortages are very complex. So it's not just one set of issues that lead to drug shortage. And they're actually not new. We had a high amount of drug shortages dating all the way back to 2011, where we hit our peak in terms of the number of drug shortages. And so Congress tasked us to work hard to mitigate shortages, and so we instituted many things to help mitigate shortages. We actually did a study, and in that study we looked at drugs that had gone into shortage, and the majority of those went into shortage because of production problems within facilities. So for us, we want to make sure that we have a consistency of quality in facilities, which will lead to a consistency in supply. Now, there's other aspects of drug shortages, like a discontinuation in production or a sudden surge in demand. Those are other areas that we have other ways of addressing. But really for us, ensuring that we have consistency of quality within facilities is a pretty easy way to help ensure that there's fewer drug shortages.
There's always been a discussion that quality standards for US FDA keep evolving. There's a new issue every time. So how does this evolution take place? And the other question that stems off from that is that maybe the cost of upkeep of facilities could also be very high because, of course, there's talks of bioconsolidation that's happening in the US. So there's pricing pressure that companies are witnessing. So could it be possible that the cost of upkeep of the facilities could also be extremely high, and that could kind of have an impact on the quality or the evolving standards at least?
So I think I like the fact that you talk about evolving standards. So technology evolves, right? So regulations must also evolve. So when you see us put out new guidances, new information, a lot of that's really responding to innovations and advances that industry itself is doing. So this is one of our ways to help understand, and our engagement with industry helps us understand where those innovations are, where potential risks may be, and how to help mitigate that risk through guidances and increased information sharing. Regarding the cost of maintenance, and I think you'll see in a lot of the 483s that a lot of the items are related to the age of the facility, the upkeep of the facility, especially for sterile products. And so I would urge industry to invest in the facilities themselves as one of the things that they can do to help continue and achieve compliance. As you can imagine, when you have automation and newer equipment and less opportunity for human intervention, that will lead to less problems with non-compliances.
And one thing that companies could now do to ensure maximum compliance, if you had to pick one?
So I would say invest in quality. So as an agency, we really oversee product quality and process quality. And we really depend on industry to prioritize quality. And so they need to invest in quality systems, and we want to see it go beyond a quality motto. Quality mottos are great, but it needs to be something that can be implemented. It needs to give everybody in the facility ownership of making sure that quality decisions are being made. So I would encourage industry to invest and prioritize quality.
And this is now trying to understand what sort of timeline does it take for the inspection. So a lot of companies that we have conversations with, once the first Form 483 is out, they work on it, there's remediation that happens. Then they're always talking about, okay, we're waiting re-inspection. So what is the typical timeline within which you all go in for a re-inspection? So say if a facility is inspected today versus whenever they get the final inspection report, what is the timeline that we look at?
All right, so I'm going to say my favorite answer is it depends. Nobody likes that answer, right? So there's a lot of factors that go into the reinspection consideration. Post an inspection where they get a 483, one of our commitments under GDUFA is committing to let them know a final classification within 90 days of their facility. So if their facility is classified as OAI, the time frame for that reinspection will depend on many different things. And so when we talk about the prioritization of inspections, it's a dynamic activity. There's mission critical inspections, there's inspections for products in shortage. There's a lot of dynamic when you put things into a queue, they're all coming from different places, so it's really hard to predict when that time frame for reinspection will roll back around. We know that industry is anxious for that reinspection, and we make every effort to get to it in a timely fashion, but there's a lot of factors that keep us from giving a specific time frame.
And does this mean that, is it only because of these other factors, or do you expect that there needs to be some ramp up on the staff that you have conducting the inspections as well?
I saw that question and I was like, yes. So we actually we're going to be asking for more positions for drug inspectors here in India. Okay. We know that the number of facilities is increasing. We see the government doing a lot of investment into industry. If you look at the numbers over the past several years of facilities that are registered with FDA and actually exporting products to the U.S., that number just continues to go up and up.
Absolutely.
So the workload is just going to increase here. So we are in the process of requesting additional positions. And I hope all the right people are listening that can help push this along, because that would be really helpful, I think, not only to FDA but also to industry.
And yes, and I think the industry is also looking forward to shorter timelines on reinspection, including all investors that are just waiting for a couple of facilities to get clearances. So thank you so much for this. It was a great chat.
Yes.
It was nice seeing you, Sam.
Thank you so much.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the category.
Don't listen to anyone and everyone.
Welcome back. It's a day of consolidation of the street. The Nifty, of course, trading flat with a slight negative bias. The broader markets outperforming the benchmark. just a little bit. But back to 22,197, that's where we, remember, made that intraday high in trade on Friday. Well, one company that's also been fairly active and on the drawing quite a bit of attention is Chola Investment and Finance Company. Arun Selvan, President and CFO, now joins in. Arun, hi, thank you very much. Arul, thank you very much for joining us this morning. It's indeed a pleasure to have you on the show. Sir, to begin with, let's talk about business. And I want to start by talking about volume growth in commercial vehicles. Fourth quarter and FY25 expectations. Are you anticipating some moderation in the next couple of quarters?
The growth in the current quarter will be as robust as what we have been clocking in the first 2-3 quarters. While from a base level, this may look a little lower because last year, same quarter, we did a very high number. So to that extent, growth would look moderating from a growth percentage perspective. But I think from a number count and from a value perspective, we would still be clocking 20 to 25% growth overall for the company.
Sir, you've also said and indicated that you would be looking to grow your asset base, so your AUMs with 20 to 25% for FY25. You want to tell us whether that is where we'd be seeing growth at, or do you think there is an upside risk to that number?
No, there is. I wouldn't want to put any further upside to it, but I would rather hold it there, and I would say that we would certainly be closing the year with at least 25% growth in an AUM perspective over last year. So from that angle, we stick to our numbers.
Sir, you know, over 40% of your AUM comes from CV. What is the impact this will have to growth, and how much more of a percentage contribution can we expect from this vertical to your top line?
Yeah, CV has been a little bit moderating more from an MLCV side, but I think that is the point of that full diversification we got, both within the auto segment as well as from the other businesses like loan against property, home loans, and the new businesses we have mentioned recently. Amongst all these, we will keep the clock running, and we will be clocking this growth of 25%. Certainly more from the loan against property and the home loan perspective as a percentage point of view. Little bit moderations on the vehicle finance side, but still clocking at decent numbers. We still have very low market share in any of the sub-products within vehicle finance. So there is enough headroom to grow, and we would certainly capitalize on that.
I'm glad you said that, because that is my next question. Talk to me about home loan. I mean, that business is locked in an increase of over 100%. In percentage terms to your top line, how much does home loan contribute? You did say it's a relatively smaller share of your top line, but what does it stand at, and where do you see that go over the next couple of quarters?
The home loan right now is at around 8 to 9% of the overall book, and which we think over the next few years it should become around 15% of the overall book. So there's a good potential to grow. The growth you're seeing is also coming from geographical diversification we are doing. Home loan typically had been more concentrated in the south for us because we were experimenting the product. It's a long life cycle product. We've been experimenting it, and when we were ready to grow, unfortunately COVID was there, so we had to defer the plans for expansion. But post-COVID, we have been growing this business in the different parts of the country, in north, east, and west. And you are seeing that growth reflected in these numbers you're talking about. And this has got still some more steam to go, and we have potential to grow. They ride on the vehicle finance branches to grow, so they have a good base to grow from, and they will capitalize this.
So what about unsecured lending? Are you anticipating or seeing any risk over here?
No, it's a very small portfolio right now for us. So total CSEL business, which is around 7% of the overall AUM. And within that, you have the traditional model where we have our own teams meeting the customers and giving the loans. Those loans are 3/4 of the 6%, 7%. So the very small fintech-oriented loans are there, and even there, but for the one or two which we spoke about earlier, which we have discontinued, the rest are doing well. So we see potential there. Yes, we will be careful. It's a new business. As in any new business, we will experiment it, understand it, and then grow in a progressive manner.
So on the liability side, you have managed to keep your cost of funds down and also managed to improve your NIMs. What is the guidance on that front in the near to medium term? Do you think you will expect to maintain similar sort of cost of funds?
Yeah, cost of funds would hover around these levels predominantly. We are changing the mix. We are bringing in more of, ECBs and public debt. It's slightly costlier, but between the rest of the borrowings and this, we will hold the cost of funds at similar levels. And on the other side, yields have been improving because fixed vehicle finance book, which has been a fixed rate book, had progressively been changing the contours of its book to bring in the higher cost of funds into play by increasing yield. So that would reflect in NIMs improving progressively over the next few quarters.
So in the second quarter, you had done a QIP of about 2,000 odd crores, and this of course has helped your capital adequacy ratio to be maintained around the 20% mark. Now as we look ahead, any more fundraising plans? Are you comfortable with this capital adequacy ratio, and this is where we could see it sustain for the next few quarters at least?
See, broadly, our experience had been that if we grow at around 20-25% and return 3.5% and or above pre-tax ROTA, it should be self-sufficient as long as we don't go too aggressive on the dividend path. This is what has been our experience, because during COVID, our profitability had taken a little bit of a slowdown, and on the other side, growth started growing faster post-COVID. Both this contributed the need for capital, and we went for it. Actually, we raised 4,000 crores, 2,000 crores by way of equity and 2,000 crores by way of a convertible debenture. Now that is available to get converted into equity in 25-26. So that would also come into play. I think for the next 3 to 4 years, we certainly don't need equity capital. However, if there are opportunities, then we are not averse to raising capital.
Any opportunities, any expansion plans that's on the cards that you'd like to tell our viewers and your investors?
Certainly, we don't pursue inorganic growth. I think this question keeps coming back and forth, but I think we don't pursue. It's a stated thing that we don't want to pursue taking over another NBFC in any form or factor. We would like to grow our business on our own, way by underwriting and viewing every customer, every loan before we extend loans to them. We don't believe in taking over a large part of a book of another NBFC. So this is right now our stance. I don't know, as we keep moving, we'll look at opportunities, but predominantly the focus is this way.
So very lastly, 33% of your loan book is floating. Would you look at changing rates if that moderates? And I just want to understand, would that require action largely because how your loan book is structured?
You are talking about asset side, right?
Yes.
Yeah, the loan against property and the home loans, which are predominantly the floating rate book, and now the new businesses, SME and SBPL will also be floating rate book. Yes, if there is substantial reduction in rate, we certainly would have to pass it on, because if we don't pass it on, customers will start moving out. So we would like to retain our customers, and we will certainly pass on. But it's a point of time question, so we will have to evaluate it at every point in time and then take a view at that point in time.
Right. Thank you very much, Mr. Selvan. It's a pleasure talking to you. Chola has been a darling of the street. It's been a good quarter, and it's got a solid outlook as well, like discussed with Mr. Selvin. That was Chola. The stock continues to do well. It's actually trading flat this morning, but it's had a good run, remember, in the last couple of months itself. In the meantime, the markets also trade flat. We're off the day's low point, spending the morning consolidating. Broader markets are outperforming. It's largely stock-specific news that's driving trade, no sector-specific or trend that we are picking up on just yet. But in some important news as well, PNB MetLife has labeled its unit-linked insurance product as a small-cap fund. This may lead to some confusion amongst investors. But will the regulator step in? Alex Matthew joins in with more on that. Alex, the much talked about ULIPs, a category change, a name change, I'm sure investors will be confused, and this is not good news for them.
No, certainly not. And the question is which regulator will step in, if at all. So the Securities and Exchange Board of India, of course, has purview over the mutual fund industry, and the IRDAI has purview, of course, over insurance companies. Now, ULIPs are, of course, products that combine insurance as well as investments, and mutual funds are the only entities that can release funds for retail investors. So right now you have the PNB MetLife Small Cap Fund, which is essentially a ULIP, which is currently open for subscription. And the biggest question or the biggest concern is that people will buy into this thinking that it is a mutual fund scheme. I've been speaking to a few watchers of regulations, and what they're saying is that anything that changes the disclosure norms or breaches the disclosure norms would ultimately lead to a breakdown of the market and a mis-selling of a product, essentially, because you can't have investors that think they're buying one product and are actually buying another. So the question mark is, will the SEBI step in, or will the two regulators speak to each other, Samina?
Right, Alex. In fact, ULIPs have notoriously been sold for many, many decades to retail investors as insurance policies. So lots of mis-selling in that business, in that product offering. But like Alex said, a regulator will have to strike. Which regulator it is going to be something we'll have to wait and watch. With that, we're completely out of time, and it's a wrap on India Market Open. Thanks for watching. Up next is Talking Points, so stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity. Co-powered by
Bandhan Bank, aapka bhala, sabki bhalai.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Thanks for tuning into today's Talking Point. I'm your host, Neeraj Shah. The case for a chat today is centered around what could happen to equity markets, of course, but are Indian valuations still attractive? And one could look at global valuations and try and argue that maybe they aren't, but look at historical valuations and argue maybe, just maybe, there could be some more room as well. Would DI inflows further offset the impact of FPI outflows? And what are the expectations out of general elections 2024? Is it a done deal, or does a result still evoke some response from risk assets? All of this and more with our guest today, Venugopal Garre. He's managing director at Stanford Bernstein, joins us right now on the show. Venugopal, good having you. Thanks for taking the time out. Just trying to understand from where you are perched, how do you look at India relative to the rest of the comparable region, and what do you think 2024 holds in store from where we are right now?
Thanks, Neeraj, for having me on the show. I think this is the first time I'm actually on air with you guys. So thanks a lot. I think India is in a pretty unique situation. There is a global excitement brewing towards India for a lot of right reasons. Part of that is the fact that macro has, been seen a pretty good recovery of the lows, and India stacks up pretty much as amongst the best performing emerging markets globally in terms of overall GDP growth as well. But the reality is that if you were to just look outside of India, normal comparables usually happen with China, which has been the one dominating a lot of these emerging market funds. And also in terms of global allocations as well, valuations there have compressed, of course, quite a bit in the recent years, and has been an ongoing process for last year as well. So the gap has expanded fairly widely. Now, normally valuation calls itself are usually not taken as a gesture in terms of how to approach investing in a particular country, because you do tend to look at the structural and cyclical factors as well, which is where India is still favored. But I would probably argue that compared to where we were 12 months back and where we are right now, and even in relative sense, valuations very clearly look excessive. There might be still pockets of opportunity, but across the board, it is becoming a bit more tougher to argue even the growth angle. You have to really discount a lot of things into future, expect, and be a bit more imaginative with which, in terms of how to look at price to earning multiples, or build probably an earnings growth which might last much longer into the future. So these are the challenges that I see. One characteristic way I sort of represent that is that over the next 15 to 20 years, I guess at the top down index level, the large cap index has to deliver anywhere from 12 to 13% earnings growth, on a sustained basis. That's a pretty large compounding that one has to expect. And for Smid caps, around 17, 18% over the long run. Now, these are not very easy to achieve when you look at from a long periods of time. Of course, you could achieve that over a shorter period. So this is where I guess is a challenge that somewhere down the line, we have to see some form of a flatlining of the markets, which is what we believe should happen this year.
In some sense, Venugopal, you could argue that relative to some of the other very attractive markets or high-performing markets we have, right? We were looking at a statistic. While 2023, India also did well, but relative to Nikkei, hardly anything. This calendar year, I mean, a market like Nikkei is up 18%. India, for all the fanfare, is meandering around a 2% gain. So in some sense, the large caps of the Nifty headline has kind of flatlined to marginally higher relative to maybe other markets or relative to some of the stock-specific action that we've seen already.
Yeah, but the very simplest way I look at it is that India, end of the day, is an emerging market. It is always better to compare ourselves with how emerging market constructs work. The funds are very different as well. You can't have an emerging market fund investing into Japan, for example. And Japan has its own story, but look at the currency as well. So if you weren't really well hedged, of course, you would have lost a lot in currency as well. But the reality is that if you compare with Latin America, for example, where growth rates are still very meager, for a lot of these countries, or outside of that, even in ASEAN, which are a bit of them commodity driven, or even China, India might look up really well in terms of overall macro construct, not just for history for last year, but for today as well. But the reality is that, the question simply is, number one, is it priced in? Number two is that, from an international funds flows perspective, if you're not going to see some of these larger countries do well, which is, let's say, China, you tend to see a lot of redemptions happen. So it automatically restrains the ability to sort of see a fairly large FII flow happening into India from that perspective. Now, India as an own asset class is something that we could talk about, but we are still too early to be in that situation where you can raise money, let's say $1 billion raise just for India alone. I don't think we are in that situation right now. I could argue that 10 years later that could happen. So that's where the challenge is, right? The constraints of FII flows and how you approach investing. Maybe for a retail investor globally has a choice of investing everywhere or anywhere, but it is not the case for funds. So you need to be cognizant of that.
And that's such an important point. Venugopal, could you just kind of talk about that for a little moment? Because I have heard very divergent views around the more popular opinion that China's loss could be India's gain, and the same, and that emerging market ex-China mandates are increasing by the dozens, if you will. And at the same time, I see analysis which says that while there is so much fanfare around it, the absolute numbers are very underwhelming, and it is some time away before we talk about this, which is something that you alluded to too.
Yeah, it's a fair point. Believe me, all of us like telling stories, and you actually raise a lot of money through storytelling. Of course, storytelling needs to have a fundamental background and backing as well. If you go wrong, you go wrong after a few years. So that's the part and parcel of how investing works. But if you were to think of it, China, a lot of money did get pulled out over time. I think some of it was, an early call people took on the cyclical aspects of China. Some consider it as a structural challenge, but I call it cyclical. So whatever it, some took an early call and some capitulated later on because fund performances were not good. And you had to capitulate. And then, of course, funding was getting pulled out. Now, these are large funds which are primarily funded through, let's say, endowment funds and others. So these are asset allocators who take a call. Now, when you pull out that money, the simplistic thought process is that you are primarily either investing and reallocating that to fixed income or to the developed world or to something else. It could be another asset class, maybe crypto, whatever. So that's basically the way these things work. Now, the reality is that a lot of this money, which is allocated by these asset allocators, also goes into private equity, right? So it's not just public market is only one phase that we see. A lot of challenges are being seen in the private market, the VCP market, for example, in some of the established countries like China. It is very difficult to get your next round funding, come closer to IPOs or raise money or list. So when you get that opportunity, you basically use public markets primarily to create liquidity for yourself. That's why that money which is creating liquidity for these asset allocators is not coming back to India. I mean, if that was the case in the last 2 years, if you were to accumulate FII outflow and inflow, we've not really seen any inflow. If it's in India shining story, why haven't we talked about $30 billion inflow every year for the last 2 years? It's actually 30 of outflow, and we probably got some inflow which probably neutralized it, right? So that is the reality right now.
So well put. Venugopal, thanks for that. Now, within this construct then, what could mean or what could be the positive for an Indian market watcher? Because flows, even if they come, can take valuations only as much higher in a world wherein higher for longer rates or higher than the previous 15 years rates is a reality, and therefore multiples likely, ideally, should be compressed. So what could turn the tide? Because earnings growth, no matter how well we do, will not be at a clip which could justify higher valuations, right? So what do markets do then? Do they flatline for the next 12 months?
Yeah, so, what comes to help normally at times is a cycle. Right. So cycle, what does cycle actually mean? Cycle means a string of EPSs or earnings growth of a certain level continuing for a longer period. Right. So this is not about 18% growth for 2 years and you go back to 6% growth. Right. So that's, of course, a very challenging situation. But you have a slightly longer cycle where you have 7-8 years of, let's say, a 15% growth. Right. So what does happen is after some point of flatlining, you tend to again start to see that earnings growth give you the return. So in a very simplistic way, if price to earnings for an index or any stock does not change from here, right, and assume this is the new normal based on India's positioning in the world or the ROE perspective, asset-light companies, whatever, let's assume this is the right multiple. And thereafter, ideally, you're going to get your earnings growth as your returns. If you're going to get 14-15% returns per year, let's say, from the compounding aspect, that's not a bad idea to be in equities in general, right? The challenge for us has been that we have risen very swiftly in terms of price to earnings, and this level itself looks unsustainable, right? So you do see flatlining as a broader concept from a market level, which is what we have been arguing for this year. I'm expecting 8% returns for Nifty, for example. And my argument is you get that much for fixed deposits in general. Of course, the taxation aspects might be different, but then what's the fun of being, actively involved in equities? But then you get bottom-up ideas. Bottom-up ideas are relevant across every cycle, so that doesn't matter. That's not a unique aspect to it, right? So that's like a situation today that I see. But the only positive aspect, as you mentioned, for India is that we do believe that we are in a macro cycle which could last for a couple of years, right? Maybe not the 2003 to 8 or 2003 to 10 super cycle. We probably saw 25 to 30% earnings growth on a CAGR perspective. But can you deliver 15% growth over 6-7 years? The answer is yes.
In which case, before we take that break, one final question before the break, Venugopal, which is that I heard you say that bottom-up ideas might be par for the course, and that's true, as you said, for any cycle. My question, therefore, is Smid's very strong earnings growth potential on a bottom-up basis, maybe relative to large caps as well, if you look at the overall universe, even if you look at the investable universe and not the 6,000 stocks. So is there, even for global investors that you guys might be catering to, is there a tilt towards Smids, or is there a preference for large caps in a bottom-up world?
Yeah. So I mean, I would say that the importance of Smid as a area to invest and look for opportunities is increasing every year. Last couple of years, it was primarily about retail investors in domestic mutual funds, which are again funded by retail. Internationally, it used to be sort of a very niche process. Certain funds would probably look at alpha by investing in some set of mid caps, right? We are actually starting to hear pretty tremendous focus from a lot of funds globally on seeking and trying to understand the mid cap opportunity. But I have always been of the view that it is very difficult to invest at a broad-based basis in SMID if you don't really have capability. So first thing you need to build is hire people, build capability, understand stocks, and that is how bottom-up investing works. Sitting somewhere in the US and having somebody who's done China for 20 years, you suddenly want to invest in SMIDs does not work. It's a recipe for disaster because SMIDs can be very dangerous as well when it comes to bottom-up picking. You have to be very careful about, the business model and governance. Maybe large caps you can scrape through, because what are large caps? Large caps basically were SMIDs which delivered over time, and that's why became large caps. So risk element is usually lower, right? So one thing I want to highlight here is we started our India SMID portfolio for the first time ever this year at a hefty SMID valuation, because we really wanted to basically build this portfolio over time, because I think this is the future of India.
SMIDs are the future of India. Viewers, just for clarification, by SMIDs, what I mean to say is the small and mid caps. That's the acronym that is now very commonly used, in case somebody's wondering. Venugopal, stay on. We would love to understand what forms the lion's share of your allocation within that SMID portfolio. We'll talk about that on the other side of this very quick break. Stay tuned, viewers.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
वात पित्त कफ को जो करता है नित्य खंड खंड अशुद्धता.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with Talking Point in conversation with Venugopal Garre, Managing Director at Sanford Bernstein. We are talking about how he believes Smids are the future of India. Now, I have 5 minutes on the segment, so I'll have to do a bit of a rapid fire. But Venugopal, I'm trying to understand. You've constructed a Smid portfolio at these valuations. Where is it that you've given the highest weightage in the portfolio? What theme?
Yeah, so I'll just tell you that it was a big struggle to identify stocks. I can assure you, when you try doing bottom up, you realize how tough it is. So what I did is that I realized, firstly, that it is no point allocating everything to equity. And it's a slightly long-term portfolio. I want to basically build it over the next 12 to 18 months or 24 months. So I have 80% allocation basically to somewhere down the line to non-SMID, which is fixed income, which is almost 50% allocation, and 30% allocation to large caps through a separate India portfolio, which I run. So technically, 80% is not SMIDs. The remaining 20%, we thought the first theme that we're going to choose is where there's an opportunity for non-linearity, as I say. So this is basically manufacturing, where I felt that while valuations are steep, 50, 60 XP, but there is room for earnings growth and sudden surprises to come in, because this is a phase where business is getting built for those companies. So there are 4 stocks out there which are primarily linked somewhere down the line to manufacturing, or one is an EV linked company moving from a normal traditional to EV, which is an auto component company. 2 of them are. One is an EMS player, the largest in India. One is again an EMS component player, more towards PCBs. And the 4th one is a logistics company, which has, in my view, also a linkage with manufacturing. So there are 4 stocks allocated, 5% each right now on the Smid portfolio.
Very interesting. Not surprised that some EV plays feature out there, but it's interesting that you are playing such a low weightage to Smids as well, because as per the market cap too, like 71% or 70% for large caps, 30% is still Smids. So you are underweight that bucket. But within that, EMS finds such a lion's share in your portfolio. Those valuations aren't exactly cheap, Venugopal. So why this preference for EMS stocks?
Yeah, so, when I looked at the broader market, I wanted to get certain things like certainty of near-term earnings streams, right? And how do you get a certainty of near-term earnings streams? There are 2 approaches, actually 2 sets of business models which give you that certainty. One primarily is, let's say, capital goods linked companies which have order backlogs. So you have an idea of what revenue growth and what margins they would deliver. So they won't suddenly disappoint you, meaningfully. And the second one was emerging sectors such as primarily manufacturing, where there are order backlogs and you have a visibility of very high growth, at least in the near term. But then between this, manufacturing was critical for me because I think this is at least a 10-year theme. Number 2 is there are a handful of companies like these which I have selected who have access to production linked incentives, which primarily means that they become a conduit for any foreign company thinking of setting up, capacity in India. These guys already have an advantage of 10% plus on table for you, right? So which is a reason why they tend to gain market share in that process. So think of another laptop company coming to India, right? Which is going to be the natural company they would go to. Somebody who has a PLI, who has labor ability to gather labor, has some skill sets. So I felt that you could see non-linearity. By non-linearity, just to highlight that at a 50, 60x company, which is trading at that level, even a high growth, is usually tends to be discounted, right? But then the reality is that if you're, let's say, $100 of revenues that you are generating today, and suddenly, let's say Apple comes into India incrementally, of course, in terms of new lines, and say, hey, let me just allocate some part of my volumes now to you, right? Suddenly what happens is 100 becomes 150. So it's not about a specific case I'm saying, but what I'm saying is that when opportunities are abound in that area, you have a tendency for a disproportionate scale up for some of the companies. And that's the reason I decided to digest extremely excessive valuations for that set and still keep it in the portfolio.
Got it. Venugopal, we are out of time completely, but I can't resist asking you a 30-second answer if you can.
Yeah.
Can election verdicts, if it's pointing towards policy continuity, still be a surprise, or is it discounted now?
I think policy continuity is already priced in the markets. A much larger than expected mandate might lead to some euphoria, where you get even more excited, in terms of what all the existing government can achieve in the next 5-year term. But that is the only element of surprise left, right? We're not even thinking about a negative surprise right now. It doesn't look like that's going to be the case in this election.
Okay. Venugopal, this was lovely talking to you. Thanks for taking the time out and speaking to us, and look forward to have you more often on the channel.
Thanks.
All right. That's the view from Venugopal Garre. And that's all the time that we have on this edition of Talking Point. Thanks for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
Markets opened the trading week on a somber note. Broader markets declined. Sensex trades below 72,900, while the Nifty stands below 22,200. And it's a sea of red across sectors, with Nifty, IT and real estate emerging as top sectoral losers. On the other hand, PSU Bank comes out as the only gainer. Brokerages maintain a bearish outlook for Asian Paints. Jefferies rates stock a high conviction underperform. Stock drops over 4%. And Walt Disney and RIL set to sign a binding pact to merge their media operations in India. RIL to own at least 61% in the merged entity. That's a Bloomberg report. And US FDA sees a significant increase in inspections over the last year, says India Director Sarah McMullen. She says data integrity is a leading concern. That's an NDTV Profit exclusive. Hello and welcome. This is Samina and you're watching the F&O show where we take you through the stocks or take stock of the derivative market. A quick check of how the markets are doing. It's the last 4 days of the Feb F&O series and we've started off on a somber note. It's a morning of consolidation and a little bit of profit taking on the index. So the Nifty down 0.3% to trades up 22,200. The breadth of the market is also quite weak. The broader markets are actually declining as compared to the benchmark, and that of course is on back of some profit taking after a pretty strong Feb series that we've had. Feb, remember, has historically been a weak month in the last 3 years, but this time around we might be defending the seasonal weakness for the month of Feb. Well, in terms of the F&O picture, it looks like the rollovers are healthy at 28.2% is when I last checked. And of course, the Nifty futures continues to trade at a premium. Bank Nifty has been an underperformer over the last couple of months, or rather has closed below 47,000 for the last 2 months and continues to underperform the benchmark in trade. Well, that's the Nifty Bank. Feb futures trade at a premium of 52 points and we are seeing an increase of open interest to the tune of 0.9%. On the Nifty 50, if you can pull that one up and see where that picture is. Remember, rollover stand at 28%. Nifty 50 Feb futures also trade at a premium of 14 points, slightly lower than that 16-point premium that we closed out on Friday, with open interest also marginally higher as we see it. So that's really what the picture is across the Nifty and Bank Nifty as well. In terms of movers, Asian Paints is a little disappointed, down 4% on brokerage downgrades. You've also got BPCL, OMCs seeing some profit taking after a solid run that some of these counters have seen over the last couple of months. Brokerage is concerned on back of valuations, and that's one reason why stocks like BPCL are trading lower. Wipro, Titan, TCS, Tech Mahindra, Infi, JSW Steel are all trading with a clear downward bias. On the gaining side, L&T is looking good, 2.5% gain there. Power Grid as well trades the gain of 2%. Bajaj Auto, Adani Ports, M&M and Dr. Reddy's are some of the other gainers that we are picking up in trade this morning. Well, across the broader markets, the action is obvious. So you've got stocks like PB Fintech that trades with a gain of 6.5%. Paytm is up 5%. 361 is looking good. Bharat Dynamics is having a strong morning, up about 4% after a strong rally that we saw on Friday itself. Ircon, Data Patterns are some of the other big gainers on the Nifty 50. On the sell side, Nifty 500. On the sell side, Rain Industries is down 6.5% on back of weak numbers. Indian Hotels looks weak. Asian Paints, like I said, is having a bad day. ABB also seeing a cut of 3% So all in all, it's stock-specific trade that's driving the street, but no major big movers or losers in terms of today's trade. Well, let's go across to Soni Patnaik and Vinay Rajani, both joining us with the F&O setup this morning. Soni, good morning. Thanks for joining us. Soni, it's a little bit of an aberration. The last 3 Feb series have actually been weak for the markets. This time around, we're up about 800 points on the Nifty for the month of Feb. It's looking good. At least that's what we are picking up on. Today is a morning of consolidation. What would you do and how would you trade the Feb series close?
Good morning. Thank you so much for having me on this show. So if we talk about Nifty, we've seen some sort of a profit booking from higher levels of 22,250, 22,300 odd range. However, it is not very aggressive on the short side as well. You can see a lot of positions that are getting added. It's on the mixed side, both buys and shorts mostly. So we'll get to know how the rollover data plays out in the end. Looking at the broader structure for Nifty, it is quite a buy on dip strategy. In immediate support is around 22,100, followed by 22,000. So these are very crucial support. I think Nifty has approached that support zone where one can actually enter into the buy side and reinitiate the longs from 22,100 odd levels, keeping a stop loss of 22,000 and then again the targets for 22,300. Any move above 22,300, we may even be surprised to see 22,600 on the cards, which is quite possible. So I think Nifty is definitely a better structure with buy on dips as a good strategy.
Buy on dip on the Nifty. Vinay, what about you? Are you of the same opinion? This continues to be a buy on dip or a sell on rally for the Nifty 50?
Yeah, so for me, it looks like a buy on dips opportunity only because the primary trend is up, and couple of sessions back only we registered a new all-time high. Just a muted kind of activity was seen on Friday. So sector rotation was there, but there was no big movement in the Nifty and Bank Nifty. But if we were to go by the data, last week we saw Nifty went up by 0.78% and open interest went up by 6%. So long build-up was there in the Nifty and Bank Nifty. We have seen some short covering where 4% open interest was shaded, and the Bank Nifty went up by 0.9%. So in that sense, there is no negative. In fact, there is a long build up in Nifty. So overall, I believe that buy on dip should be the opportunity and kind of strategy that we can adopt as a trader. And 22,050 to 22,100 is a strong support. 22,000 and 21,800. These are the two strikes where we have seen a good amount of put writing happening that can act as a strong support. So as of now, for traders, for me, intraday traders and 1 or 2 days trader one can keep a stop loss of 22,000, and 22,050 to 22,100 is a good buying range for the Nifty. For Bank Nifty also I'm bullish. No doubt it has not been performing that much, but 46,400 to 46,500 is a strong support zone where one can initiate fresh long positions with a stop loss of 46,200. So I see markets going up only and sector rotation is happening, and buy on dips kind of strategy can be adopted in Nifty and Bank Nifty both.
Continued. So Vinay is constructive not just on the Nifty but on Bank Nifty as well. Soni, how do you feel about Bank Nifty? It's for the last 2 months not been able to cross levels of 47,000, and there's been underperformance as compared to the benchmark in the last couple of days as well. How would you trade the Bank Nifty at this stage?
I think Tamanna, Bank Nifty, there is a resistance of 47,000 for the intraday basis. I can see the put call ratio of that strike has gone below 0.8, which is indicating that call writers are sort of dominating. However, it's not a lot of concern for the Bank Nifty as of now. There's also good strong support. If we see 46,400 for intraday basis is a strong support. If it's breaking, you can see 46,200 acting as a support. So I think there are multiple supports that one can see from 46,000 to 46,400, and this should act as a good cushion for whatever shorts that we can see or whatever negative outcome we're seeing on Bank Nifty right now, and it should also reverse from those levels. Ultimately, I think it maybe today, tomorrow could be a muted day for Bank Nifty, not a lot of movement, but most likely the expiry day we can see some movement coming in, and Bank Nifty can test 47,500 too also. So I think it's also a buy on dips, and just look out for the levels of 46,000 as your support stop loss.
Right, that is the call coming on Nifty and Bank Nifty from Soni and Vinay both. Well, we'll go into stocks, but before I take the stocks that you both are recommending, I quickly want to get in a word on Asian Paints, Soni. What is the trend there looking like? Fundamentally, there have been a bunch of brokerages that have downgraded the stock. On the charts, does it look ripe for further selling?
Another 50, 60 odd points can be seen falling in Asian Paints. If we look at the support as per the options metrics, it is at 2,800, where there is still a lot of open interest additions. And, you've not seen any sort of unwinding happening at those levels. Of course, the resistance is also quite strong. There's aggressive call writing taking place today at 2,900 call, followed by 3,000 calls. So it may not be a lot of upside that one can see in the particular stock. And, just wait for some more dip around 50 odd points. You can still see the moment it approaches 2,800, one can just reinitiate a small trading perspective longs from those levels, keeping that as a support, and maybe it can bounce back towards 2,900. So that's the range to watch out for Asian Paints.
That's the range on Asian Paints. Vinay, one stock that was quite the star, or has been Geo Financial Services. Very, very sharp up move that we've seen on the counter. Friday itself, the counter gained 10%. This morning, taking a bit of a break. Do you feel like important resistance have been taken out and further upside is possible in Geo? So fresh longs could be initiated for traders?
So frankly speaking, we have very less history to comment technically positional to take a call on the positional basis, because it is, yes, on Friday we saw stock hitting an all-time high, and in fact today's high is almost at all-time high. Yeah. So 295 was the previous swing high, which was registered on 5th February, and that was taken out recently. So that becomes the strong support. So as a positional trader, 295 to 300 can be watched out for buying zone set. So if it gives a correction, that can be utilized as a buying opportunity around 295 to 300. But the stock is into a blue sky territory, very less history is there, so difficult to comment on the resistance. So though no doubt technical setup is good, stock is hovering around its all-time high. So continue to keep it with a stop trailing stop loss, and if it comes down 295 to 300 is a very good zone to take a fresh long entries. So definitely the trend remains bullish, and buy on dips can be the strategy for this type of counter.
Right. Vinay, Soni, stay with us. We'll take a quick break. We'll come back and talk about your stock-specific strategies in the F&O space. So stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading F&Os.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money. Welcome back. You're watching the FNO show. It's a quiet morning on the street. The benchmark not looking too great in this morning session. Remember, it is the last 4 days of the Feb series, and it's expected to be a good one, at least so far. Market participants hoping that the momentum actually continues for the next few days. Sony, let's talk stocks now. What are your strategies or your strategy that you're recommending to our viewers this morning?
So the first pick would be in SBI Life. SBI Life has seen a monthly breakout, and quite strongly it is headed towards above 1520, which was some resistance it was facing like 2 odd weeks back. So I think SBI Life is looking quite strong. It can test 1600 levels.
Right, that's SBI Life. That is Sony's recommendation coming in. Vinay, what about you? What is your top recommendation for our viewers this morning?
So I would like to give two recommendations, one on the long side and one on the short side. The first is the on the long side, the AB Capital, Aditya Birla Capital. So it is one of the NBFC stock which is has been outperforming and came out with a very nice result. So after result, it corrected and again resumed its uptrend. So overall, I can see a symmetrical triangle breakout on the charts and can be looked at for the short-term trades. So 190 is a level for the February future. One can go long Aditya Birla Capital February future 190. Stop loss can be kept at 187. On the upside, I see a target of 195. On the downside, I see Hindalco. So Hindalco, in fact, has given a bearish breakout, which is a trend line breakout on the daily chart. So it looks weak on the chart. So Hindalco February future can be shorted at 510. Stop loss can be kept at 520. And on the downside, I see target of 497. So Hindalco on the short side and AB Capital on the long side.
Long trade on AB Capital and a short trade on Hindalco. That's Vinay's strategies for today. Vinay, what about L&T? Are you tracking this one? 2.5% up move this morning. More room left on the upside?
So recently we have seen that stock like ABB and Siemens performing very well, and L&T is also a capital goods stock. In derivative side, last week we saw capital goods sectors witness long build up. So there is a breakout from the consolidation. So sector rotation is happening. The stock has surpassed the level of 50 days exponential moving average, which was acting as a resistance for the in the last couple of weeks. So I think it is a nice setup, and as we have a bullish view on the market and capital goods sector is looking strong. So looking at the data and the technical setup, I see L&T is looking strong at 3475. Today's low can be kept as a stop loss, which is 3393 in the spot. And ultimately, I see a stock reaching around 3600 in couple of sessions. So looking strong setup on the charts and can be looked at for trading opportunity on the long side.
Sony, HDFC was showing a little bit of strength through last week's trade. Do you feel like there is still room left for an upside, or it would be best to avoid the counter at these levels?
I think for the March series, if we talk about HDFC, there is a lot of room left, and it has held on to very strong support. It has actually, gone above 1400, which was its resistance. Now it is holding that as a support now. So I think going forward for the whole of March series, I do see it testing 1500, 1520 plus levels also. From current level, one can actually initiate longs, keeping 1400 as a stop loss and a 1500 target.
Right, that's the trade coming in on HDFC Bank for the March series. A few more counters that have been quite active in trade have been some of these defense names. I don't know if, Vinay, you track Bharat Dynamics. 10% up move in this month. It's been an outperformer today as well. You're seeing good gains on pretty solid volumes. Anything on Bharat Dynamics, Vinay?
Yeah, so previous swing high was at 1938, which was seen on 8th February. And after that, we saw sharp sell-off. And the kind of supply absorption we saw at the lower level, and again, stock is reaching its all-time high. It is looking very strong, and the kind of move it is showing, it is headed higher. So the only one resistance I see, which is the previous swing high around 1939, 1940, you can consider. So once we see this stock crossing that level, then momentum can be there on the upside, and we can expect a more extension of the uptrend. So I would rather suggest that one should wait at this level. 1940 is a very strong resistance. Once we see stock surpassing this level, after that one can trade long. So 1940 is a trigger level for me, and we will wait for that to surpass on the upside.
Right, that's the word coming on Bharat Dynamics. It could be facing resistance slightly high levels, that is Vinay's trade, but up until then looking pretty solid. Sony, anything on Adani Enterprise?
Yes, I think stock is looking, good for even intraday and a positional basis. Also, if we can see, the stock has, it has crossed 3,300 today, and that was a resistance even on charts. It's looking quite positive. On positional basis, one can see it testing 3,400, 3,420, as long as 3,230, 3,300, 3,280 as a support is getting defended. So I think it's a good buy from current levels. 3,280 can be a stop loss. Keep a positional target of 3,400 in the coming days.
Right. Thank you, Soni. Thank you, Vinay, for joining us on the show and taking our viewers through your F&O strategies. With that, we're out of time. But before we call it a wrap, my colleague Monal caught up with IDMA Chairman S.M. Mudda on the key changes proposed by Schedule M. Here's a slice of that conversation.
When we talk of Schedule M, we are not talking about the product quality. We are talking about the manner in which we manufacture product to achieve the quality. So this is a significant change that has happened in the revised Schedule M. Okay. Revised Schedule M, as I said, is on par with Europe and WHO guideline. There is a key focus on two aspects. One is understanding what product quality means to us. Another is the top management responsibility for quality. For this, there are two significant changes. So first, let me deal with the product quality. Until now, we believe we make a product, we test it. It meets certain predetermined standards, and we say product meets the quality requirements. However, in pharmaceutical, there are many things which cannot be tested into the product. They have to be provided in a system. So there is a new change in the definition, and the term is product realization. And what it says, the product has to have attributes that will fulfill the expectations of various stakeholders, starting from patients, healthcare professionals, and internal, external customers and regulators as well. So this is the definition. Now, you cannot create achievement to these requirements overnight. So the revised Schedule M prescribes creation of a pharmaceutical quality system. Now, this is the top management responsibility to create a system that allows delivery of products with these attributes, all 5 attributes that I spoke. And that is a significant change from the previous Schedule M.
So how will the government ensure implementation of this revised Schedule M?
Yes, it's a good question. It is a challenge. The industry is yet to understand the complete impact of what changes it is going to bring. But as I said, the key thing is top management responsibility. So quality no longer becomes an operational function. In fact, my guru used to tell Mr. R.S. Iyer, quality is too important to be left to quality controllers alone. So it becomes a management responsibility. Management has to create a system to deliver. So this is the fundamental change that has happened from the previous Schedule M to new Schedule M.
Okay. And so how do you think the revised Schedule M will align with the vision that the 2047 vision that we might grow into a $500 billion industry, Indian pharma?
It is for sure that we are going to grow. Our target will be achieved, but then as we know, worldwide we understand that quality is the key differentiator.
Yes.
So this revised Schedule M will bring focus on the quality in a manner we have not seen earlier. Okay. It will in fact propel the innovation in the pharmaceutical industry, a holistic business growth. In fact, whenever I speak on quality, we say the quality management system equates to business management system. Your commitment to quality will definitely increase the consumer trust. It will reduce the operational expenses. It will reduce the reworks. On the whole, it supports your business. Yes. So this initiative definitely is going to be aligned with our vision of Amrit Kal, and will be able to take us there. So our focus on quality is definitely going to be the key contributing factor to our growth.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what?
Hello and welcome. You tuned in to the Small and Mid-Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Before we go on to the show forward, I'll quickly toss to Harsh for a quick market check. Well, Harsh, markets are a bit under pressure. What do you have to say? How are they panning out to be?
2/5% lower on the benchmark itself, Mahima, you're right. And even within the mid and the small cap, and we'll focus more on that one because this is the small and mid cap show. So even those ones, a little bit under pressure. You're seeing quite a bit of pressure on the mid rather than the small cap. There you go, the Nifty mid cap down around 2/3%. Definitely underperforming the benchmark by a bit. But the small cap absolutely flat, no complaints there. Also with regard to the advanced decline, let's pull that chart up because it will give us an indication as to what's happening. There you go, it's reversed at some point at the start of the day. And now we're firmly in with the declines in, in the majority. We're seeing the market breadth, of course, favoring the declines at the moment. In terms of the top gainers, losers on the small as well as the mid, I'll first take it to the Nifty Midcap, something like a Policy Bazaar up around 6% in trade today, something like a Paytm as well up 5%, Indus Towers up 3.5% in trade. Within the loser pack on the Nifty Midcap, which is taking a bit of a knock in trade today, you're seeing Cummins India down almost 5%. Indian Hotels persistent are the other two losers on the mid cap. Now quickly moving on to the small caps, Hudco, Glenmark, SJVN, all of which are up roughly 3.5+% in trade. Also among the losers, you're seeing Triveni Turbines, Birlasoft, Aegis Chemicals down around 2.5% plus. But there's a little bit of less blood when it comes to the Nifty mid cap. There's a bit of an Nifty small cap, I beg your pardon, a bit of an even Steven there in terms of advanced decline. But we'll shift our focus on Yatharth Hospital. Plans to double their bed capacity in 2024. We have Yatharth Tyagi, who is the director at the group of hospitals, to talk about the company's outlook and where the company will go going forward. Welcome, sir, to the show, Mr. Tyagi. It's good having you.
Hi, good morning, Harsh.
Hi, good morning. Quickly trying to understand a couple of acquisitions, or rather one acquisition you've made specifically, and some amount of greenfield capex that you're putting on stream. What should this do to your top line in FY25 as well as in FY26 as some of these initiatives start to really bear fruit?
So we have recently acquired a hospital in Faridabad. So Faridabad is a city in Haryana, but technically it's a Delhi NCR market. It's a 200-bedded hospital, and we're doing a capex of 60 to 70 lakhs per bed there in terms of the acquisition and the medical equipment that we're going to put there. We feel that this hospital, because it has all the legal empanelments as well as private healthcare insurances, which are part of the panel. So from day one itself of the new financial year, it will start adding revenue to our top line. We do expect, for the first year or so, the revenue to ramp up quite soon there. And overall, we feel it fits well with the strategic approach of our cluster approach and expanding in the market of Delhi NCR, North India.
Right. Since we're talking about expansion, and you rightly mentioned that you've taken over Asian Fidelis Hospital, but can you just quantify as to how much top line and bottom line will it contribute to?
So it will be difficult to exactly put a figure, but usually we have seen that our hospitals in Delhi NCR North India market, they turn EBITDA positive from the second year itself. So that's what we'll be trying to achieve there. We do feel, as I said, that whole market is expanding. Greater Faridabad has a lot of potential. There are a lot of urban high-rise societies around the hospital which are existing. So we feel that, by the second year itself, the hospital should be EBITDA positive.
Right. And what about the land parcels you've acquired with regard to brownfield expansion that you're planning? Around 250 to 300 beds to be added there. All of these going to be added in FY25 itself, and which quarter in terms of visibility are you planning to add these?
No, so it will be other than the Fidelis Hospital that will contribute to the top line from the new financial year, from the first day itself. The organic expansion that we're doing in terms of adding capacity, that will take 2 to 3 years for the revenue to ramp up from them, because it's a brownfield expansion. So you can imagine a hospital that we expanding from 450 beds to 700 beds. So that expansion and the construction will take 2 to 3 years time. Similarly, from 400 bed to 600 bed, the Greater Noida Hospital that we're expanding, those 200 bed expansion will also take similar time. And so post 3 years, the revenue will start coming from these organic expansions. But other than that, there are also other acquisitions that we are keenly eyeing. So I think from the coming financial year, other than the Fidelis Hospital, there's another hospital that we are trying to acquire, again in the North India market. So that will come up. But the organic hospitals, the expansion of the bed capacity there will start flowing the revenue after 2 to 3 years.
Right, and since you're talking about the northern region expansion, now I believe that from the IPO proceeds, you've already paid off the debt, so you're net debt free. How do you plan to fund these capex expansions?
We have roughly around, if you include the general corporate expense and the acquisition funding, around 200 crores is there that we can still utilize for the acquisition. But in the long run, yes, because we are debt free, there's always room to take a little debt from in the long run to expand those. But the acquisition funding that we have from the IPO, we would be also utilizing that for more acquisitions.
So fair point, Mr. Tyagi. I want to try and understand where does the bed count go? FY25, FY26, FY27. Currently at around 1400 odd beds, you've acquired the 200 bed Fidelis Hospital in Faridabad. And over the medium to long term, as I did mention, year-wise, do you have some kind of a, at least a ballpark as to where the bed capacity will be at?
So at the time of listing, that is pre the Faridabad acquisition, we were 1405 beds. And our target is in 3 years' time. So roughly around financial year 27, we would be 2,800 to 3,000 beds. So that includes both the organic expansion as well as the acquisition of new hospitals. We have already acquired one this fiscal. In the next financial year, we are also acquiring one more hospital. So this is our target. So 2,800 to 3,000 beds in 3 years' time.
Okay, and with respect to your medical tourism, what are your plans with respect to that, let's say in FY25-26, and is this more margin accretive?
Definitely, we feel international medical tourism is going to a big hub, especially for the cities that we are present. So the city of Greater Noida is coming up with Asia's largest international airport, that is the Jewar Airport. And that airport is going to take off its first international flight this year itself. We feel, you know, how the cities of Gurgaon have benefited with the proximity to Delhi airport. Noida having Asia's largest international airport will become a hub for medical tourism. We already have tied up with certain governments there and certain facilitator base to expand our international patients. We are already getting decent amount of volumes in terms of the transplant. So the kidney transplants that we've performed, more than 70% patients are international patients when you talk about these high-end treatments. So we feel that also the margins are higher there, and not just the margins, the average revenue per occupied bed is higher when it comes to international patients. So we feel our RPOP is also bound to increase with the more share of international patients that will flood the city in the coming years ahead.
Understood, Mr. Tyagi. Now, on RPOP itself, I want to try and understand which is average revenue per operating bed or per occupied bed. Let me try and understand where this number goes given all the expansions that you're making. They are in a slightly different geography as well. Does that mean that your ARPOB number will come off? Will you look to maintain that over the medium term? What's the thought process on that count? And therefore, what kind of effect will that have on margins? Because your margins have consistently been solid. Will this expansion mean that margins will take a bit of a knock temporarily?
So as far as RPOP is concerned, we feel that it will not just sustain but also grow over the course of next couple of years. If you look at our latest Q3 results, our RPOP has not just grown year on year, but also quarter on quarter. We have shown good growth, and that is coming likely more largely because of this case mix changing. So as we are moving towards super specialized treatments of our share of cardiology, oncology, these treatments are increasing, and as well as the international patients and transplant program I talked about. So RPOP is increasing, and we feel that with a similar trend, RPOP is bound to increase for the years ahead. When it comes to margins, even though we are acquiring new hospitals, a lot of brownfield and greenfield expansions we are doing, we feel that margins will also be sustainable. That is, if you see, the reason is pretty much clear that there's so much organic expansion that is still left in terms of occupancy is concerned. So we feel that our hospitals of Greater Noida and Noida Extension still have a long way to go before they reach optimized levels of occupancy. So we feel somewhere around Noida Extension, which is close to 50-55% occupancy, and Greater Noida 60-65% occupancy. The occupancy can go much higher there. It can touch the levels of 75%. So we feel because our existing hospitals growing in occupancy, the margins for the overall group will also be sustainable.
Right, Mr. Tyagi. So that was Mr. Tyagi from Yatharth Hospital, who has guided us that the occupancy level can go up to 75% and margins will remain sustainable. Now, moving on, sources say that both SEBI and IRDAI are well aware of PNB MetLife's ULIP that the company has launched as small cap fund. Alex Matthew, who broke this story, joins us now.
Hey, thanks so much, Mahima, for setting that up for me. Essentially, this relates to a product that was launched by PNB Met Life Insurance. And this is essentially a ULIP, which is a unit-linked insurance product. Now, this is something that combines both life insurance as well as investments. But it's been launched under the label of PNB MetLife Small Cap Fund, which to some investors might be a little confusing because most mutual fund schemes in the small cap category are launched as small cap funds. This is essentially what it means to be true to label. Now, there are two different regulators that govern these two entities, right? You have the IRDAI, which is the insurance regulator, which governs PNB MetLife, and you have the Securities and Exchange Board of India, which regulates the mutual fund industry. The potential for mis-selling for something like this, which is labeled as a small cap fund, exists. So sources have actually told NDTV Profit that both the regulators, SEBI as well as IRDAI, are well aware of this issue, and in fact there is complete understanding about this particular issue, and in fact beyond that there is expected to be some action taken by the insurance regulator to curb any potential mis-selling in the space. Whether or not it is an individual action taken against PNB MetLife is not clear right now, or whether there is a direction given to the industry as a whole. This is not the first time that something like this has occurred. In fact, more than a decade back, this used to occur quite prominently, and in fact at that time the regulators had stepped in to curb it. So let's see how that pans out.
Absolutely, Alex. You know, given the way in which regulators clamp down on things like this, it's likely that this break that you've made, Alex, should also face a similar kind of a reaction. We'll wait for that, of course, and keep our viewers updated with regard to that. Time to slip into a very short break. On the other side, we'll be speaking with KRBL CFO Ashish Jain about the company's business outlook. Of course, stay tuned to NDTV Profit for that exclusive chat.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen
to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So happy.
Welcome back. You're watching the Small and Mid Cap Show. KRBL, which is the India's largest exporter of branded basmati rice, is in focus, and we have with us Mr. Ashish Jain, CFO of KRBL. Well, welcome, Mr. Ashish, on the show. My first question to you would be: the export revenues have declined by 47%. What are the reasons behind this, and do you expect this trend to continue, or is there any change in mix that we can expect here?
Sure, happy to be here. On exports, really the trend that you see in export sales is an outcome of some distribution challenges that we are facing in one of the key markets, which is Saudi Arabia. Which is really the reason why the sales are lower as compared to the same period last year. However, we are in the process of addressing this in terms of normalizing the distribution there. Once that is done, we fully hope that the revenue will restore itself fairly quickly. And we are confident about this because our brand, which is India Gate, enjoys a lot of customer recall in this market. And so once the availability is fixed, we should see the consumers coming back for consumption.
Understood, sir. Harsh also joining in. Want to understand where does therefore the mix go between export and domestic if this gets fixed? That's one. Point number two, therefore, where does margin go? Because your margins have taken a bit of a knock, especially on the gross margin side of things.
Yeah, so if you look at the long-term track record of KRBL, both export and domestic segments have typically been 50-50. I mean, in a year or so, it does vary. So over the longer term, we expect the mix to get restored. Now, on margins, there are a couple of factors that we need to keep in mind. One is that exports make a strong contribution to the margin because the realization tends to be higher in the international markets. However, that also needs to be seen along with the fact that paddy prices have gone up. Paddy, as you know, is the key raw material for rice. And the last 2 seasons, I have seen paddy prices going up. And that's primarily because of strong demand for basmati. So both these factors will play out to determine the margins. However, over the longer term, we expect the margin to restore back to the historical averages.
Right. Also, regarding your expansion project in Karnataka and Madhya Pradesh, where are these right now, and what kind of contribution are you expecting in terms of top line and bottom line from these projects?
Sure.
Yeah, so as you know, we have a strategy to expand our presence in the non-basmati space. We feel that that's a very attractive space as there's hardly any national brand presence there. The objective behind a Karnataka plant is to really enable local capability around the non-basmati space, specifically Sona Masuri brand of rice. Now, on that, the land has been acquired, various other formalities are underway. So overall, the project is on plan. We had announced some time back that we are taking expansion across 3 regions. One is Gujarat, where the plant has been commissioned. The second is Karnataka, the one which I just discussed. And the third is an MP. Together, these 3 projects, once they are stable state, should add anything between 300 to 400 crores in revenue.
Sure. Ashish, just trying to understand from a pain perspective, Q4 will also see a margin contraction versus Q3, or do you expect a bit of a bounce back on margins? I'm just trying to understand from a trajectory perspective, where does the recovery start from, both on the Saudi Arabia side of things as well as on the gross margin side of things?
Sure. So, see, that's a fair question. We typically don't get into guidance. However, I think there are 2 key drivers of margins in the fourth quarter. One is, the extent of recovery on the export side. So while we are, we are making efforts, but it depends upon the revenue that we are able to clock in the quarter. And the second, of course, is the product mix, both on the export and the domestic side. So I would really watch these 2 factors to see how the quarter plays out.
Right. So thank you so much, Mr. Ashish, for being with us on this show at NDTV Profit. It was a pleasure speaking with you. Now, as we wrap up, we'll leave with you some opinion from Mr. Venu Gopal of Stanford C. Bernstein on what the investors should keep in mind while investing in the small and mid-cap space. Listen in and thanks for watching.
The importance of Smid as a area to invest and look for opportunities is increasing every year. Last couple of years, it was primarily about retail investors in domestic mutual funds, which are again funded by retail. Internationally, it used to be sort of a very niche process. Certain funds would probably look at alpha by investing in some set of mid caps, right? We are actually starting to hear pretty tremendous focus from a lot of funds globally on seeking and trying to understand the mid cap opportunity. But I have always been of the view that it is very difficult to invest at a broad-based basis in Smid if you don't really have capability. So first thing you need to build is hire people, build capability, understand stocks, and that is how bottom-up investing works. Sitting somewhere in the US and having somebody who's done China for 20 years, you suddenly want to invest in Smids, does not work. It's a recipe for disaster because Smids can be very dangerous as well when it comes to bottom-up picking. You have to be very careful about, the business model and governance. Maybe large caps you can scrape through, because what are large caps? Large caps basically were Smids which delivered over time, and that's why it became large caps. So risk element is usually lower, right? So one thing I want to highlight here is we started our India Smid portfolio for the first time ever this year at a hefty Smid valuation, because we really wanted to basically build this portfolio over time, because I think this is the future of India.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Priti Chaudhary. We'll take you through the next half an hour or so of trade. This show is geared up to get you answers to all of your stock related questions. So if you're tuning in, on any one of our social media platforms and use the comment section to send us questions, or in fact, you can send us questions on the WhatsApp number that should be flashing at the bottom of your screen. For now, let's very quickly turn to how the markets are faring, and it's a bit of a muted start to trade in the equity markets here in India, but this is more or less what you're seeing across the globe. You're seeing a bit of a risk-off sentiment playing out globally, and you have the Nifty 50 that's trading very close to the low point of the day, down about 0.4%. And in fact, let's also take a look at the broader markets to see how it's going. It's a little bit of a mixed bag here. So you have the mid-cap index that's trading with cuts of about 0.5%, but you have the small-cap index that's trading more or less flat, but also at the low point of the day. Let's also very quickly take you through the advanced decline ratio, because that will give you a sense of what the market breadth is like, and you have more declines at this stage than advances. That was, of course, a different scenario at the start of trade today. Among the key indices to focus in on, let's look at the top performers. In fact, you have the IT index that's the weakest performer. In fact, most indices are losing ground, but you also have realty as a pack that's down in trade today, down about 0.9%, and you have metals also that are underperforming. The only two sectors that are doing reasonably okay or that are holding out in green territory are the energy and the media index. Lots happening in those spaces as well. But let's jump straight into the focus for the day, and Smriti's got the focus. It is Asian Paints, Smriti.
And it is the biggest loser on the Nifty 50 today. Now, this comes on the back of Grasim launching its paint business, and they've launched it in such a big way that it has become, now we're yet to see this sort of intense competition in the paints markets. Just to give you an understanding of what the brokerages are thinking of at this point, it's kind of a mixed bag out there. So, for example, there's Jeffries that says that on the paints business, it's given an underperform rating to Asian Paints with a target price of 2,500. Then Paints has never seen such a massive capacity build up. Now, in one of the notes I read that Grasim's capacity, Alex, is combined capacity of its second, third and fourth player in the paints business. So that's how big Grasim's paints capacity will be like. Now, if you look at CLSA, it says it has also lowered its target price from 3,017 to 2,425. It says that in the shorter term, it will affect the growth and the margins for the Asian Paints business. But in the longer term, it will probably continue to perform and continue to grow. Now, however, there'll be intense competition in terms of retaining dealers and customers. It has cut the FY26 estimates of to 8% growth, and for 26 to 10%. Now, ROE is also supposed to fall to 26.9% in FY26 from 32.7% in FY24. That's pretty much the picture, not a rosy picture for Asian Paints. Now, I'll bring in our guests for today. We have Gaurang Shah of Geo Financial Services and Rajesh Palvia of Axis Securities joining in. Welcome to both of you, and thanks for taking the time out.
Thank you.
Now, Gaurang, I'll come to you on Asian Paints. Intense competition from Grasim, and we've seen brokerages pretty much not as constructive on Asian Paints as they were before. What's your view on this?
Thank you, Smriti, for having me on the show, and morning to all of you all. So before I comment on Asian Paints, because of this new competition in form of Grasim that has entered the market, let me give you two very recent instances, similar but a different sector. I think you and Alex will definitely remember that Eicher Motor was under pressure because of Royal Enfield motorcycle. There were two new entrants. One was in form of Bajaj Triumph, and the other was in form of Hero Harley. They launched 400 and 440cc motorcycles in that segment where there was huge dominance of Royal Enfield RE motorcycles, which is manufactured by Eicher Motors. Stock got hammered from 3,500 to 3,200 or thereabouts, and then the stock has recovered. Then there was a new IPO from Tata Group after decades called Tata Technologies. KPIT Technologies got hammered because this new listing was happening. It went to 1,200 or below and has recovered. What I'm trying to say, Smriti, is that competition, new entrant coming in any sector is always very good, at least for the consumers like you and me, because it brings in fair pricing and better products at every level. India is a huge market for relevant sectors, whether it is going to be paint, whether it is going to be cement, and even cement. When Adani entered cement, most of the cement companies got hammered because everybody thought that it's going to be a big bang competition and market share is going to be lost. So we fundamentally, from a long-term point of view, we are still maintaining our buy call on Asian Paints. Our targets are somewhere close to about 3,300. News-based knee-jerk reaction like 4% down today should not nervous you in terms of your long-term investment. In case if you are willing to buy it and waiting for an opportunity like this to come through, I think it's a great opportunity. Paint sector is directly associated with real estate sector as far as new order market is concerned. And, people do get their homes renovated and painted again. That's also a reorder or replacement market, as we call it, which is going to be huge. Asian Paints is not only present in India, but it's got its operations in overseas market also. Knee-jerk reaction like this should not dampen the spirits of long-term investors.
Fair point. It has, in fact, over the year-to-date period, lost quite a bit of ground. So, Gaurang, what you're saying in terms of a buying or accumulation opportunity perhaps exists for this counter on the fundamentals. Let's jump straight into the questions. We've got the first one coming in from Ved. Ved is writing in from Hyderabad and asking about Suzlon. Now, he bought it at a time when it was a penny stock, but it isn't a penny stock anymore. In fact, he bought at sub 4 levels and he's got as many as 4,000 shares. So he's making quite a bit of money on this one. The question, Rajesh, is to you, whether he should hold or exit completely, or should he partially exit his holding?
Morning. So after a long consolidation, stock managed to give breakout on monthly as well as on the yearly chart. Looking at the overall structure for medium-term perspective, it's on the bullish side as the stock is comfortably holding about 39 mark. So till the stock is holding about 39, I think he should hold the position as the overall structure for medium-term is on the bullish side, and we believe that once the stock manages to cross above 47, 48 mark, then possibly this rally can extend towards 58 to 65 kind of level also. So hold the position with stop loss of 39.
All right. Next up, we have a question from Vijaya from Bangalore, and they're talking about NHPC. They bought at slightly elevated levels of 107. It's currently trading around 92 levels. Gaurang, this has been a multi-bagger. We've seen the run-up in PSU stocks, but do you think there's more of an upside from a longer-term perspective in NHPC, or should you maybe get out of the stock?
So, Smriti, I'll comment on the sector that is power generation. And post-listing, there were two stocks, NHPC and SJVN. They languished below the IPO price for a very, very long period of time. Post this listing and of course the changes that the government made in terms of power generation sector, all companies which are associated with power generation where we have coverage, likes of NTPC, Tata Power, CSE, have moved up to a very decent level, and so is the case for NHPC and SJVN. Now, no specific comments in terms of buy, sell and hold, but the future for power generating, power transmission and power equipment looks very, very strong because the government has planned huge capex to the tune of almost 500 gigawatts in the next 3 to 5 years. And most of that is going to be solar and wind. So all power generating companies are going to get benefited because of that. Won't comment specific because we don't have coverage on NHPC.
Okay, so there is another question coming in from Pranay, and he's asking about IREDA, which is listed not too long back, and NTPC also in the power space, of course. So this is thermal power generation, right? He's bought both, and he says that he's seeing a loss on this. I'm guessing that he didn't get in at IPO level. Gaurang, what would you say about the fundamentals of these two counters, though?
IREDA is more of a company which finances renewable power plants like solar and wind, Alex. We had a subscribe recommendation from a long-term point of view on IREDA, but that floor of IPO was 36 rupees. Correct me if I'm wrong, Alex. From that level, the stock went up to 200 rupees, and now it has corrected to somewhere close to about 150. I don't know what level this gentleman has invested in, but in case if it is from a long-term point of view,
I have a clarification. In fact, while I was asking you the question, I asked him, and he has said that he's bought at levels of 168 for IREDA. The stock is currently at a lower circuit today, and it's trading at around 150. And NTPC he has bought at levels of 344. So how does that change your perspective?
So I am assuming that these investments are from a long-term point of view. So when IREDA 5% down today, maybe it can possibly come down because in terms of valuation, it looks a little bit stretched. Even at current levels, though it has corrected from 200 rupees per piece IREDA, Alex. Maybe if it comes down, if he's got investable amount, depending upon that IPO note that we had covered, he can possibly add at lower levels from a long-term point of view. NTPC too, Alex, we have a fundamental coverage from a long-term point of view. So don't get disheartened if you bought good stocks, even if it is at an elevated level. Provided you have a long-term time horizon, I don't think it's going to have any kind of huge meaningful impact on your capital that you had invested.
All right. Next up, we have a question from Sadanand, and they're talking about Tech Mahindra. They say they've bought 1 lakh shares and they're sitting on an 18% profit on the stock. Now, from a long-term perspective, would you suggest Tech Mahindra, or they're saying they should they switch to Intellect Design? Gaurang, this is for the longer term.
Yeah, so I'm sure I wouldn't get the level at which this investment was made, Smriti, but fundamentally we have coverage on Tech Mahindra. One of those companies which had a huge dominance of one large player, that is BT. That dominance has now become a thing of the past, and they have added some very decent large clients to their client list. In terms of performance of IT sector, Smriti, we believe starting 1st April 24, that is the new financial year, slowly, steadily, earnings are going to get improved for the IT sector, and that might possibly translate into re-rating of some of the stocks. So if you are in for a long-term point of view, Tech Mahindra is what we would recommend to hold.
We've got Parveen, who bought Larsen & Toubro about 3 years back at levels of 1,100. Quite the attractive level to buy at, because the stock is currently trading just shy of 3,460. In fact, it hit a high of 3,708 just about a month or so ago, and it has seen a bit of a dip since then. She's looking to hold for another 6 months. She's got 900 shares. Rajesh, the question is, should she hold on? Should she book some profits? What level should she watch out for?
The overall structure for INT is on the bullish side, though there was some corrective moves since last couple of weeks. But still, if we analyze the near-term to short-term structure, stock is now again holding above to 50-day moving average and now trying to penetrate 20-day moving average also. Looking at the near-term structure, we believe that till the stock is holding above 3,300 mark, I think there is no as such worry in terms of near-term trend. Long-term trend is on the bullish side, so I think if they can hold it for a longer-term perspective, there is no as such worry. I think that trend is likely to remain on the bullish side, and possible target we can see towards 3,600, 3,700 also for L&T. But for near-term perspective, I think they can trail now a stop loss towards 3,300. Till these levels are intact, they can hold down their position. On the higher side, once the stock manages to cross above 3,550, possible target we can see on towards 3,600 to 3,700 also on the coming months.
All right, we'll slip into a short break, and after the break, we'll take all your questions. So keep writing to us. See you on the other side.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk appetite.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're watching Ask Profit. Let's quickly dive into the questions. This one's coming from, this one's on South Indian Bank, and this is from Karthik from Visakhapatnam. Now they're talking about they already have shares and they bought at a price of 28 per piece. Now there's a rights issue. Sorry, there's a rights issue that's coming out for South Indian Bank, and they want to know if they should subscribe to it. Now, Gaurang, from what I understand, the rights issue is at 22 rupees per share. So would you suggest them buying into this?
This is South Indian Bank that we're talking about?
Yes.
So, I mean, again, from a long-term point of view, this is one bank, Smriti, that was a laggard between 15 and 20 rupees. Frustrated a lot of investors, but post the earnings that were seen in Q2 and Q3, there has been a meaningful turnaround. We have a positive coverage on South Indian Bank from a long-term point of view. So if you want to go for this issue from a long-term point of view, we would recommend to do that.
Fair point. We've got Parambrata, who's writing in asking about two frontline companies, HDFC Bank as well as ITC, from a medium-term perspective. I'm not really sure what that is, but I would assume that this is more than a year. Gaurang, from that perspective, would you suggest a fresh entry on the fundamentals?
Well, I would definitely. HDFC has been one of those, testing times, Alex. Post the merger, we all were excited on the street. Then there was some report on margin pressure. Stock corrected. There was a little bit of downward commentary in terms of margins from the management side post the third quarter numbers. But let us not, wipe out the entire history of HDFC Bank, being the short-term issues or speed breakers. We are maintaining a positive coverage on HDFC Bank and a target of about 2,000 rupees from a long-term point of view. So and so forth for ITC. Again, one of those FMCG companies, a large cap, but was in a hibernation for a pretty long period of time, has come out of that. Then there was a news flow about British American Tobacco wanting to offload the stake. The hotel business demerger didn't go down well. Stock has corrected. We are maintaining targets of 465 to 470 and 90C from a long-term point of view.
Next up, we're talking about Nestle. Now, Swaroop has written to us on YouTube and they want to buy into the stock. From a longer term perspective, we'll take a short term perspective on this from a point of view that if this is a good time to enter the stock or should he wait. But first, Gaurang, tell us from the longer term perspective for Nestle.
Again, a company, an MNC company, Smriti, who's been in India for a pretty long period of time, multi-decades, has got some real strong, powerful brands and has dominance in possibly across product offering. From a long-term point of view, yes, we would advise to invest in Nestle.
Right. And Rajesh, what are the levels that you would suggest, buying levels for Nestle?
So overall, stock structure is in bullish side. Series of higher top, higher bottom formation on daily, weekly chart time frame that clearly shows there is a sustained buying action is taking place in the stock. We have seen some bit of correction in last couple of months, but looking at the near-term, short-term structure, 2400, 2450 is the right level again to buy and accumulate this stock. Stock is has formed a support base around those levels, and some pullback action is taking place. So I think if you get any opportunity towards 2450, that's the attractive level again to re-enter in this stock. On the higher side, once stock process about 2650, then possible target we can see towards 2800 to 2900 also. Overall structure is bullish, so buy and dip should be your strategy. 2450 is the right level again to re-enter in the stock.
Okay, fair point. Naman Deora from Kolkata is asking this next question, and a couple of counters here, Gaurang, for you to consider. One is Tata Steel and the other is IRB Infra. Now, I'm looking the year to date, and this is 2024 for IRB, and it's up quite significantly in that time frame. He's asking which of these two, between Tata Steel and IRB, is the better option for an SIP kind of an approach to accumulate?
So, Alex, between Tata Steel and IRB, well, I'll keep my comments restricted to Tata Steel because that is where we have a coverage. On IRB, we don't have a coverage, but I can give him an option in terms of alternative investment idea in construction infrastructure. So, Tata Steel, yes, we have a fundamental coverage. And on the infra side, we like names like NCC Limited, PNC Infra, and KNR Constructions. I would suggest instead of putting all his money into one particular sector or one company, he can go 50-50. Select any of these three companies that I have mentioned in infra, and definitely Tata Steel in metals.
All right. Next up, we have a question from Kevin. They've bought 100 shares of UPL at an average price of 630, so slightly elevated levels, Rajesh. But we've seen a downturn in the stock. Even if you look at the last 1 year performance, it's down about 31%. Now, Kevin wants to know if he should maybe get out of the stock if there's not a substantial upside in this.
Yes, Pratik, clearly stock is in downtrend. Stock is moving in falling channel, downsloping channel in monthly chart. That clearly shows that, medium-term structure is also bearish. Stock is trading below to all its long-term, short-term moving averages, series of lower top, lower bottom formation. So these all aiding that, on a technical ground, yes, stock is in bearish trend, and we may see, whatever pullbacks we are getting in this stock is meeting to the supply pressure on higher side. Until the stock not crosses above 550, 560 zone, it may remain under pressure only. Looking at the near-term structure, if it breaks below 470 mark, then possible downside we can see towards 450, 440 also. So I think if you get any opportunity in pullback towards 550 kind of zone, you should try to exit from this stock as the trend is still in the weaker side. Only if it crosses above 600 mark, then only the trend will turn on the bullish side. Until we may see a supply pressure, whatever pullbacks we are getting in the near term as well as in the short term.
Okay, Rajesh, another one for you. This one's on Alok Industries. And we've got Selva Pandi from Madurai, Tamil Nadu, who's asking about this counter. He's bought at levels of 16.5. The stock is currently trading very close to the 30 rupee mark. He's asking whether to book partial profits or to hold for upside.
So I think my advice would be to trail your stop loss now to around 28 rupees. That's the stop loss at this moment to book partial profit. If it breaks below 28, then book some partial profit, because if we look at the near-term structure, some consolidation took place and now again stock broke out of its consolidation range. So 28 should be your stop loss to take a view of partial profit booking. On the higher side, of if stocks crosses above 32, then possible up move we can see towards 36, 38 also. Though a stock has rallied, some corrective move is taking place. So we believe that if it's not break below 28, possible upside we can see towards 36 also in this stock.
All right. That's all the time we have on this edition of Ask Profit. Thank you, Rajesh and Gaurang, for joining and for answering so many questions for us. And viewers, if we were not able to take your questions today, we'll definitely try and take them tomorrow. So join us tomorrow at 11:30 a.m. But for now, there's lots more coming up on NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the portfolio manager.
Markets continue to trade in red, broader markets fall. Sensex trades below 72,800. Nifty stands at the 22,100 levels. Sea of red across sectors, with the Nifty IT and realty coming out as top sectoral losers. On the other hand, media emerges as the only gainer on sectoral indices today. Brokerages maintain a bearish outlook for Asian Paints. Jefferies rates the stock a high conviction underperform. Stock drops 4%. CLSA, though, also negative on the stock. Walt Disney and RIL set to sign a binding pact to merge their media operations in India. RIL to own at least 61% in the merged entity. That's a Bloomberg report. US FDA sees a significant increase in inspections over the last year, says India Director Sarah McKellen. She says data integrity is a leading concern. That's an NDTV Profit exclusive. Welcome. You're watching Hot Money here on NDTV Profit. I'm Harsh Saita. Quick check on where markets are at. You're largely seeing the benchmark trading in the red. Pretty much that's been the story through the day, but we're just off the day's lows as we speak. Around 0.5% lower on the Nifty 50. In terms of the contributors, if you can pull that up on charts, what we largely see as a trend playing out, L&T positive, but outside of that, look at the IT pack. Infi TCS leading the losses along with Reliance, and you also have an Asian Paints contributing significantly to the losers. Gainers, nothing meaningful, honestly. L&T gaining well in trade today, but outside of that, a little bit of contribution from an HDFC Bank and a Power Grid, but outside of that, it's been largely muted among the gainers. Overall, in terms of the market breadth, and let's have the advanced decline ratio there. What we're seeing largely is the declines firmly taking hold of the market. The bears seem to be in trumps at the moment, 1,200 to 800 in favor of the decline. So the market breadth also looking slightly weak in trade today. We have with us Sharmila Joshi of sharmilajoshi.com to speak to us about what's happening in markets, as well as speak about some specific stocks. Welcome to Hot Money and NDTV Profit, Sharmila. Right, let me first talk about the first stock. Nifty 50 stock, Asian Paints, is the first stock we've taken on focus. In terms of where brokerages paint their brush on the stock itself, we have plenty of brokerages coming with a slew of reports, but the latest ones being a positive from Macquarie and a negative from CLSA, and that's probably what is keeping the stock buzzing in trade today as well. Mahima with the key takeaways. Mahima.
Right, Harsh. So as you rightly mentioned, it's a mix of bull versus bear. CLSA has downgraded Asian Paints to sell, and a target price they've lowered from 3017 to 2425. Now they're saying that Birla Opus remains promising, and it can add incremental 40% to the industry capacity. They're saying that industry to see significant increase in competition, especially for the retail dealers and consumers. So near-term growth and margins might not be immune to this competition pressure. Now they're also saying that they assume that Asian Paints sees some kind of slowdown growth in the near term, but no significant market share loss to Birla Opus. Now they also say that it may maintain long-term market position. This is for Grasim again, and the ROE will fall to 26.9% in FY26 from 32.7% in FY24. Now talking about Macquarie, they have a completely opposite outlook for Asian Paints. They're saying that Asian Paints is their preferred preferred pick in India paints and adhesives. They've maintained outperform on Asian Paints with a target price of 4,000. They expect that Asian Paints will be less affected by this new entrant, Grasim. And they're saying that sharp demand moderation remains downside risk to near-term sales growth. So this is the overall outlook of what brokerages are saying about Asian Paints.
Thanks so much for that, Mahima. Of course, divergent takes coming in with regard to Asian Paints. The stock falling 4% in trade today. But let me quickly take it to Sharmila on her views with regard to this one. Sharmila, plenty happening. One, on the pricing front, your views, what you feel is going to be playing out over the next maybe 4 to 5 quarters, as well as going forward. Second, can Asian Paints maintain its monopoly status?
Yes, so I think this entry from Birlas is probably the latest, but I think over the last couple of years, we've had a number of new entrants in the paint space. And this has been troublesome for Asian Paints simply because I think that apart from the monopoly, I think they also, in terms of valuations, got a premium valuation. So, for instance, if you look at the other paint companies, they've also all done well in terms of stock market performance, whether it's a Berger, whether it's a Kansai Nerolac, etc. But in terms of valuations, Asian Paints always got a premium valuation, and that now seems to be at risk, or has been at risk over the last couple of years. I would say, in fact, before this announcement, we had just seen some sort of recovery in the prices, backed by the fact that results had been decent, etc. And now, on the back of this news, I think once again all those concerns will rear their head. So I think that's it basically. I think that I would be neutral on the stock and not negative because I don't really see. I don't really envisage a scenario where you would really see any drastic drop in revenue or earnings because obviously it's an expanding market, which is why players are entering the market. But yes, I think their monopoly as well as the premium valuations that they were getting, those would be either under pressure or there could be some question mark on that. So perhaps you would may not get great returns from Asian Paints in the near term. But as I said, I'm not negative on the stock. I think as you said, over the next 3-4 quarters, you need to track what's happening in the industry and what's happening to numbers and margins, etc.
Understood. Sharmila, quick question on this one, just a follow-up. Would you therefore buy on dips here on an Asian Paints? Say it falls 10-15% over the next maybe couple of weeks. Would therefore this be a buy on dips candidate for you?
Yes, I think that could be a great strategy because let's not forget that we are also in a market that seems to have become a little volatile. And if you were to see corrections deepen on the market, then obviously I think a stock like this could see greater correction simply because the news flow is also not exactly supportive. So in that case, if you were to get that kind of a cut, then I think it makes great sense to put it on your buy list and start incrementally buying into the stock.
Very interesting. I'll switch focus from one buzzer to another. The other one which is buzzing in trade on the upside rather is PNB Housing. A Morgan Stanley note which has come through, and I find this as a very interesting note because it gives a 40% upside, near 40% upside to PNB Housing even now. What they are seeming, and they've given a target price of 970 rupees a piece on this one. What they are seeming to suggest is one, they are expecting that there is going to be a solid growth potential here, given that rates probably will start to come off in this calendar year. That should also aid margins, profitability for someone like a PNB Housing Finance. And the other piece that the note talks about is the way in which asset quality will continue to get better. And valuations look extremely attractive at roughly 1.1 times FY25 BVPS, which is book value per share for PNB Housing, which Morgan Stanley has, as per Morgan Stanley estimates, looks quite decently priced, and 10 times FY25 EPS as well, which again looks very, very reasonable for a housing financier. Now the stock is up and away in trade. It's up roughly 3% on an otherwise very difficult day of trade, today at least, and therefore begs the question as to whether PNB Housing could, and of course we'll take Sharmila's views on this, could be a potential 20-30% upside kind of a stock easy or not. Morgan Stanley calls it a high probability 40%, which is 970 kind of target price. Sharmila, your views?
I would tend to agree, and the reasons are as you have outlined. All of us know that we are now, even I think the latest RBI meet, sort of seemed to suggest that, they didn't really change their language, and you would expect maybe a little later in the year or in the next meeting also perhaps, you could start seeing rate cuts. And let's not forget that real estate as a sector, I think if you were to look at the stock prices, they are almost, it's, the sector is doing extremely well, and the stock prices are nearly doubled from where they were about a year ago. And I think that a lot of the growth that we are going to see in the sector that like a housing finance company caters to is going to come in the tier 2 and tier 3 cities where PNB Housing Finance is positioned quite nicely. So given everything, given the fact that the sector is going to see, is going to continue to see a resurgence, sector 2 sector, the smaller towns are going to see, to my mind, a better performance than the metro cities. And the fact that even where they stand in terms of valuations, the stock looks reasonable. I think you can easily expect the kind of returns that are being suggested. Of course, I think this is a sort of a more long-term story that will play out over the next 12 to 18 months. But I would broadly agree with the with the thought that you could see a 35-40% return from current prices.
Right, point taken. When I'm looking at valuation, Sharmila, something like an LIC Housing Finance within the same and similar kind of space, also looking attractive. Something like a Canfin Homes, of course, has its own set of problems in terms of governance, but otherwise looking attractive. All NBFCs likely to continue to do well in a cycle where rates will come off. Any other ones which you would want to keep on your shopping basket? Please, if you can keep this very quick.
Yes, I think what the other name is what you suggested, LIC Housing, because I think as you said that the region, the kind of markets that they're catering to are similar, and if I'm expecting the kind of growth that I see in real estate as a sector, then I think it makes sense to be positioned in both these.
Point taken. Time to slip into a very short break. More on the other side. We'll continue to take questions, focus on some specific stocks, give you some views with regard to some stocks which are buzzing as well. Stay tuned to NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit.
Welcome back. You're watching Hot Money this Monday afternoon on NDTV Profit. This time around, several stocks buzzing on the back of order wins this Monday morning. We have Varsha to give us details on 2 of them, Skipper as well as Transformers and Rectifiers India. Varsha, Power Grid coming out with a slew of capex, and it seems some companies are benefiting from that.
So yes, Harsh, as you rightly said, so starting with Skipper Limited, so Skipper is up almost 6% in trade today. Now this on the back of order win of 737 crore from Power Grid Corporation. Now this is for contract for design, supply, construction of 765 KL transmission line project. Now if you see year to date order intake exceeds rupees 3,900 crores. Also order book as on 31st December stands at 5,779 crore with a revenue visibility of next 3 to 4 years, and they are expecting to move to lower tax regime next year, reducing tax rate to 25% versus 33% this year. And if you see next, we have Transformers and Rectifiers India, which is up almost 5%. Now this is again on the back of order win of 232 crore from Power Grid Corp for auto transformers. Now this needs to be executed within next 21 months. Some of the key highlights, if you see that unexecuted order book stands at 2,572 crore as on December 2023. They are targeting a revenue of around 3,000 crores by FY25, and also EBITDA margins of around 18 to 19% is targeted by FY25.
Well, thank you so much for all of that perspective, Varsha. Let me though take it across to Sharmila. Sharmila, your views with regard to some of these power anch related stocks. Power Grid itself has done extraordinarily well over the last maybe 6 to 7 months. If I'm looking at just the way in which that move has happened, almost it's gone from that sub 160 kind of mark. Of course, there was a bonus in the middle, etc. But Power Grid over the last year or so has delivered a terrific, set of numbers for a Nifty 50 counter. There you go, 12-month returns of nearly 80%. So within this space, Sharmila, talk to us about these 2 in specific and any others which you're finding interesting.
Yes, so not just specifically power, but I think the entire capital goods space is very interesting because you have a whole, irrespective of the company, if you were to look at the kind of order wins that they've had or the kind of orders that they're talking about, that would, sort of tell you the story. I mean, even a company as the size of a Larsen and Toubro, about a couple of months back said that they were going to get very significantly large orders. So that's the sort of the top end of the order flow. And I think, then you have even all the mid-size, small-size companies in the infra power space getting good orders over the last 6 odd months, 6 to 8 odd months. And again, I think that if you were to look at the kind of picture that is getting painted when you hear of the demand for power going up and the efforts to get into a lot of renewable sources and to also tap into your thermal energy and hydroelectric projects, etc., that will give you like a sense of what is really happening in the space. And according to me, yes, these companies definitely, I think Skipper as well as Transformers, probably I prefer Transformers at this point in time like a valuation perspective, but a whole host of companies, I think if you were to see in the ancillary space as well as the actual power space look fairly good to me. In the actual power space, I do like a GSW Energy, Tata Power, and I think, as you said, in the related space, probably Transformers that we were talking of, and maybe even stocks like KEC International, etc.
Got it. Okay, so point taken. I want to also try and quickly cover AMI Organics. Sejuan has bought around 0.67% of this one. Now, typically when someone like Samit Vartak is bullish on a stock like that, it means that possibly some bit of value in this one still left. Sharmila, your views?
So, I've been positive on this stock for a very long period of time, and this entire space has seen correction, and I think that given where these stock prices used to be as to where they were and where they are now, I think it's improved a bit from the sort of price point that I started buying. But I would agree. I think that these are the within the chemical space, you now have to be little more specific as to what you're buying. Because there was a time when anything that had the name chemical attached to it was sort of doing well. Now we are not in that in that kind of, the market is not in that kind of a mood anymore. So you have to be whether it's APIs or specialty chemicals, you need to find your pockets of comfort, and for me that has been AMI Organics. And I to see a fairly a decent uptick from here. My targets are closer to 1500, 1600.
Sure. So considerable upside even seen by Sharmila on this one. But thanks so much for all of those views, Sharmila. We're going to have to let you go on that one. It's been good chatting with you on Hot Money today. Thank you so much for giving us those views. But as we wrap this show, I want to quickly take us through what my colleague Monal did. She caught up with Quadria Capital's Amit Verma on which pharma sector is expected to show considerable growth. Here's a slice of that conversation.
Our core philosophy is betting on specialization and deepening of the verticals. So if I'm going to look at hospitals, I like single specialty hospitals. When I look at pharma, I like single specialty or specialized APIs. I do like CDMOs, but at the end of the day, I still like to bet on people having domain expertise and going deeper. I don't like to build service industries which are pan-Asian. Those look very good on PowerPoints. Finally, healthcare delivery is an individual, localized business. But when I look at life sciences, on the other hand, I want to manufacture in Asia at Asian manufacturing costs, but manufacture for the world. So my theme changes based on what sub-sector segment I'm looking at. And as we go forward, as we talk a bit more, I can throw a bit more light as we go sub-vertical on the other.
I'm going to start off with CDMO. Recently the whole China plus one theme that was being sold is not quite playing out as much, and the sector is not showing as much growth. Even the listed companies that I've been looking at haven't quite been performing as much. So do you believe there's a turnaround in store for these companies?
So I'm a bit biased because we are investors in Akums. which, as you may know, is probably one of the larger CDMO players out here. The past couple of years have been challenging in this space just because of the cost of raw materials, the inflation surrounding it, and the human capital cost continues to grow year on year. And you quite honestly cannot take the cost of manufacturing and pass it along to the customer. There's just too many variables there. But what we are seeing grow now is the scale size of the CDMO industry. I think you are getting rewarded for the quality of the products that you're generating. And for us, we are getting into sub-themes or sub-sectors of manufacturing which we never did before. So overall, there is a manufacturing. CDMO, unfortunately, will never be as attractive or as sexy as the other aspects of life. But at the end of the day, this is bread and butter for what you need for a country. So as long as we are clear that we are going to be the largest in what we do, as diverse in what we can do, but more importantly, start to create sub-verticalization, again the specialization themes that I was discussing with you, I think the CDMO sector will see a turnaround.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit.
Hello and welcome to the Portfolio Manager. I'm Neeraj Shah, and there's a show when we talk to portfolio managers about the portfolio construct in the current times and why is it that they believe this portfolio will be the best way to generate alpha over the respective categories that they are benchmarked against. Our guest today is Vinay Paharia of PGIM, the market stance seems to be that large caps currently offer a better risk reward versus mid caps and small caps. Vinay, great having you. Thanks for taking the time out. Hope all is well.
Hi, Mitch. Thank you for having me on the show.
No, pleasure is entirely ours. So, Vinay, can you tell us what's the portfolio stance and why is this the stance for the overarching portfolio? I believe this is the stance or this is the thinking behind your large cap and mid cap funds that you will be starting off.
Sure. So, Neeraj, there are two broad aspects with which we are looking at constructing portfolio currently. One is very tactical with respect to large caps and mid caps. Large caps in the current market environment are offering superior risk reward payoff simply because the valuations are reasonably attractive, the earnings growth is good, and hence the risk reward seems to be much superior. Whereas mid caps in general are pretty expensive. There, while the earnings growth is far, far higher, the valuations have also seen a material re-rating in the last 1 year or so. Having said that, this entire space consists of a larger number of companies, and hence there is more opportunities to pick from. So generally, we are overweight large caps compared to mid caps in this fund, purely for valuation reasons. Second, and this is much more important and less talked about, I think one broad theme which we are seeing in the last 1 to 2 years is that quality companies and high growth companies have actually underperformed very significantly companies which are actually very poor quality and having weaker growth. And this is something, this is a trend which is sort of unprecedented because in the last 20 years, we have consistently seen good quality and high growth companies delivering superior returns compared to their weaker counterparts. And hence, we are capitalizing on this trend today, having tilted the portfolio significantly towards good quality and high growth companies. And I think these are currently out of favor and offer significantly superior risk reward payoff. I think that's one aspect of the portfolio construct currently.
Mm-hmm. Okay. Now, I think I was looking at your market stance, Vinay, and one of the statements that stood out was how, and you probably referred to that briefly, but many fast-growing quality large businesses are available at reasonable valuation. My question is, that will always be the case, right? Why is it that this time it's different for you to favor these kind of large caps? Because some of these might be quality large businesses at reasonable valuations, but the growth may be cyclical in nature, for example, or unpredictable relative to the, or lower relative to the growth that some of the broader end of the spectrum companies are offering.
Sure. So I think we can always consider a few cases here and there which could exhibit this kind of opportunity. However, when we look at a large number of companies, let's say we analyzed more than 500 companies and looked at the data on a quantitative basis, which removes all sorts of bias and looked at companies which have better than average sales growth and better than average returns on equity, and how have these companies performed relative to everyone else. And when you looked at this data of such companies, it could be anywhere between 150 to 200 companies, the average median return has been significantly weak in the last 1 year, especially compared to any time ever in the past 20 to 25 years. So I think we are talking about big data numbers which are spread over a large number of companies and not biased towards a few companies.
Yeah, which is fine. But okay, I'm trying to understand where is it, for example, that you would look to make exceptions. Are there some base criteria, for example, in the current market context, that a company within a particular ROC or ROE or margin growth or debt levels will or will not be considered?
So Neeraj, one of the aspects which is always a no-go area for us is companies where governance track record is checkered. So I think we will never want to deliberately go in areas where there is weaker governance track record. Second, we would want to avoid businesses which are structurally weak. Like, for example, commodity companies which have no sort of competitive advantage, which are purely, let's say, having a good time right now because the underlying commodities are good. So I think those are kind of businesses which we would want to avoid. Of course, extremely leveraged businesses, extremely weak sort of growth profile, companies which are being disrupted. These are all examples of companies which we will want to avoid.
Don't you miss out the cycles then, Vinay? For example, I mean, if you avoid commodity companies, and let's say if China were to go ahead and give stimulus, and the kind of gains that some of these ferrous companies or non-ferrous companies as well, but base metal companies will give, will be quite stupendous. So why avoid them at all costs?
Yeah, I think the key thing is to look at businesses within those segments which are attractive. Like, for example, a cement sector. Not all cement companies are weak. For example, there are a few companies which have across the cycle earned significantly higher returns on capital compared to everyone else in the peer group because they possess some sort of a competitive advantage. So our objective is not just avoid any particular sector or company, but look at on a bottom-up basis, where are those companies which have some sort of a competitive advantage. If there is no competitive advantage, I would highlight, Neeraj, that look around some of the cyclical companies, their long-term track record on a rolling 3-5 year basis is extremely weak. So when we are attracting long-term investor pools of capital, our objective is to build wealth over a longer period of time. I think many of these can be just like noise in the overall big picture scheme of things.
Okay, let's try and get your sector stance going, Vinay. And amongst things, you've talked about healthcare as being a space which is looking interesting, and please correct me if I'm wrong. So what within this, because your stance and particularly your comments around domestic formulation companies is very, very interesting.
Sure. So I think healthcare is a sector which we are significantly overweight on, and within that we are overweight domestic formulations and healthcare services, particularly hospitals. So domestic formulation companies are more like FMCG companies. These have significantly higher returns on capital. In fact, many of them have negative working capital. They don't require too much of capex to do this business. And over a longer period of time, they have grown at a much faster pace than FMCG companies, driven by new product launches. So I think there is a very clear, interesting case for domestic formulation companies. And secondly, the hospital services space. This is another space where the penetration is growing significantly for organized healthcare providers, driven by high level of penetration for health insurance and also demand for quality healthcare. So I think all of this combined together is the impact is visible in the financials of the listed hospital chains, which are showing very high growth, which are showing high returns on capital, and these companies are also able to deploy capital in newer territories and displaying similar returns on capital on that.
Okay, so that's as far as healthcare goes. Now, lending financials, for the longest time now, people have been grappling with why is it that private banks are not growing. Maybe the supply is high, what have you. But we are entering a period wherein the margins will not be sustainable. If you will, they'll come off as well. Do you think growth will make up and valuations are supportive enough? And is the argument convincing enough for you to stay high overweight on private banks?
In fact, this is a good example of cyclicals, Neeraj. We just had a discussion of some time back on cyclicals, and these are examples of cyclicals where there is some sort of a competitive advantage. So once again, it highlights that we are not against cycles, but we are against investing in companies which do not possess any moat or competitive advantage. Coming back to lending financials, you are right. There could be instances where the margins may be under pressure in the near term, but what we have seen is that most of the companies in this sector are able to pass on most of the cost pressures. They have grown at a better than GDP growth rate, and their returns on equities are on a long run basis clearly higher than 15%. So I think this is an excellent sector to capitalize on India growth story, which is today available at a very attractive valuation, by the way. So I think all of the aspects which we look out for investing in a company from a long range basis are present in many companies in this space.
The other aspect is what you've highlighted in your note around QSRs. I'm just trying to understand how do you juxtapose the valuations that they are trading at vis-a-vis the recent growth trends shown by these companies?
Once again, these are shallow cyclicals. They are currently going through a weaker demand environment, and I think that is a great opportunity to invest in many of these franchisees. Why do I call them as franchisees? Because these are consumer-facing businesses, have very high returns on capital, and clearly they possess very, very strong brands in many cases. Quick service restaurants, for example, as a category is growing at a very fast pace. A lot of these companies are actually adding more and more units of restaurants right now, despite market headwinds, for the simple reason, long term, this is a great opportunity for India. And most of the consumers are actually favoring this sector, coming out and dining more, ordering more, and hence the business environment looks very attractive for most of the companies in this sector over a 3 to 5 year period. Once again, highlights, we are not against investing in companies which are undergoing weakness in their business environment purely on a cyclical basis. So I think QSRs is one of that example. However, auto components is a good example of companies where there is a structural growth story. Most of these companies are actually good exporters. They are developing niche capabilities in electrics mobility side, and I think they are big beneficiaries of China Plus One strategy adopted by many global OEMs, and hence I think this is one more sector which is very attractive within this entire consumer discretionary basket.
Point well noted. Vinay, so good to understand your stance around portfolio construction. Thanks for taking the time out and being with us today on this leg of the Portfolio Manager.
Thank you very much, Neeraj. Happy to be here.
Thank you.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
Hello and welcome to NDTV Profit. I'm Monal Sangvi, and joining us today at the sidelines of Riddhi 2024 is Mr. Vallabh Bansali, the chairman of Enam Holdings. So thank you so much for taking our time to speak to us.
Pleasure.
Where does he see India in the next couple of years, say in the next 5 to 10 years? Do you believe that the vision of entering into the top global economies of the world is achievable?
So we have had good momentum in the last few years. We have had good momentum, generally speaking, over the last 30 years since our real independence, economic freedom started in '91. So we generally had good momentum. Last 10 years or so, we have had particularly good momentum with the percolation of benefits to the poor, some innovation, some bold moves. So it feels good. If we continue with these, more freedoms to our businessmen and more innovation or more partnership between government and this, we could easily be a much larger economy over the next 10 years because we have positive demographics and we have a congenial atmosphere. So that part, I think, is quite visible. Whether, we will continue to grow at 7% or we can push it to 10% or we'll slip to 6%, that is something that you have to watch year on year. But clearly, to me, I think our potential to grow beyond the current 6-7% clearly exists if we do a set of things. So one wishes that, we'll do those set of things.
So I'm going to build on from here and ask you what set of things do you particularly feel will go right? So in terms of macros, what are the key macros that if they were to move would be pushing the country in the right direction?
So firstly, our focus on innovation, that the world is in such a super innovative phase. AI is just one of them. So on many, many areas, innovation is happening. We need to be a lot more innovative. We need to move from a nation of arbitrage, whether it is labor arbitrage or other arbitrages, to being meaningful value creators. The second is, we have a lot of people who still need to be brought up, not only in economic terms, but in confidence and self-respect terms. We need to take a lot of services to them. And so we could, I think Prime Minister Modi, when he used the expression, let's empower the underprivileged, not many people understood it. Because we look at them as underprivileged and say, what will they do? But if that empowerment continues in different ways, it's a very, very enabling phenomenon to happen. So I think a lot more of that has to happen, a lot more innovation has to happen. But the challenge is that, when I have to work on investment and I have to work on distribution at the same time and upliftment, there's a serious fiscal challenge. Now, how do we manage all the triangulating of the three? That invest in innovation, but, do look after the people who need to be looked after, giving them services and so on, and at the same time manage financial discipline. And that financial discipline can happen if I am able to broaden my tax base and so, I need to monitor all these things. If I don't monitor my fiscal discipline, my inflation is just, round the corner. And if that happens, I have challenges. We cannot afford high inflation. So there are global challenges, how we can continue to make those partnerships where we have an advantage and where the world trade is, the roots of world trade, the nature of world trade is changing. And I need to be on the right side of all the deals. So we saw what happened in Ukraine war. We saw what happened in the current Israel war. So there's a lot of turbulence and volatility in the world, and we got to watch all of that also. So those are the few things that you should monitor.
Well, so I think you definitely believe that India does have a bright spot. On that note, thank you so much, viewers, for tuning in. Thank you, sir, for joining us.
Thank you.
All right, that was Vallabh Bansali speaking about the India growth story. Before we wrap up, here's US FDA's India Director, Sarah McMullen, speaking about the quality checks and the evolving standards of the US FDA. Listen in.
We are starting to pick up our inspection pace post-COVID, and in fact, just this past year, we did over 2.5 times the number of surveillance inspections than we did the previous year. So we have seen an increase in terms of compliance from Indian industry over the past year, and a lot of that came right post-COVID. We had a lot of compliance follow-up inspections, and so this past year saw an increase in surveillance inspections and a lowering of the OAI rates of inspections here in India. That being said, I think we do need to address some of the concerns, as you mentioned, specifically surrounding data integrity. We've addressed data integrity issues in India and globally for many years, and it's concerning to see them come up again and to come up in prevalence. And so, for us, when we see significant data integrity issues, it really speaks to quality culture in facilities. And so we really want to see facilities take ownership for creating a quality culture that empowers everybody at every level to make the right decisions about product quality, and also the accountability to follow that up.
So when you talk about data integrity,
the firm 483 is always quite exhaustive and a little difficult to figure. So what exactly do you think are the trigger points when we get a copy of the firm 483? What exactly are the points that we should highlight as maybe a high risk versus a moderate risk? If you could just help us understand how to look at it.
So any breaches in quality are undesirable, right? So whether it be a moderate breach or a significant breach. And I think what you'll see when you look at our 483s is that they're really put in order by level of significance. So as you read through, the most significant items should always be the ones that are listed at the top of the 483. And most of those will be related to the quality system. So if there's any findings relating to the quality system, we take that very seriously because that could also give indications about systemic problems within the quality system.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, Some believe in swiping right. Some run away from risk. Others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all
Markets continue to trade in red. Broader markets fall. Sensex trades below 72,800 while Nifty stands at 22,100 levels. It's a sea of red across sectors, with Nifty, IT and healthcare coming out as top sectoral losers. On the other hand, media and auto emerge as the only gainers. Brokerages maintain a bearish outlook for Asian Paints. Jefferies rates the stock as a high conviction underperforms. Stock drops 4%. Walt Disney and RIL set to sign a binding pact to merge their media operations in India. RIL to own at least 61% in that merged entity. That's a Bloomberg report. US FDA sees a significant increase in the inspections over the last year, says India Director Sarah McMullen. She says data integrity is a leading concern. That's an NDTV Profit exclusive. Hello and welcome. You're watching Market IQ on NDTV Profit. I'm Smriti Chaudhary and we'll take you through some stock-specific action at noon. But first, let's quickly look at how the markets are faring. If you look at the Nifty 50 or the benchmark indices, they're in the red today, some pressure there, 0.4% down. If you look at the sectors, most of the sectors continue to remain in red except Nifty Auto and Nifty Media. Nifty Auto is also pretty much flattish today. Nifty Media is pretty much the gainer in trade today. Other than that, if you look at Nifty IT, that's down 1.5% today. So a lot of weakness there. There's energy also that slightly has turned into green now. Let's look at the contributors in the Nifty 50 and the gainers and the losers there. There you have losers. IT Pack, Infi TCS, that are the biggest losers among the Nifty 50. On the gaining side, we have the likes of L&T, HDFC Bank, Persistent, Power that are the gaining on the Nifty 50 index. If you look at the broader markets, there's a bit of more concern on the Nifty Midcap. That's down 0.6%. However, if you look at the Nifty Small Cap Index, that's pretty much flattish, and that's been the case for the last couple of hours. Let's look at the market breadth as well and where that is at. If you can pull up the chart, yeah. We started off with favoring advances in the morning, but at some point that changed, and now it's heavily the declines are the ones that's favoring in the markets. So that's pretty much the breadth of the market there. But let's talk a little bit about the economy. The Household Consumption Expenditure Survey reveals that the gap between urban and rural household consumption has significantly narrowed. Pallavi joins in to give us the key takeaways of the survey.
Hi, Smriti. So that's right. Over the course of the weekend, we saw an extremely critical data release from the government on the household consumption expenditure. After an extremely long delay, the survey has finally been published, and we are going to take you through some of the takeaways, the key highlights of the survey over the course of the next couple of minutes. So first and foremost, of course, household spending, rural and urban, has more than doubled. Average monthly per capita consumption expenditure in rural areas came in at about 3,773 rupees. That's compared to 6,459 rupees for urban areas. Remember, this is current prices that we're talking about. about, the survey was between August 2022 to July 2023. The last time a similar survey was published was over a decade ago. So clearly there is rising convergence between how much rural households as well as urban households are spending. But at the same time, there's also rising inequality. Let's have a look at those figures. The average monthly per capita consumption expenditure of the bottom 5% was at 1,373 rupees for rural. The top 5%, this number rises to 10,500 rupees. Again, coming to urban areas, for the bottom, the figures at about 2,000 rupees, whereas for the top 5%, this figure is closer to 20,800 rupees. The share of food has gone down in both, and that's especially interesting considering what the state of the rural economy has been. So the survey does sort of, throw up results that do leave a few questions regarding the state of the rural economy. Rural households are spending less on food and are spending more on consumption, possibly in a sign of improving conditions as well as rising urbanization. As I mentioned, discretionary spending has increased in both, especially in rural areas. Packaged foods have grown in importance in both, again, especially in rural areas. Durables, entertainment and medical expenses are among the biggest gainers. They have seen a rise in share. But unfortunately, the share that households spend on education has declined again for both rural as well as urban. Now, that's a little bit of a concerning trend, and some of these trends do warrant closer inspection. Share of spending on cereals again has decreased sharply. Both urban and rural households are spending less on education, as mentioned. Now, from a longer term perspective, this survey is important because it helps set the tone for rebasing CPI and multiple other government indicators. So going forward, we're also going to be looking at how will these findings of this survey translate into the new base for the CPI as and when that happens. So are we going to see lower share, lower weightage of food in urban as well as rural groups? Especially in rural, that's going to be noteworthy because currently we do see a very large chunk, nearly 45% of CPI inflation basket in rural areas. More than that actually comprises of food. We're likely to see that figure go down, but not by so much. For that and more, stay tuned. We're going to be covering this a lot more closely.
Very interesting, Pallavi, there. The survey reveals some very important details about how education, the spending on education has gone down. But let's look at some stock-specific action now. We're talking about Reliance and Disney that signed a binding pact to merge media operations in India. Now, Mahima is joining in to give us more details on this. Mahima, what are the key highlights of the merger that you're picking up on?
Right, Smriti. So as you rightly mentioned, Disney and RRL have decided to merge their media operations in India. Now, if you see, Disney has been mulling options for its India business, and they had recently started to reassess its strategy amidst the intense competition that is going on, and now they've decided and have signed a binding pact to merge their media operations. Now, it is noteworthy here that this is a Bloomberg story that has come out. The merged entity, if you talk about the stake in investment, well, Reliance will hold approximately at least 61% in the merged entity, and total investment that will be made by Reliance will be approximately $1.5 billion. Now, the stake split between the two, that is Disney and Reliance, might change over a course of time, but that is, we'll come to know how as and when it comes out to play. There's a Tata Play angle also to this, which says that Disney owns a minority stake in Tata Play, so Reliance may consider acquiring Tata Play. Now, how is this beneficial for Disney? Well, firstly, Disney has been grappling with challenges in India with respect to retaining its subscribers and securing its media assets. Well, Reliance has gained a larger slice of local media and entertainment, and Reliance also outbid Disney in 2022 for winning the rights of IPL. So overall, Reliance is something that Disney is going to benefit out of this merger, as well as Reliance is going to benefit because the merger of these two, this consolidation effort in the Indian media and entertainment is going to be huge, because especially after the call of a Zee and Sony merger, these two combining their synergies together will be a huge impact in the media industry as a whole.
Well, Mahima, we are seeing a little bit of the impact on the stock as well. If you look at our TV18 stock, that's up about 0.7% in trade. However, Network 18, the stock of Network 18 is in red. But talk to us about Asian Paints. It's the biggest laggard on the Nifty 50 index, and from what I understand, a host of brokerages have come out with their call on the stock. Tell us a little bit about that.
Right. So as you rightly mentioned, Asian Paints is under pressure today. It went to approximately 4% down in intraday low today. Well, there's a bull versus bear case in this. Well, CLSA has downgraded Asian Paints, but Macquarie has upgraded it. So let's see what these brokerages have to say. Well, CLSA says that it has lowered its target price from 3,017 to 2,425, and they're saying that Birla Opus is promising, and it can add an incremental 40% addition to the industry capacity, where it also says that industry to see a significant increase in competition in terms of its retaining dealers and consumers, and the near-term growth and margins of companies like Asian Paints might be affected. Now, they are also saying that assuming that Asian Paints sees some kind of slowdown in growth in near term, but they will not see any kind of market share loss to Birla Opus. They've also said that it may maintain long-term market position as well. And they've also mentioned that ROE will fall to 26.9% in FY26 from 32.7% in FY24. Now, talking about what Macquarie has to say about Asian Paints, it's a completely opposite view. It says that Asian Paints still remains their preferred pick in India paints and adhesives. It says that they've rated it outperform with a target price of 4,000. They say that it expects Asian Paints to be less affected by Birla Opus, and it is also saying that sharp demand moderation remains a downside risk. However, rise in discontinuing intensity near term has given Grasim entry to a negative impact of EPS estimates. So this is what the two brokerages are saying with a completely opposite view.
Well, thank you, Mahima, for that. Thank you for being so comprehensive about what the brokerages are saying. Now, let's talk about the pharma space. My colleague Monal Sangvi spoke to the country director of US FDA, Sarah McMillan, on quality checks and evolving standards of US FDA. Listen in.
We are starting to pick up our inspection pace post-COVID, and in fact, just this past year, we did over 2.5 times the number of surveillance inspections than we did the previous year. So we have seen an increase in terms of compliance from Indian industry over the past year, and a lot of that came right post-COVID. We had a lot of compliance follow-up inspections, and so this past year saw an increase in surveillance inspections and a lowering of the OAI rates of inspections here in India. That being said, I think we do need to address some of the concerns, as you mentioned, specifically surrounding data integrity. We've addressed data integrity issues in India and globally for many years, and it's concerning to see them come up again and to come up in prevalence. And so, you know, for us, when we see significant data integrity issues, it really speaks to quality culture in facilities. And so we really want to see facilities take ownership for creating a quality culture that empowers everybody at every level to make the right decisions about product quality, and also the accountability to follow.
Well, we'll slip into a short break for now, but do stay tuned. We'll be back with our new series, Magnificent 7, on the other side.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome back. You're tuned into Market IQ, and as promised before the break, let's talk about the Magnificent Seven. But this started off with the Nvidia bug that has bitten the Wall Street. Almost everyone is talking about tech stocks and the rally that has been witnessed. But the bigger question is, will the Magnificent Seven follow suit? But before that, what is the Magnificent Seven and which companies feature in it? Anushi joins in to talk a little bit more about that.
Well, thanks for that, Smriti. Before I begin about the chapter 1 of our Magnificent series that's going to take place over the course of this week, let me just lay out one interesting fact over here. If you have to combine the total 7 companies' market cap, that stands at about $13 trillion, which if you have to compare it with one of the largest economies of the world, that is USA's GDP, that is about $27.97 trillion. So almost about half of it is what these 7 companies are making as of this date. Now coming on to Alphabet in particular, talking more in detail about it, about $1.79 trillion of market cap, which if you have to compare with our biggest market cap of the Indian stock market, that is Reliance, so about 7 times its size. But what exactly does the company do? As you are aware that Alphabet, or rather Google, continues to dominate its revenues over the course of 3. This they have done by bifurcating their businesses into 3 parts. This includes the Google services, which is your Android, Chrome, Gmail, all of these services that we are using on a day-to-day basis. They generate their revenue through platform-based and the broadcasting-based advertising fees that they charge. Next is the Google Cloud over here. This includes the cybersecurity, data analytics, and AI and machine learning. Again, a fees based on the Google Workspace and consumption-based fees for their Google Cloud services they provide. Now on to the latest segment, or rather the most minor segment of the business is its other bets, which includes the healthcare-related services, but still it has about a 1% or less than that contribution as of current date. Now, moving forward to what the company is going to be envisioning going forward. So we are currently all living in the era of AI, that is artificial intelligence, especially after the popularity of ChatGPT. So following on to the similar footprint, the company has strengthened its AI investments and innovation and calling it entering into the Gemini era, as they refer to. So the capex for this also stood at about $11 billion as of Q4 of CY23. This was driven by the investment in the tech infrastructure. Over this, they are expecting a larger capex investment in the course of CY24. So a lot of developments over here to make this a stronger brand for the business going forward. Now on to the financial performance of the company. The revenues are about a 9% upside, while the net income saw about a 23% jump. So the revenue stood at about $307 billion as of the end of calendar year 23. While the operating margins continue to remain in the 26 to 27% of range. So this is on to the financial performance of the company, of which the 46% is still contributed by the USA, next by the EU, that is the European, Middle East and African markets. Now, coming on to the kind of market cap that this company has added over a period. So if you just look at the 2016 to 2020 period, about $503 billion of addition in market cap, through which they have achieved this $1 trillion status in 2020. And if we look at the peak market cap, that stands at about $1.99 trillion. So the company saw a lot of downfall over there. But now again, the market cap is about $1.79 trillion, as mentioned earlier. Coming to the stock performance of the company, so about 11.4% return in the 6-month period and about 154.7% in this 5-year period itself. So just to end this with an example of what an investor has fared. So if an investor had put in about $100,000 in the year of 2017, let's take beginning of 2017, his current investment value would fetch about $360,000 as of this date. So more than about a 4 times the return over here. So this is all on the Alphabet Inc. that we should be looking forward and what the company has seen over this course of period.
Thank you so much, Anushi, for that. This is only the first company out of 7. So stay tuned for 6 more and we'll bring you over the course of the week. Now, sources say that both SEBI and IRDAI are well aware of PNB MetLife's ULIP that the company has launched as a small cap fund. Alex Matthew joins in, who broke the story as well, to tell us a little bit more about that.
Thanks, Smriti, for that. Now, before we get into what exactly has happened here, you need to understand what an insurance product is meant to do. It's basically something that shifts the risk of something occurring to you to a company, and you pay for that. That is a premium that you pay. So if you're protecting against loss of life or the implications of loss of life, you buy a life insurance product, and in the unfortunate situation where you die, your nominees receive a certain amount of money. Now, a ULIP, or a unit-linked insurance product, is something that combines 2 aspects. One is the premium that goes towards the insurance, as well as an investment amount that goes into the stock market. Now, the problem with PNB MetLife's latest ULIP is that they're calling it a small cap fund. This is a little confusing because these funds or such labels are usually used by mutual funds in a particular category of the mutual fund space, that is in the equity markets. Now, there are 2 primary issues here. If there is an investor or there is a policy holder that buys into this particular fund, as they call it, or ULIP, they will have a lock-in period of 5 years. That is not something that occurs for mutual funds, so already there's a red flag there. And on the other hand, you have the risk aspect. SEBI very clearly diagnoses or requires that mutual funds disclose the amount of risk associated with each product. And in the case of small cap funds, it's the highest level of risk. That is very high. There is no such categorization of risk for a ULIP. It only says that the risk of loss of investment is in the hands of the policyholder. So clearly an issue. Now, we have spoken to a couple of people, and what they've said is that both the regulators, both SEBI as well as the IRDAI, are aware of this, and there is an expectation that the IRDAI is going to, or the insurance regulator is going to take action here, whether it is specific to this company or an industry-wide notice that is sent out is yet to be ascertained.
Well, interesting, Alex, that how ULIP is now sold as a mutual fund, and but however the regulators are involved, so we're going to keep tracking the story and bring you more updates on this. But the G33 countries are keen on progress for agri talks as WTO ministerial meet kicks off. My colleague Janani Janardhan joins in with what's on the agenda.
That's right, Smriti. Now, the WTO's MC13, which is the ministerial conference, is being currently held at Abu Dhabi from the 26th to the 29th of February. Now, one of the important topics that's being spoken about is about public stock holding limits. What that essentially means is the ability of a country to procure, store, and distribute food grains as it needs without distorting global agricultural trade. Now, G33 countries, which is actually a grouping of 48 countries, contrary to its name, is asking that the talks on agriculture, particularly on public stockholding limits, see some progress. This issue has been long pending since 2002, so this is already a 20-year time period where this issue has not been resolved. What seems to be the concern is whether developing countries can, in fact, exceed the limit that is allotted to them. About 10% of the produced value is what is allotted as a limit, beyond which if they procure and distribute food grains, it's seen as a distortion. Now, why does this affect India? India's Pradhan Mantri Garib Ann Kalyan Yojana is one that procures and distributes free food grains to about 80 crore beneficiaries. This is at 5 kgs per month. So this scheme will particularly be concerned with the developments in this particular dispute. What we have to watch out for, however, is how the member countries, the 164 member countries, work it out. WTO is an organization where it wants to achieve consensus on all topics. So the G33 nations in particular have asked to adopt and agree on special safeguard mechanisms, help out developing countries, considering that they have to take care of their domestic food security. But over the course of the next 4 days, we'll find out how exactly the needle moves, if at all, on this topic.
Thank you, Janani, for that. Janani will be tracking this for us and bring you updates from there. But that's all we have on this edition of Market IQ. But lots more lined up, so stay tuned.
Brought to you by बनेगा तो बढ़ेगा इंडिया, अल्ट्राटेक, देश का नंबर 1 सीमेंट.
माँ हमें दुनिया की काली नजर से बचाती है.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the
Hi, thanks so much for joining in. This is the Mutual Fund Show on NDTV Profit, and I'm Alex Matthew. This show gets you actionable insight on everything mutual fund related. Now, in the recent past, we've had a number of conversations about passive investment strategies. These are mutual fund schemes where you don't have active intervention by a fund manager. One of the subsets of these passive strategies is something called Smart Beta. The latest offering in that space is the Mirae Asset Nifty Small Cap 250 Momentum Quality 100 ETF. It's a passive strategy that places two filters, momentum and quality, and it's also a bit of a mouthful. Don't worry, we'll explain everything so that it's simple for you to understand. At the onset, we're joined by Siddharth Srivastav, the head of ETF products at Mirae Asset. Thanks so much, Siddharth, for taking the time. Like I said, it's a bit of a mouthful. Let's understand what this is entailing, what does it mean, and how an investor should understand how this works. So let's start with the overarching theme, which is it's a Smart Beta product. Can you explain that first, and then we'll delve into this product specifically?
I think Smart Beta makes it sound complicated than it actually is. The idea is to target a very specific behavior or a profile. So for example, there is a factor called low volatility, where the idea is to have a portfolio which exhibits less volatility by picking up companies which have lower standard deviations compared to the similar companies in a given market cap segment. Then there is factors like quality, then there's factors like value, growth, momentum, where idea is to capture companies which are doing well from a stock returns point of view compared to the other companies. So in Smart Beta, also known as factor investing, the companies are picked based on a certain factor like quality, value, momentum, and they are even weighted in the portfolio based on those factors. So idea is that, let's say, instead of investing in Nifty 100, some people might come and say that I want to invest in a large cap portfolio which is, let's say, more stable or less risky than a Nifty 100 itself. So there he or she can invest in, let's say, Nifty 100 low vol 30, where 30 companies are picked based on less volatility. Similarly, a person may come and say that I want to invest in a portfolio of large cap companies where potential of returns is high. I'm okay with higher risk. Then he or she can invest in, let's say, a Momentum 30 ETF or an index fund, where 30 companies are chosen which are performing well. The idea is to capture that recent trend, but in the long term, hopefully it will outperform, but there is obviously phases of higher volatility. So factor investing is all about targeting a certain behavior, a certain profile, which you want to from a asset allocation point of view.
So let's explain this even further, right, Siddharth? So because this is a passive strategy, we're talking about no intervention from a fund manager, and it's a very clearly defined strategy. So there are certain rules that come into play. You've called them factors, and they are called factors broadly, right? So, but we are defining the boundaries of this. So we're saying 250. That is the small cap 250 is the wider boundary, and we're talking about the smaller boundary, which is 100 stocks out of this 250 are selected, and there are two filters that are given, which is momentum and quality. So to explain this further, explain why you have selected first of all the 250 small cap 250, because this is at the broader end of the spectrum and you generally see quite a bit of volatility in this space.
Absolutely. I think you've asked the right question. And just to build on to what I was saying earlier, let's say typically when people invest in small cap segment, they are sort of concerned about or they want to target stocks or portfolio which have good liquidity so that they don't face issue while investing or while redeeming. They obviously want to achieve higher returns. So momentum is one of the factors, and they want to do all this with a quality portfolio, right? Quality is more of a concern in small cap and micro cap segment compared to, let's say, a large cap segment. So what we have done is, and obviously NSE has come out with this index, that instead of simply launching a small cap 250 ETF, where you have exposure to all 250 stocks, here filtration is taking place. That first, all the illiquid companies will be excluded, all the companies which have higher promoter pledging will be excluded, and then 100 companies which are performing better on quality metrics as well as momentum metrics will be shortlisted. So ultimately the final portfolio will be of 100 stocks where sorts of these filters are used, or rather these factors are used to create the final portfolio. So idea is that hopefully through this portfolio we'll be able to capture the upside momentum, because we are using momentum as a factor, and provide some sturdiness whenever there is, let's say, a market correction or right, let's say a longer phase of.
Sure. Yeah. So Siddharth, I want to understand these two factors and how you've defined them. There are obviously certain very quantifiable rules that you've set that will help you understand which stocks qualify, right? So first explain momentum. What is the definition of momentum when it comes to this particular scheme?
So all these factors have been well researched and they have been used on the active side. And as you mentioned that they are now defined in a very rule-based manner to shortlist stocks. So momentum, for example, is defined as risk-adjusted momentum. So whatever the return stock is generating in, let's say, last 6 month or 12-month period, divided by the risk or volatility which that stock is generating. So it's simply return generated per unit of risk.
A little complicated. So would it be possible for you to break it down for us even further? I'm understanding momentum as a stock that has outperformed or that has gained quite significantly over a period of time, and you have also said that this is also determined based on the risk involved, which is the volatility, right?
Absolutely. Let's take a very simple example. Let's say there are 3 stocks.
Sure.
A, B, C. A and B have generated, let's say, 20% return each in last 12-month period, whereas C has given just 10% return. So for me, A and B has higher momentum, but within A and B, let's say B has higher volatility. It has sort of moved up and down more, right? Hence has exhibited more risk. So for risk-adjusted momentum, you will end up selecting A because not only it has generated higher return, but it has sorts of exhibited lower volatility also.
Now, how do you define quality? Because quality and the way that I've looked at quality, it's always usually on the larger end of the spectrum, right?
Yes. So quality, again, there can be several ways to define it, but broadly, whenever you want to assess a company on quality metrics, you look at profitability, you look at financial health, and you look at earning stability. So in this index, the profitability is defined by return on equity. The financial health is defined by leverage, which is debt to equity ratio, and earnings stability is sort of defined by how stable the EPS has been in last 6 years. So again, a bit technical, but if you just focus on 3 factors that you're using: profitability, financial health, and earning stability as a metrics to gauge how sturdy a company is, then that is used to define a quality for a company.
Okay. So, and in fact, that was actually quite easy to understand. But the last aspect is, I'm sure when you're launching a product like this, you've back tested it. The benchmark in this case, I would think, would be the small cap index. So against that, how is this strategy, or how would this strategy have worked?
So basically, as I mentioned earlier, that momentum typically performs better in a bull run, whereas quality typically shows sturdiness, stability in bad market times, right? Especially when there's a reasonable correction. So by mixing momentum and quality, the idea is to capture a bit of upside momentum and ensuring portfolio sturdiness in bad market phases. And that is what we have seen in the back testing. It outperforms the broader segment in almost 16 out of 18 calendar years. It gives that consistent 7 to 8% alpha for an investment horizon of 3 year, 5 year consistently. But as I mentioned, that more stark observation, and which is why we are coming out with this fund, is that it not only captures the upside momentum, but provides sturdiness during bad times, and sorts of it's in an all-weather portfolio. It also outperforms, surprisingly, 80% of active small cap funds in last 1 year, 7 year, and 10 year horizon. So while it's a passive scheme, it is doing fairly well when it is being compared to active schemes as well.
Absolutely. All right. Thanks so much for joining in, Siddharth, and breaking that down for us. Viewers, let's delve a little deeper into this and see where this fits into your portfolio. As Siddharth pointed out, there are quite a few time frames in which this has beaten even the actively managed funds. But where does it fit? How much should you put into this, and what is the risk involved? All of those answers after this very quick break.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the fund.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Welcome back. You're watching the Mutual Fund Show. Now, we've been speaking about the Mirae Asset Nifty Small Cap 250 Momentum Quality 100 ETF. And while that sounds like a mouthful, we have actually broken it down for you so that you understand what this is all about. The question is, where does it fit in your portfolio? And we've got Amit Bivalkar as well as Saloni joining in, Saloni Sangui joining in to give you some perspective on all of that. Now, we were speaking with the fund manager of this particular ETF, and he was explaining how this works, but I'm curious what you make of this as well. So Saloni, first I'll come to you. The combination of momentum as well as quality in the broader market space, not something that we've seen very often. What do you make of it?
So I think momentum essentially means buying stocks that have performed well recently, assuming that the outperformers of the recent past are also going to be outperformers in the future. It works mainly because of investor behavior, where once a stock starts doing well, a lot more people then want to invest in that. But a momentum strategy by itself can have higher drawdown, especially in a turbulent market. On the other hand, you have quality, which essentially involves investing in profitable, stable companies with strong balance sheets. And high quality companies are actually stable, especially during bear markets. So momentum helps you capture the short-term gain, whereas quality gives you long-term stability. I think concentrating only on one factor can backfire, especially if the factor goes out of favor. So a multi-factor strategy that combines both of these factors could actually provide alpha while still maintaining the downside, and is better than concentrating only on one factor.
Got it. Amit, according to Mirae, and I've seen the presentation, seemingly this is the case in certain time frames, and they're talking about 1 year, 7 year, 10 year, it has outperformed quite a large chunk of the actively managed funds. It seemingly beat the benchmark as well. But is it that simple an answer that, they back tested it, it works, buy it in your portfolio? What should an investor bear in mind?
Basically, all these data, what every presentation has on the factor investing are all backdated. They are not tested live for data. So you have to actually see as to how the fund is going to perform in a live market with live money. To understand this, Alex, I think we have to understand what is beta, and beta means the Sensex or the Nifty return, basically the index return. And when you say a smart beta, it means that out of the design, which is of fixed weightages of stocks, you will select something and assign it weights which are different from the market. So when you combine these 3, 4 factors, like currently we have momentum and quality. Momentum is based on past performance and quality is based on the ROC, ROE of those companies what you are going to select. So if you have multiple factors which are going to go in a fund, like say low volatility or growth or quality or momentum, then it creates a lot of confusion. People who come into mutual funds, they generally come for, one who comes into a mutual fund is somebody who says that I don't know, let the fund manager take a call. Now, if you want to enter a passive fund, but with the active fund management approach through factor investing, then those kind of investors, Alex, should go into such kind of smart beta funds.
Okay, fair point. The question then arises as to how much of an allocation can go into this, because Saloni, you pointed out that the design of this particular strategy is supposed to give you the best of both worlds. While the markets are going up in a bull market, it's supposed to give you outsized returns, and it's also supposed to protect your downside because it invests in quality companies. The question is, it's still a broader market fund, and so therefore the risk involved is significant, and I'm pretty sure that this will be a high risk fund like most equity funds are. So how much of an allocation is appropriate?
I think first one needs to look at their asset allocation based on their risk-taking ability and the duration of holding, and decide if small cap as a category even fits within their portfolio, because small cap is not a category that every investor may want to invest in. But if we look at within the small cap allocation, I think one can look at about a 25 to 30% allocation towards such a strategy within the overall small cap allocation. Just one thing is that, before investing, it's important to understand that different factors work differently in different market conditions. And, the effectiveness of such strategy, again, as Amit mentioned, since it's back tested, depends on the effectiveness of those factors in live market and the ever-changing correlation with the market. So again, I would only look at this for, since it's an aggressive strategy, I would only look at this for somebody who has knowledge and who understands how the different factors work, and not for someone who's looking for income or capital preservation.
Fair point. All right. I've got a few questions, and by the way, that number on your screen is meant for you to send messages to us on WhatsApp, and we can take all of those questions. We've got a couple of questions which we will take today. The first one is from Narayan. He says that he is aged 47 years and he's got an SIP of 1.5 lakhs in HDFC Balanced Advantage Fund to balance the volatility, he says, in his portfolio. He's got as much as 2.24 crore in a PMS, and he's looking to achieve a minimum corpus of 4 crore before he retires in 4 years. So I'll come to you on this one, Amit. It's a little bit challenging, I'm sure, because you don't have his entire details. But the question is, has he invested in a good balanced advantage fund?
So I think balanced advantage funds give you asset allocation mix according to the structure of the portfolio. So in case of any of the balanced advantage funds, you need to look at what is the objective of that fund. Whether they can move between debt and equity as per your requirement, and whether they are actually protecting your downside when markets actually turn negative. In a interest rate scenario going forward, Alex, where you will see that interest rates might come down over the next 2-3 years, having a 30-40% allocation to debt in a portfolio will not hurt, and you are accruing at a good 7% today. So if you have a fund which has a combination of debt and equity, where your debt also might give you at that 7-8% kind of return over the next 3-4 years, and plus you will be protected from volatility if the markets turn bearish, and you have an inbuilt insurance by having debt as well as equity in a single portfolio where your taxation also is taken care of, I think balanced advantage fund fits the bill. So that was to that question, whether A fund is better or B fund is better. I think over a long period of time, all the funds actually typically return over the same period absolutely similar returns. So it's more to do with the objective of the fund and how it has managed volatility in the recent past. If you look at March 22, March 23, index was at the same level. So you should actually gauge the fund, how is it doing in a flat market, in a bear market, and in a bull market, and then take a call on that.
Fair point. And your point on the potential for returns in the fixed income component of the balanced advantage fund, given the potential for the change in the interest rate scenario, Amit, is well taken. Thanks so much for joining in, both Amit as well as Saloni, and for giving us a breakdown, in fact, on the momentum quality strategy that has been launched by Mirae Asset. Now, we were only able to take one question today, but we should be able to take more tomorrow. So don't hesitate to send your queries to us on that number on your screen. In the meanwhile, that brings us to the end of this particular edition of the Mutual Fund Show. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Hello and welcome. You're watching Large Trades, a show where we talk about all kinds of bulk deals, block deals, large trades and every kind of volume buzzers. I'm Hika Barve and with me is Alex Matthews. Alex, why don't we get a market check going on before we start on with the show?
Absolutely, Mika. And good afternoon to everybody joining in. We're looking at a pretty range-bound session for the benchmark indices, and in fact, we're seeing cuts of about 0.25% for the benchmark Nifty 50. We're hovering around the 22,160 odd mark. We are off the low point of the day, and in fact, the broader markets are also off the low point of the day. You have the Midcap index, which is trading with cuts of about 0.2% and moving a little bit higher. It's even possible that we break into the green, and you have the small cap index, which is trading as flat can be. Overall, the market breadth has been a little bit wobbly. Let's pull up the advanced decline ratio, and just about an hour or so back you had the declines which were more than the advances. That remains to be the case, but that gap seems to be narrowing just a tad bit as things stand right now. Let's take a look at the key indices as well then, and you have a few big movers on the downside. You have the IT index, which is underperforming in a big way today, down about 1% or so, and the metal counters are the other big underperformers. You also have healthcare that is underperforming as a sector. Among the gainers, you have one that stands out, of course, and that is the energy pack, which is gaining about 0.6%, and the auto pack, which is up about 0.4% or thereabouts. A couple of stocks that I will mention. One, of course, is what we will talk about in more detail in trade or in the show today, and that is Asian Paints. It is down quite significantly. Of course, quite a few developments in the space, but a few brokerage reports that have come in that have reduced their target price on this particular counter. And you also have the likes of Zaggle, which is gaining quite significantly, arguably the stock of the day on the back of order wins. It's up as much as 15% right now. And then you have Mahindra Logistics, which is up on brokerage reports as well. A positive commentary coming in on this particular counter. It's up about 4.3%, Mika.
Yes. So first stock in focus is Rain Industries. Now the stock is trading higher on volumes but has tanked significantly in today's day of trade. Let's bring Varsha for more details on the same.
Hi Mika. So as you rightly said, now we have seen a pressure in the stock of almost 10%. The stock is down almost 10%. Now this is on the back of weak results posted by the company. So if you see, revenue was down 24%. There was an EBITDA loss followed by net loss. So let's see what are the reasons for the same. So if you see, the carbon sales volumes have decreased almost 5.3% year on year, and the decrease in volume was primarily driven by lower demand and delayed shipments. Also, during Q4, the average blended realization appreciation decreased by 26%, and this decrease was account of lower market quotations across all the regions. Appreciation of euro and USD against Indian rupee overall led to decrease in revenue of almost 30% in carbon segment. Then if you see advanced materials, the revenue from advanced materials decreased by 6.3%, while sales volume, though we saw the sales volume increase almost 10% year on year, and this increase was led by timing of maintenance shutdown, and realizations were decreased 15% due to fall in commodity prices and change in product mix. So this is the reason why we have seen weak numbers. Also, company had an impairment charge of almost 732 crore due to increase in weighted average cost of capital.
Okay, that's a fair point. Thanks, Varsha, for bringing us those details. Now, take a look at the stock intraday. It is losing ground. It's down about 6.5%. And Varsha pointed out that this is on the performance in the quarter gone by. Surprise loss being posted. Not a very large company. It's market capitalization of about 6,500 crore or thereabouts. Let's focus on the hospitality space then. And we've got Mahindra Holidays and Resorts, which is buzzing in trade today. It has reached an intraday high of 6%. It's off just a tad bit from that point. But we've got Anushi joining in to give you some perspective on why the stock is in focus today. Anushi, what do you have for us?
Well, absolutely. Looking at the intraday high, as you mentioned, about 6% of a return over year, while its volumes are also trading about 3 times its 30-day average. Now, this was after the company's management spoke to PTI about certain things, which I would like to highlight. One is the planned investment of about 4,500 crore in the next 3 to 4 years that they're planning, with which they expect the room capacity to double down to 10,000 rooms compared to the current 5,000 rooms. So with this, the management also expects the first leg of investment, that is about 2,000 crore, kicking off just in the next year itself. Now, if you have to look at the current investment, that stands at about 835 crore, which is for the 5 greenfield and brownfield projects expansion that they have taken for opening about 690 keys. Apart from that, the company is also now focusing heavily on the public-private partnership that they are making. This can be given by 3 examples. One is the tie-up with Uttarakhand government for about 1,000 crore investment over year. Next, with the Tamil Nadu, also they have signed a MOU worth rupees 800 crore, and the recent being the Odisha government, wherein they are engaging an investment up to 500 crore, where the current talks are still going on in stages. So definitely a watch out for that as well. Coming to the stock performance of the company, over the 6 months, the company has shown just about 8% of returns, while the 1-year return stands at about 55.6%. So these are all the key highlights that the management pointed out, and this is why the stock is in focus today.
Thank you so much, Anushi, for that insight. Moving on, we have Asian Paints, which is trading lower today, as we have some brokerage views on the same. Mahima joins us with more details.
Right, Mihika. So as you rightly mentioned, we have 2 brokerages that came out with their views on Asian Paints today. One is CLSA and one is Macquarie. Well, it's a pure case of bull versus bear. Well, CLSA has downgraded Asian Paints, whereas Macquarie has rated it as outperformed. Now, in terms of volumes and stock performance, the volumes are buzzing at approximately 2 times its 30-day average, and it touched an intraday low of 4.6%. The stock has fallen approximately 4.2% since the launch of Birla Opus. Now, talking about what CLS has to say about Asian Paints, well, they've said that they've lowered the target price from 3,017 to 2,425, and they're saying that Birla Opus is promising an incremental 40% addition in the industry capacity. So the industry is to see a significant increase in competition in terms of its retaining dealers and consumers. It is also said that the near-term growth and margins are not immune for Asian Paints for such kind of competition, and it assumes that Asian Paints might see some kind of slowdown growth in the near term, but no significant market share loss to Birla Opus. And they've also said that ROE will fall to 26.9% in FY26 from 32.7% in FY24. Now, moving on to what Macquarie has to say about Asian Paints, well, it's a completely opposite view of CLSA. They've said that Asian Paints still remains their preferred pick in Indian paints and adhesives. They've maintained outperform
on Asian Paints at a target price of 4,000 rupees, and it expects Asian Paints to be less affected by Grasim, and it also says that sharp demand moderation remains a downside risk for just near-term sales growth, and a rise in discounting intensity in near-term given Grasim's industry to have a negative impact on EPS estimates. So these are the two different views of two different brokerages on Asian Paints.
Got it. All right, so not every day that you see such an erosion in Asian Paints. In fact, at this point, with the kind of downtick that you're seeing of about 3.5%, it's an erosion of as much as 10,000 crore or about 10,200 crore in the market capitalization. And in fact, that is quite a significant jolt to the stock. Of course, it is off the low point of the day. Now, moving on to Indocount Industries, it's another stock that is buzzing in trade today. In fact, it's up as much as 10.5%, seemingly driven by updates from the government regarding the import tax for extra long staple cotton. Now, what's the significance of that, Mika? We're talking about so first of all, what does the company do and what is the implication of this?
Yeah. So mainly Indocount Industries is a manufacturer and exporter of bed sheets, bed linen and quilts. The stock has reached an intraday high of around 12.5% and it's also shown some strength in the past month. It's up about 27% in the past month, and the stock is actually not corrected for the past 20 to 30 sessions, and the volumes are 8 times its 30-day average with total volumes at 65.22 lakh shares. The stock has also been significantly gaining since the government exempted extra long staples cottons from the import tax. Now, the notification only pertains to US Pharma and Giza cotton. Now, these cotton grades are used for value-added products such as high-end cotton garments and bedsheets, which is what the company does. So, the exemption is beneficial to the exporters as customers usually want a premium cotton feel to their products. Exemption in the custom duty also may result in some kind of competitiveness, according to Elora, in the Indian exporters for the premium products, which will also lead to higher volumes. The import duty on cotton having fiber length of less than 32 millimeters, however, will continue, but India has sufficient cotton of this length. Furthermore, the company also had a good Q3 results. Its revenues were up 10%, EBITDA margins expanded by 442 basis points, while net profit was also up 54% year on year. Another stock that I think we should focus on is Zaggle, which is up almost 15%, and total volumes around 83.54 lakhs. And this is due to 3 order wins that the company has gotten in the last 2 to 3 days. One is a 5-year co-branding partnership and marketing agreement with Nishi Forex and Leisure, which is a private company. And the company has also onboarded 2 clients for their Zaggle Saves segment, which is Emcure Pharmaceuticals and Bennett Coleman and Company. And these agreements are valid till termination. So the stock has seen a lot of strength in today's trade, Alex.
Absolutely. There you have it. It's up as much as 30% over the last 3 months. Now, we have spoken to Parijat Ghosh, who's the managing director at Bain & Co. And we've spoken specifically about the mergers and acquisitions in the pharma healthcare space. Take a look at what he had to say.
What we've seen is that there are different themes at play in the space. First of all, you have to realize that this is very much a very attractive space. This is a space with a lot of opportunity, with a lot of headroom for growth, and that's true, frankly, across all of the different parts of healthcare. So, if you look at the formulation space, for example, there is clearly an element of buying specific capabilities, buying specific brand assets, buying entry into specific markets. So, I think it's very much that's an element that's absolutely at play there. I think on the API CDMO side, there is also an element of consolidation for scale that we are again seeing play out. So across both of these 2 areas, we think that there is a lot of headroom for growth, and that headroom for growth is presenting opportunities for individuals and companies. And certainly there are companies who also realize that what it takes to go from 100 to 1,000 is different from what it took to go to 100 from a 0. So I think there's also that aspect which is playing out.
So in terms of the consolidation that's playing out, do you believe that there's a lot of value unlocking? What sort of deals that you may have witnessed in your entire career so what was the underlying tone of the deal for them to be a success versus certain deals that didn't quite play out as imagined?
Sure. So I think, again, first off, I would say that in India, most of the three thesis is still very much based on a growth thesis. It's not really a efficiency or a cost thesis. Every deal is a growth deal. So there is absolutely an aspect, therefore, of how do you scale, how do you integrate well, and then how do you scale the assets and get the synergies of the combined entity. I think that's absolutely core. And in both of those two, I think getting the integration right, and then subsequently making sure that post the integration, you're really able to scale the asset and get the full synergy benefit from the acquisition, from the merger. Over not just the first 12 to 18 months, but over the next few years, that actually starts to play out. Like in everything else, we've also seen that serial acquirers, people who acquire, frequently and do smaller tuck-in acquisitions, they end up being more successful in terms of realizing and beating their deal thesis as opposed to individuals and companies who are really doing, one big deal. So that's again, been our M&A experience all through. I think the other aspect that we've seen over the last few years that has changed is that we are seeing more and more control deals happen. So from a financial investor perspective, people are willing to actually relinquish full control, and investors are also more than keen to actually come in with control deals and bring in new management teams and take the company to the next level. So that's again another trend that we are seeing play out.
Well, there you have it, the managing director at Bain & Co. talking about the key trends that are playing in the M&A space in the pharma sector. But it's time to slip into a short break, but do stay tuned to NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Well, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Welcome back. You're watching NDTV Profit. Now, an interesting update from the pharma space is that my colleague Monal Sangvi spoke to the country head of the US FDA, Sarah McMullen, and she spoke about a variety of issues ranging from the quality checks that are underway for the Indian pharmaceutical industry and also the evolving standards of the US FDA. Listen in.
We are starting to pick up our inspection pace post-COVID, and in fact, just this past year, we did over 2.5 times the number of surveillance inspections than we did the previous year. So we have seen an increase in terms of compliance from Indian industry over the past year, and a lot of that came right post-COVID. We had a lot of compliance follow-up inspections, and so this past year saw an increase in surveillance inspections and a lowering of the OAI rate of inspections here in India. That being said, I think we do need to address some of the concerns, as you mentioned, specifically surrounding data integrity. We've addressed data integrity issues in India and globally for many years, and it's concerning to see them come up again and to come up in prevalence. And so, you know, for us, when we see significant data integrity issues, it really speaks to quality culture in facilities. And so we really want to see facilities take ownership for creating a quality culture that empowers everybody at every level to make the right decisions about product quality and also the accountability to follow that up.
So when you talk about data integrity, the Form 483 is always quite exhaustive and a little difficult to figure. So what exactly do you think are the trigger points when we get a copy of the Form 483? What exactly are the points that we should highlight as maybe a high risk versus a moderate risk? If you could just help us understand how to look at it.
So any breaches in quality are undesirable, right? So whether it be a moderate breach or a significant breach. And I think what you'll see when you look at our 483s is that they're really put in order by level of significance. So as you read through, the most significant items should always be the ones that are listed at the top of the 483. And most of those will be related to the quality system. So if there's any findings relating to the quality system, we take that very seriously because that could also give indications about systemic problems within the quality system. So it's not just that one violation, it's that there might be a problem within the system itself. So those are the concerns that we really address and take more significant concerns about on our findings.
And I mean, U.S. drug shortages has also been quite in discussion for the last couple of years. So, are you taking any steps towards? Is the ramp up also kind of related to that? A, and do you believe that there are issues that are getting cleared out, and how are you looking at addressing the whole drug shortage issue?
So, drug shortages are very complex. So it's not just one set of issues that lead to drug shortage. And they're actually not new. We had a high amount of drug shortages dating all the way back to 2011, where we hit our peak in terms of the number of drug shortages. And so Congress tasked us to work hard to mitigate shortages, and so we instituted many things to help mitigate shortages. We actually did a study, and in that study we looked at drugs that had gone into shortage, and the majority of those went into shortage because of production problems within facilities. So for us, we want to make sure that we have a consistency of quality in facilities, which will lead to a consistency in supply. Now, there's other aspects of drug shortages, like a discontinuation in production or a sudden surge in demand. Those are other areas that we have other ways of addressing. But really for us, ensuring that we have consistency of quality within facilities is a pretty easy way to help ensure that there's fewer drug shortages.
Moving on, my colleague Monal also caught up with the Indian Drug Manufacturers Association's chairman SM Mudda on the key changes that have been proposed by Schedule M. Here's a slice of that conversation.
When we talk of Schedule M, we are not talking about the product quality. We are talking about the manner in which we manufacture product to achieve the quality. So this is a significant change that has happened in the revised Schedule M. Okay. Revised Schedule M, as I said, is on par with Europe and WHO guideline. There is a key focus on two aspects. One is understanding what product quality means to us. Another is the top management responsibility for quality. For this, there are two significant changes. So first, let me deal with the product quality. Until now, we believe we make a product, we test it. It meets certain predetermined standards, and we say product meets the quality requirements. However, in pharmaceutical, there are many things which cannot be tested into the product. They have to be provided in a system. So there is a new change in the definition, and the term is product realization. And what it says, the product has to have attributes that will fulfill the expectations of various stakeholders, starting from patients, healthcare professionals, and internal, external customers, and regulators as well. So this is the definition. Now, you cannot create achievement to this requirements overnight. So the revised Schedule M prescribes creation of a pharmaceutical quality system. Now, this is the top management responsibility to create a system that allows delivery of products with these attributes, all 5 attributes that I spoke. And that is a significant change from the previous Schedule M.
So how will the government ensure implementation of this revised Schedule M?
Yes, it's a good question. It is a challenge. Like the industry is yet to understand the complete impact of what changes it is going to bring. But as I said, the key thing is top management responsibility. So quality no longer becomes an operational function. In fact, my guru used to tell Mr. R.S. Iyer, quality is too important to be left to quality controllers alone. So it becomes a management responsibility. Management has to create a system to deliver. So this is the fundamental change that has happened from the previous Schedule M to new Schedule M.
Okay. And so how do you think the revised Schedule M will align with the vision that the 2047 vision that we might grow as into a $500 billion industry, Indian pharma?
It is for sure that we are going to grow. Our target will be achieved, but then as we know, worldwide we understand that quality is the key differentiator.
Yes.
So this revised Schedule M will bring focus on the quality in a manner we have not seen earlier. Okay. It will in fact propel the innovation in the pharmaceutical industry, a holistic business growth. In fact, whenever I speak on quality, we say the quality management system equates to business management system. Your commitment to quality will definitely increase the consumer trust. It will reduce the operational expenses. It will reduce the reworks. On the whole, it supports your business. Yes. So this initiative definitely is going to be aligned with our vision of Amrit Kal, and will be able to take us there. So our focus on quality is definitely going to be the key contributing factor to our growth.
All right, there you have it. That was the Indian Drug Manufacturers Association speaking about quality standards. And that brings us to the end of this particular edition of Large Trades. It's been a pleasure bringing it to you from Mika and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize.
Hello and welcome to India Market Close right here on NDTV Profit and pull up the markets. And we were off the lows of the day at somewhere around 2, and you can argue that that's how we're kind of shaping up. So on the headline numbers, a bit of a nothing kind of a day, if you will, but a lot of action within that, and the heat map will show you that. But before we get to individual stocks, bring up the bank Nifty and see what the banks are up to predominantly, and the mid-cap and the small-cap indices as well. So flatlining for the Nifty bank as well. The mid-cap index, flat as flat can be. Small caps too started off about 0.5% higher, completely gone off. So hardly any move there on the benchmark indices of any kind whatsoever. Now get the heat map up on the screen and show you what's moving and what's not. So there's gains for L&T, consistent order flow. Very likely one of the reasons there is strength in power grid. Adani Enterprises, couple of percentage points higher. Maybe the Lucknow airport factor, maybe just the overall sentiment that we're seeing within the Adani Group stocks, because a clutch of them have done well. Adani Port out here is up about 1.17% as well. There's some strength in BPCL today. After a while, we're seeing that uptick come in. The stocks had corrected a little bit. Maybe some bit of uptick was warranted, just that the timing is never quite known. We're seeing it today. A lot more green than what was there at the start of the trading day. So that's the other aspect to keep in mind. Within the losers, Asian Paints continues to sulk 3.5% lower today. And clearly 3 days on a trot now, this stock has seen some pressure. Apollo Hospitals 2.5%. Divi's is down about 2% too. And surprise, surprise, you know, while metals were opening up because of the whole China factor, I don't know if the iron ore prices going down is an indication to the street that all may not necessarily be well, even with the China opening up factor. But today, almost all metal stocks are sulking today. The Nifty Metal Index would have certainly been under a bit of cloud in the session today. Right here, okay, thanks for pulling that up. Save for a few small ones, and Adani Enterprises ain't technically a metal stock, neither is APL Apollo, just that they're a part of this index. Look at pure play metal names, Tamanna, all of them sulking in the session today, and not surprising out there.
Yeah, metals having a bad day, as is IT. Quite a tough day for IT stocks as well in play today. And there you have it, the entire index down and persistent also finding that pain. But Neeraj was talking about enterprises and ports. The entire Adani pack is up in the green today, whether it's a Total, whether it's an Energy, whether it's an Adani Green. So you're seeing that kind of, complete trend across the space. Adani Energy, in fact, about 9% up. Some other movers through the day, and let's talk about Alchem Labs. Alchem Labs is seen a bit of pain after reports that their IT raids undergoing some of their locations. The company has issued a clarification, in fact, just a few minutes ago, saying that they have cooperated with the authorities. There were searches in September 2023, and they're not aware of anything new right now. So that under pressure. Vodafone's the other stock in focus. Their board is going to meet to consider a fundraise. Now reports doing the rounds that promoters will be putting in money, and they don't seem to have managed to find anyone else to invest in the company, very simply and broadly put. So Vodafone under pressure this morning as well. Rain Industries is the other one perhaps that I would pull up in pain. Actually Q4 results, not Q3, because they follow the calendar year. But Rain has seen about 1,000 crores of losses versus a mild profit last time around, 150 odd crores, and that stock is down. So Rain Industries bearing the brunt, and PB Fintech is the other one that I would pull up. A large trade which has brought it in focus. A big chunk actually of the equity has changed hands in trade. So you're seeing PB Fintech there up in the green as well. But overall, I would say not a very action-packed afternoon at this point. Neeraj, you'd perhaps agree. Not too much happening there in the markets. Some tentative kind of moves.
Very well put, Tamanna, and frankly, that's it. On the index, at least, that certainly is the case. And let's pose that very question to our experts today. On the technical side, Hemen Kapadia, Senior VP Institutional Equity, KR Choksi Stocks. And on the fundamentals, Mr. GR Chokalingam. Gentlemen, both of you, thank you so much for taking the time out and being with us. Hemen, I'm tempted to ask you about a big call that you'd given on Adani Enterprises a few days back. That stock is turning out well, but let's start off with whether you have a view on the index or no. Couple that up, of course, with a view on Adani Enterprises, if you will.
Okay, Neeraj. Frankly speaking, as far as the Nifty is concerned, we were straining at the leash for the breakout. Actually, we've been in a range between 22,137 and 21,137 and 22,125. Neeraj. We've gone above that 4 times intraday, but we haven't closed about 22,125 even once. No, that would be a mistake. I think we closed above that once on Thursday, and we've slipped back again. It's very clear that we need to now once again close about 22,125. And this time around, I believe it won't be crying wolf. It will be the real thing. 25,500, 22,500, 25, 22,800 coming. Now, volatility, long expiry, 5 weeks, Neeraj, and the weeks which was 15 or slightly sub 15 on Friday, now bounces back to above 15 again. One would have thought that after 4 weeks of flirting with the 16.5 level, we'd finally seen the worst of the weeks and we'd see a cool off coming in. No major event risk that I can think of. And with a close slightly below 15, I thought we'd be more, we'd have simmered down a bit. Now that's not happened. VIX is above 15.7. So frankly speaking, the VIX needs to close up below 15. But expiry, so that doesn't look like happening. Bank Nifty isn't bad, but it needs to not break 46,500 and overcome 47,100. Reliance is almost at an all-time high. And going back to Adani Enterprise, I have a repeat buy call on Adani Enterprise because I still feel the stock is going to 3,800 and 4,000. I'm still not sure why. We've seen a lot of relative strength. We've been consolidating. I gave a call earlier. Like I said, I'm repeating it. It looks great. It's just that, Adani Wilmar shot through the roof. The other stock moved. So I don't know why Adani Enterprises is not moving, but when it moves, it will move. So I am reasonably, or I'll say fairly confident. Further upside seems like a very distinct possibility. The only risk is the market risk. The markets were to somehow reverse, doesn't look like, then I don't expect Adani Enterprise to outperform. But if the markets remain positive, Adani Enterprise will do well, Neeraj.
Yeah, absolutely. Just to take that further, of course, and with all the standard disclosures, follow up for you, because today is not just about enterprises. Look at energy, up about 9%, green, Total, the entire pack. And of course, you're watching NDTV, which is owned by the Adani Group. So it's a subsidiary, so that disclosure there. But which of these on the charts do you see has potential for a further upside, Himen?
I would avoid a comment on Adani Energy, Tamanna, because family and me have a position, so I would not like to comment on that. But NDTV, and frankly saying, all of these stocks are now, let's take a NDTV. We've been moving sideways for 11 weeks, Tamanna. And mind you, the stock hasn't retraced much. It's just consolidating, moving sideways. The breakout level comes in at 308 and we are still 277. So I would say this is technically cheap because the stop loss is closer and the range is just there. So NDTV looks good. Okay, AWL, Adani Wilmar has moved, no doubt. But for Adani Wilmar, the breakout is at 420 and we're still at 402. And this is after, once again, almost 11 weeks of a consolidation. So take your pick. Adani Wilmar, NDTV, I think both look good. If we close at this level, okay, we are not very far away from monthly close, Tamanna. Adani Wilmar will have given an upward bar reversal on the monthly chart. And we are ending a 15-month correction. Frankly speaking, it's a no-brainer. So I would buy both NDTV Profit as well as Adani Wilmar. And if you want something fast or we should move first of the blocks in FNO, Adani Enterprise.
Okay, the stock is NDTV. You're watching on NDTV Profit. So we should make that clear, Himen, with all the standard disclaimers once again. Choka, very good afternoon to you. I want to ask you about OMCs, which after a few sessions of pain are seeing a retracement. And the verdict on it is fairly confusing. It depends on which report you read, which brokerage says what. Do you think that there is a consistent turnaround in OMCs? Any of them you would touch in the oil and gas pack right now?
Yeah, I agree with you. There is a lot of confusion in analyzing these OMCs, even for a person like me. But having said that, we see a lot of volatility in the earnings, stock price, even on quarterly basis in OMC. So very difficult to see a consistent performance from this pack. Since these stocks have gone up substantially from the bottom, I would rather focus on stocks like ONGC rather than oil marketing companies. Because if there is any spurt in the oil prices, I don't think in the next 6 months fuel price can be allowed to rise significantly. So therefore, I would avoid OMCs at this juncture in the short term.
Okay. And avoid on OMCs in the short term. But we've been speaking about media this morning, and the big news, of course, is the official report that Reliance and Disney have signed a pact to merge their media business. More clarity awaited on valuations, etc. But what does this mean for the space? What does it mean for RIL? RIL not showing any great moves today, frankly, though they seem to have perhaps bagged the Disney India business at a cheaper than earlier reported valuation. Having said that, Jinesh Joshi, research analyst at Prabhudas Leeladhar, is joining us for more on the story. Jinesh, thank you so much for speaking with us. Just to get a sense from you, this has been widely reported, but do you think at the end of it, it is a big bump up for the media play as far as RIL is concerned?
See, obviously, what will happen with this merger is that Reliance will own all the sports properties, be it IPL, ICC, or BCCI. Because if I talk about the TV rights for IPL, that is with Disney Star. Even the ICC digital rights are with Disney Star. So what will happen with this acquisition is that obviously RIL's bargaining power, or for that matter, TV18 bargaining power increases meaningfully, and it will become a one-stop shop for sporting property in India, especially cricket. So obviously that is a positive, but valuations are something which remains to be seen, and especially sports properties, given the inflation that we had seen in the IPL digital rights or TV rights for that matter, even ICC rights. It remains to be seen whether these sports properties indeed turn profitable or not. But net from a media perspective, this is a big acquisition, and it will put TV18 or RIL in a very sweet spot.
In terms of the structure of the merged entity, will this be outside of Viacom18 in your view? Do you see them creating a separate entity for it overall? And then in that sense, does the management structure change?
Not really. I mean, as per media reports, I think a step-down subsidiary might be created within Viacom18, which houses the media and entertainment assets. And the plan is to absorb Stock India via some stock swap, which was being reported earlier. But at that point in time, it was being mentioned that RIL may own 51% in the merge, and right now the reports are emerging that RIL may own about 61% in the merge. So more details are awaited, but to my mind, it will be within Viacom18 via some kind of a subsidiary structure, so to say.
Jinesh, if indeed the deal turns out the way, the large contours of the deal turn out the way the Bloomberg story has mentioned, and which is a 61% stake valued at 3.9 billion, and assuming that Viacom18 is the carrying entity through which all of this is carried out, what does it mean for the media assets of the Reliance Group, Network 18, TV18, effectively Network 18, because that's where everything is getting consolidated?
Exactly. So that is what I mentioned earlier, that it will become a sporting powerhouse, especially for cricket, because IPL digital rights are with them, and now with this acquisition, and also the fact that the ICC TV rights, which earlier were sublet by Disney Star to Sony, and given the fact that the merger has been scrapped and he has decided not to go ahead with this TV rights fee, you will see everything bunch up in one entity. So their bargaining power is going to increase meaningfully.
No, which I agree. So therefore, I'm just trying to understand, is there a valuation or a number scenario that if indeed this were to happen, then what it could mean for the business? Because the stocks, as we've seen, have rallied a little bit from the recent lows in the last 2-3 months. Is there room for more, is the question?
So see, it is a slightly difficult one to answer, but I would try to take this in a different way. Given that they'll have all 6 rights, be it TV or digital, for sports. If I talk about the pricing power within the subscription packs, I mean, very recently, once the NTO 3.2 announcement had come through, we had seen quite a few broadcasters take a price hike for their bookings, which was in the band of about 6 to 15%. So that can happen with Geo as well. Even right now, if you look at Geo Cinema, their subscription plan is at about 1,000 rupees on an annual basis, and IPL is not behind paywall. Even the BCCI properties are not behind paywall. So that may go behind paywall, which will increase their revenues and profitability. But net, it all depends upon how much increase they are able to take through. And also for advertising, I mean, you will see a meaningful bump up come through because of the improved bargaining power, so to say. So overall, exact math is very difficult to decipher right now. But as I mentioned, they are in a good spot, so to say.
Just one take from you on what this means for the industry, because this is going to be a massive consolidation. On the other hand, you've seen the Zee-Sony deal fall apart. What is industry impact right now, and does this give an opportunity to increase the cost for entertainment and sports, products, since now you're going to have a behemoth in this space?
Exactly. So that might happen. And also, if I talk about the consolidated viewership share of Star India and Viacom, it will anywhere be between 30 to 40%. But I forgot to mention one thing, how CCI takes up this entire deal. Because just to put up things into perspective, when the G-Sony merger was announced, we was asked to kind of divest the channels to meet the merger guidelines. And if I talk about this current deal, especially in two markets, which is Kannada and Marathi, where both Disney as well as TV18 are equally strong and their viewership share is quite high, it remains to be seen as to how CCI views this. But to answer your question, yes, the cost of entertainment might rise because some properties which are currently available for free on Geo Cinema, they may eventually go behind the paywall, which can increase the cost of entertainment.
Yeah. As of now, this season at least, the key cricket products were free, which was great for viewers and consumers, not maybe so much for the competitive platforms. Thank you so much, Jinesh, for speaking with us and helping us break down that big media deal. Not too much impact on the RIL stock today, in any case, about just 0.5% down. We'll take a very short break, but we're coming back with all the volume buzzers and the action in market in the last round of trade. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide your risk.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So happy.
All right, back with India Market Close right here on NDTV Profit in conversation with Hemant Kapadia and G. Chokalingam. And we'll also get in a sense of what some of the key volume buzzers are in the session today. But amongst things that have moved around, there has been a bit of an uptick in some of the oil marketing companies in the session today. We did this piece on the editor's cut this morning. We spoke about the possibilities of the upside versus the downside. Mr. Chokalingam, good afternoon. In this corrective move that we've seen over the last 7 days into BP, HP, IOC, are you a buyer or would you stay away?
I would stay away from oil marketing companies. Rather, I would suggest PSU stock like a ONGC.
Why so?
Because this is the election time and oil price keep remaining volatile. International political situation is also not conducive. So there is a possibility of oil price spotting in the short term. And because it's election time, there may not be aggressive hike in the fuel prices. And therefore, better to be defensive by not buying OMCs, which have gone up a lot in the short term. Rather, if oil price goes up, there's a strong correlation between both oil and gas prices. So that could be beneficial to ONGC. So therefore, one can focus on ONGC instead of OMCs.
Okay. Hemant, coming on the charts, BPCL fell about 6-7%, has taken a bit of a bounce today. From a trade perspective, is it worth looking at BPCL?
Yes, Neeraj. I think if you take a very short-term view, we've seen a 3 and 3, 6. This is a 7 trading session, Neeraj. We've seen an upward key reversal coming in today. If I were to look at the intraday charts, I think the hourly charts are showing technical positives. So I would say we've been up for 5 hours in a row. So we are at 620.29, maybe at around 625. I think one can take a small contra buy call because a very, very near-term bottom seems to have been made. 1 second, there's a very short term.
There are a host of stocks buzzing in trade today as well. Kanika Johnson with a list of some of those. Kanika, good afternoon.
Good afternoon, Neeraj. First, we have Yasho Industries, which saw an intraday high of almost 13% and its volumes trading at 13 times its 30-day average. Then, the key reason for this would be that it had a capacity expansion greenfield project at Pakhajan, Gujarat. Now, this stock observed a consecutive upward trajectory for the second day in a row. And the management also gave guidance for its capacity expansion at Greenfield project at Pakhajan for FY26 at rupees 550 to 600 crores. Next, we have Alkem Laboratories, which was down by almost 14% today. And this was mainly on the back of media reports alleging that the company is involved in tax evasion. But countering these reasons, the company mentioned that these allegations are factually incorrect and that the company had fully cooperated with the income tax during the survey proceedings in September 23. Next, we have Greenfly, Indocount and Adani Wilmar, which were mainly buzzing on the back of large trades happening today. Greenfly saw 3.5% equity changing hands with an intraday high of almost 10%. Similarly, Indocount was also buzzing in volumes wherein 4% equity changed hands, and Adani Wilmar was also buzzing on the back of 1.3% equity changing hands. Now, these were the 5 stocks that were buzzing in trade today.
Okay, thanks a lot for that. Some strong moves there, particularly for this stock, Yasho Industries, if you can pull that up, because I think it was up about 20% in Friday's session. It's up around the 5.5% today on good volumes. Small cap stock, the small stock, not a very large stock, but clearly has had a really good move the last 1 week. So keep these at the back of your mind, Yasho in particular. But, again, it joins up list of stocks which in Friday's session had a very strong price volume action, and for the whole of last week, a clutch of these mid-size, small-size names have actually had a really good move. This one is not an exception to the rule.
Another one to talk about today is Zaggle. Just look at the movement on Zaggle. So they've announced a clutch of new business orders. They're going to co-brand with Nishi Forex, which is a authorized dealer for Forex cards. They have a deal with the MCure. They've signed on actually as a client, MCure Pharmaceuticals, Benetton India. So obviously Zaggle, prepares their employment sort of software. That stock is at 20% right now, and it's been up all day. In fact, I'd like to pull up the one-year chart if we could. In just 3 months, it's about 35%. And it's just had a phenomenal run up as well. So Zaggle, their stock in focus. In fact, we spoke with the management just a couple of days ago, and they say that they will be able to maintain their growth trajectory. Listen in.
We've given our guidance on growth. This year, we're going to grow 40 to 50%. Next year, 40% plus. If you think of it holistically, Samina, the spend management space is very nascent in India, right? And every company needs to digitize. There's a huge push from the overall ecosystem to be more compliant, to reduce leakage, to have information which is on a fingertips, at a fingertips. And that's the benefit that we provide. We increase your compliance, we reduce your leakage, we help you with your ESG goals because we reduce paper usage, it's greater transparency, and we are extremely competitive when it comes to price because we earn through our software fees and we earn through our transaction income. So it's a very reasonably priced platform for our corporate customers.
Okay, so this was an earlier conversation with Zaggle, but Hemen, I want to come to you on this stock, which has already had phenomenal run up, just 57% in the last 1 month. Any scope or any reason to enter right now?
Well, frankly speaking, Tamanna, it's a relatively new listing and we're at all-time highs. So clear blue sky. There aren't any levels, frankly speaking, to go on. But whatever limited data that we have clearly shows a higher top, higher bottom scenario, which is the basic of any bull market. So seems good, but I wouldn't want to go out on a limb and give up buy right now, simply because I'm bereft of enough data. But the setup seems very clearly bullish. I'm not sure it will continue with the same quantum and speed, but seems sound and stable.
Choka, what about you on Zaggle? Any views there?
Yeah, I mean, I belong to traditional, very conservative school of thought. I looked at the fundamentals. Growth is great, but it's trading at around 86p on current year earning. So this kind of stocks give me a little scare. We have already seen a lot of new age companies, how they destroy well. I would not buy at current level.
All right.
18% as we speak.
Ridiculous.
I don't know
ridiculous run up.
Is this is the weak chart? Yeah. Okay. I was surprised about why the spike came in just in the last 2 minutes of trade.
No, it's been up all day. But even if you look at the daily chart, the last, I think, 10-15 minutes have gone up even higher. So that's the Zaggle story, but so many more stocks to talk about. Very quick break and we're coming right back, including to ask Hemen for his top buy today, sell tomorrow ideas.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right.
All right, welcome back. We're just about 20 odd minutes from closing, 25 odd minutes from closing, and it's been a flat day, flat to negative, I would say. Nifty IT is the biggest sort of loser of the day. Banking stocks not doing too well either. The broader market's also losing steam now at this point. If you pull up, their traction through the day, the broader markets are also losing steam. But one of the big losers of the day and the last few sessions actually has been Asian Paints, down about 4% now as we speak. But yeah, it has had a weak day throughout. And one of the reasons is a clutch of notes that have come out and see it being hit by competition in the space. Now, the paint segment is a particularly interesting one because it has seen more and more players make an entry. Others are waiting in the wings, and it is a space which has been dominated by an Asian Paints for several decades. It's the leader in the pack. Now, the question is that will new players coming into the market actually make an impact on Asian Paints? There is a bull and bear case on this, and presenting both sides of that story are Mahima and Harsh.
Right, Tamanna. So as you rightly mentioned, it's a bull versus bear case where Macquarie has maintained a bullish stance, whereas CLSA has maintained a bearish stand. Now, when we talk about Macquarie, they've said that they maintain an outperformance with a target price of 4,000. What does CLSA have to say on this, Harsh?
Well, yes, so CLSA suggests that the increase in competition both on the dealer side as well as on the consumer side will dilute some of the top line that Asian Paints has, and some of the moats that Asian Paints has will get diluted as a result of that.
Right. Against this, Macquarie has argued that Asian Paints has had a very long stance in terms of paints and their market share, and they've had a good history of defending effectively in terms of market leadership.
Sure. You know, the other argument that CLSA seems to make is that due to this pressure with regard to dealers as well as customers, what you'll see is growth and margins will increasingly start coming under pressure. Mind you, 40% more capacity added to the current paint output, obviously domestically in India, and that is a very large quantum which should therefore impact Asian Paints both from a margin as well as from a top line perspective.
Right. So the argument is that 40% capacity added will not only affect Asian Paints but a lot of other players in the industries which are much smaller than Asian Paints. So that is what Macquarie has to say on this point.
Well, so that's an interesting perspective, whether Asian Paints does get impacted or not, but a slowdown nonetheless is expected. So what you're therefore expecting is either the second rung players will get impacted, Asian Paints being one of them will have a second order impact, Mahima, and that's what CLSA seems to suggest. Now what they're also suggesting is that the slowdown in growth will impact Asian Paints in some form or shape. Obviously need to wait and watch as to what kind of an impact, and therefore what they are suggesting is that there is a possible impact with regard to valuations, which we'll come to next.
Correct. To that, Macquarie has said that Grasim is not, competing towards the pricing strategy of any kind of paint company. They're saying that they're targeting a particular product guarantee or product differentiation. Well, that is why they're saying that Asian Paints will not be affected that much and will not be losing any kind of market share to Grasim. But as you mentioned, valuations, what does CLSA have to say about the valuations?
Well, what they're suggesting is ROEs will contract from the 30% plus to around the 26% plus kind of mark, and therefore they've derated the multiple for Asian Paints. Asian Paints trades at roughly 60 times plus in terms of price to earnings currently, and that has been the average since the last 3 years. What CLSA has done is they've taken the 15-year average now and therefore derated the stock. They earlier had a target price of 3,017 on the share. Now they have a target price of 24.25. That's a substantial downgrade.
Absolutely, but Macquarie on this says that it has still maintained outperformance with a target price of 4,000, and they're saying that FY24 estimates PE is approximately at 48.3, and for FY25 it is approximately at 41.8. So these are the two views of bull versus bear brokerages on Asian Paints.
Oh, excellent. Really interesting presentation there. Only you guys should have swapped positions perhaps. But yeah, Neeraj, that's the point. Has the fear over Asian Paints been overdone a bit? Because there are other competitors in the market. But Asian Paints' reach at the level of the actual painter, the guy who's doing the painting, is not going to be that easy to break.
Yeah. So
and not that soon either.
Yeah. So Asian Paints will probably still retain for a long time the #1 player. Does the valuation come under question mark? Not just because of Grasim, but because of the fact that Grasim, there is JSW, and the others like Berger, etc. will not keep quiet. Berger is also a reasonably large player in its own right. So would all of that make pricing come off, margins come off a little bit, and then maybe multiples? Because even if Asian Paints multiples come off from whatever 60, 65 times to 55 or 50 times, that is still not cheap per se, and could be acceptable market at a reasonable valuation too. So it may not be an earnings corrective move, but it may well be a valuation corrective move.
Yeah, but typically in any market where you have one lead player and then there is a challenger, it is the smaller players who get
disrupted from a business perspective the most.
From a business perspective. In fact, let's get views from Choka and Hemen on this. Hemen, I'll start with you first. Asian Paints feeling the heat today. Do you think it's worth picking up at these points, or would you wait for a bigger cut?
I'd wait a bit, Tamanna, because 39-year uptrend, 39-year uptrend from whatever data we have, could be more than that. Last 36 or roughly last 33 months, it's underperformed. That's okay. We've had a phenomenal move, but now things are looking just a bit wobbly. And I'm not talking about the weekly charts. I'm talking about the monthly and the quarterly charts, because I mean, after almost 3 years of doing nothing, now things are getting a bit negative, and even the quarterly charts seem to suggest weakness. Most of the mechanical indicators are in sell mode. There is distinct heaviness in the stock, a lower top, lower bottom on multiple time frames. I'd wait a bit. I'd say 2600 is very important. That is not sounding like a prophet of doom or something. 2600 is a make or break level. We have not closed below 2600 for Asian Paints since the month ended April 21, and this we are 3 years into it. So if we break 2600, I said if not now, we are 250 points away. If we close below 2600 on the monthly chart, I think we'll see something which we haven't seen in Asian Paints in last 39 years. So I would be on tenterhooks. I'd stay away for the time being. Let's see how things play out. Earlier, whenever such things have happened, okay, not fair to compare stocks like Asian Paints, they are in humongous upmoves. These things get digested. But this time around, is it a question of cry wolf for the real thing? I'd wait a bit. Things currently are not looking good.
So you'll wait a bit in terms of the technical charts, but let's look at it fundamentally as well. Choka is with us, and you heard that bull versus bear case put together, by Harsh and Mahima, reflecting again the varied kind of views when it comes to the dominance of an Asian Paints in the space. What's your take? What side are you on?
I would give buy call on Asian Paints for a couple of reasons.
Okay.
Even before the reports were out, the stock was already down 15%, now 20% down from 52-week high. Of course, not just because price is down, one has to buy. That gives a little comfort. But the point is, it's not going to be that easy for other players to snatch away the market share from Asian Paints in the short to medium term so easily. And as you rightly put it, this brand is so powerful for our last 3-4 decades. The task is going to be very tough. And who knows, they may be able to snatch away the market share from the weaker player or smaller player than from Asian Paints. That is also another possibility I would consider. And lastly, the oil price corrected on Friday. I have a firm view that crude oil price will correct substantially because there are deflationary conditions in many parts of the world that always help to Asian Paints to come back with a tremendous improvement in the margin and profits. So considering all these facts, I would give a strong buy on Asian Paints.
Okay, well, let's see. So like we said, some people are constructive, some people are not. Let's see how it shapes up. What it seems is that people are very constructive on is Ganesh Housing. Everybody's constructive because the stock is in upper circuit, only buyers, no sellers. Let's get in and remember, it's trading on high volumes as well. Mihika Johnson with why this could be the reason. Mihika, good afternoon.
Yes, the stock did hit an upper circuit of 10% in early trade, and the stock has also surged 98% year to date, and volumes were over 2 times its 30-day average with total volumes at 2.68 lakh crores. No specific triggers very recently, but the company did have its Q3 earnings where revenues were up 2.72 times to 183 crores. EBITDA was also up almost 3 times year on year, and net profit also rose 2.32 times at 100.6 crores. The company's also significantly reduced its debt from FY29, and as of March 2023, it was totally debt free. It also has 2 ongoing projects that are set to be completed in March 2026, and the expected free cash flow out of that, those 2 projects is around 650 crores, and it also has 3 planned projects projects that are expected to be completed around 2033, and the expected cash flow from that is also 9,350 crore rupees.
All right, thank you for that, Mihika. Ganesh Housing there on an upper circuit in trade today. So many stories to look at, but what is the big theme coming in? And an interesting conversation we had today is with the management of Dixon Technologies, Atul Lal. Couple of announcements over the weekend saw the stock go up in trade. It hit a live high today. It's come off those highs as well, but it's an interesting take that Atul Lal has, because the PLI scheme allocations, which are expected post-elections in July, will become important, and of course their outlook on the semiconductor game.
So the scheme tenure is 5 years, and we have already made the threshold investment as committed to the government. Order book is already there. We have signed the contracts. The production is being planned. The lines are being set up. The organization is being built up. And as I shared with you, our first year is for under the PLI-2 scheme is going to be 24-25. For one of the brands, we are targeting production to start sometime in Q1. And for the second large brand, we are targeting to start the production in Q2 of the next fiscal. That's the plan.
Well, a clutch of these stocks are hitting life highs, right? So, or trading at good highs. So Dixon is one. Sona Comstar is another one, which is up 2.5% today and continues to rise and shine from where it was. So do keep an eye out for that. And the Adani Group stocks, we've spoken about them. Adani Green at 1970 is certainly packing up punches there. 1972 at 2.5%. I think it is circa its life highs as well. So clutch of stocks trading on very on reasonably high levels. Do you track Sona Comstar, Mr. Chokalingam?
I've been tracking it. Of course, as you said, the stock has gone beyond my valuation comfort zone.
Okay, so it's gone beyond the valuation comfort zone, but and in some sense that's right, because it's not a cheap stock at all relative to all the other auto ancillaries available. I think this one is extremely expensive, so that's to be kept in mind for sure. What else? I'm just trying to see. There is Cupid, which continues to be on an upper circuit. You know, this is a story that dreams are made of. Cupid, until the acquisition was done, was nowhere in the picture. Now you look at the 1-year chart and you will see a sharp uptick in Cupid from 500 odd that it started rallying. The stock is now non-stop at this. Look at that 12-month gain, 891%. It's just had this one-way move in the last 6 months, and it's trading at 2453. Mr. Chokalingam, do you track Cupid at all?
I tried to learn from it after seeing such a massive rally. I'm sorry, I didn't able to understand why it is trading at over 120 PE.
Yeah, it's an extremely expensive stock, I'm sure. The volumes, today it's gone up on high volumes, but the volumes are about 10 times the 2-week average. And it's really gone up on a very high base as well. So good going here for Cupid. Him and I want to ask you to comment on Cupid, don't worry. What I can ask you though, along with your closing strategy, is to give a comment on Alchem Labs. I don't know if we've spoken about it, but that one has fallen today on fairly high volumes. So give me a call on Alchem Labs if you can, and then leave us with a closing strategy.
I heaved a sigh of relief, Neeraj, when you didn't ask me about Cupid, because I was trying to work out an exit strategy, escape strategy, so to speak. And now you bowled a dangerous bouncer at me. Well, frankly speaking, on a serious note, Alchem has recovered very strongly from 4660 intraday low. It's come back and clawed back to close, not close, I believe will close about the 55-day exponential moving average. 4,750 has been very strong support. It's not closed below this in a few months now. I wouldn't have a call at this point in time, but it's definitely not a short, because if it's recovered like this, on volumes have gone through the roof, almost 25 lakh and counting. So whatever negativity, whatever it is, I think the sell-off seems to have taken place. Yes, after a couple of trading sessions, if we were to close below 4,800, I think then that would be trouble around the corner. But currently it's in a no trade zone. But I wouldn't want to short at this point in time either. Coming back to stocks, the Market seemed a bit iffy, but I have a buy call BTST on, okay, I don't need to give a BTST, but I have my calls to give. So I have a buy call on Adani Enterprise because, I mean, that stock was good, is good, and I believe should remain well. So buy call on Adani Enterprise is 33.30, stop loss 32.30, target 33.50. Sorry, that is 35.50. I'd like to just change that, my bad. Secondly, a buy call on Tata Consumer. Tata Consumer is on the verge of breaking out, or it has broken out of a consolidation phase. And yes, it's on the verge. Sorry, it hasn't broken out, but it's a multi-week consolidation phase, cusp of a breakout. Buy Tata Consumer at 1175, stop loss 1150, target 1225. It's a modest trading target. I believe it's heading towards 1300 and more. Neeraj.
Choka, let me come to you. I know you won't give us perhaps a BTST call, but your top picks in this market right now, where you're seeing a lot of sideways and range-bound trade. Perhaps there is a wait for the next big trigger. What do you have on your top of mind?
Yeah, though the small cap valuation is highly stretched, in every market you have opportunities. There are stocks which are ignored. One such stock is Sterling Tools. This is into fastener. It's a very more than 2-decade-old company. It has been doing very well. And recently they got into EV component. And I like this stock a lot. I have studied its fundamentals. I believe this stock can easily give a 20-25% return. Then if I am permitted, I can talk about a small cap or micro cap stock, Mindtech Technologies. It's a IT service company. If you see recently, the company claimed to have got 22 deals. It's a cash-rich company, a lot of cash on the books. It's a MNC stock, small, but I want to tell you that this is only
Mr. Chokalingam, sorry, what's the name of the stock that you mentioned?
Mindtech.
Okay. Mr. Chokalingam, may I request you to just hold on to that thought, because you've just broken a piece of news. I would love to understand about Mindtech, but I need to go across to my colleague Smriti, who's broken this story on Wockhardt. The stock is up 7.5%. Smriti, what are you learning?
Hi Neeraj, yes, Wockhardt will raise 400 crores through a qualified institutional placement. This is on priority basis, and which is understandable. If you look at their debt, it's at 933 crores while their cash is only 84 crores. So they are in a hurry to raise this amount. Now about the price, while the price has not been fixed yet, it will be around 10-day average of the price, which we have calculated, and it comes around 561 rupees. So probably in that range of 550 to 560 rupees. That'll be the price of QIP. Then last year the company tried to pass a resolution to raise 6,000 crores through a promoter entity. However, that failed. But the shareholders did allow the company to raise this amount through other institutional buyers. So that's probably what's going to happen. Now, this fundraising is still a couple of days away, but it's happening.
Sorry, did I hear you give out or tell about when is it that this QIP is likely to be launched? Will it happen soon, or will it happen with a bit of a lag?
Well, there's definitely a lag there. The bankers are still in the process of determining the price for it. So we're still a few days away, a week or so.
All right, big news there on Wockhardt, and that stock about 7.5–8% up. As we've been breaking that story here on NDTV Profit. Big moves there, 400 crore QIP is the exclusive that we've got for you. Quick word from our experts on the Wockhardt counter. Choka, can I start with you?
I'm sorry, I haven't tracked it in the recent time.
Okay, fine. Hemain, on the charts, how are you liking Wockhardt? 561 is the 10-day price that we've calculated. We don't know what the exact QIP price will be, but we're learning it will be a 10-day average. As of now, that's 561 rupees.
So notwithstanding that dip due to the placement at 561, stock gave a multi-month breakout at 261. Not anticipating the price of here, but I believe 650 and 800 is what I would look at a few months down the line. Taman.
Okay, by the way, that news or that story from Smid is triggering a further reaction on the stock, because Wokhart is now ending at the highest point of the day, if you will, 615. It was at about 608 when we started, when the story broke on NDTV Profit, and now it's trading circa the highest price. Now, this could be interesting because remember, Wokhart has that one drug which they are banking on, and which could be a big game changer, if you will, in the words of Mr. Habeel Khorakiwala. You know, viewers, for all of you who are interested, there is a conversation that my colleague Samina had with Habeel Khorakiwala about a month ago, and you can go on to our website, ndtvprofit.com, or any of our social media handles or YouTube, and try and hunt for that interview. It gives in detail the drug and the efficacy and the kind of business that could come from it. So this, granted, is of course for debt reduction, but there is also a business case that Wokhart is trying to build out around that launch. So keep this at the back of the mind. 612 and counting is Wokhart at the current point of time. Mr. Chokalingam, very quickly, in about 30 to 60 seconds, if you can explain Mind Tech and why do you like it?
Yeah, it's a small MNC, micro cap stock. It's suitable only for risk-taking people because it's a micro cap. Debt-free, lot of cash on the books, and diversified clientele profile. And few weeks back, the management has reported to the exchange that they have got signed 22 deals. So all these are well for Mind Tech.
Okay, let's start wrapping up the markets for our viewers. Mr. Chokalingam and Hemen, thank you for taking the time out and being with us on the show. But quickly wrap up what the markets are doing. At close, 0.4% lower for the Nifty. So it's kind of succumbed to a little bit of selling in the last half an hour from 0.2 to 0.43. Wonder if banks have led that. Should get the bank Nifty 0.5%. So banks have certainly led that. Mid caps and small caps could be flattish, but we should get the heat map up because yes, the last half an hour we have seen some bit of selling for sure. Asian Paints is down 4%, so that one is sulking all right. I'm wondering where are the banks which would have done. So now they're in the top 10 losers. It's only 0.5% down for the bank Nifty per se.
It's the IT stocks as well today.
As well,
Neeraj.
yes.
The IT index should be down about 1.5%, nearly 2%. So IT stocks definitely. Let's pull up the Nifty contributors, right, and see what's really contributing to that pain.
Yes.
Because yes, you do have an Asian Paints at the bottom, but
ICICI Bank.
Yeah, there you have it. ICICI Bank, Infosys, and ICICI Bank between them, and Asian Paints TCS. So it is an IT play, which is...
It is actually more an IT play.
Yeah.
The last half an hour has seen some selling into banking because the bank Nifty from being flat is now down 0.5%. So that's quite stunning. On the gaining side, it's the Adani Twins and L&T to kind of stand out.
Correct. The advanced decline ratios for the day also will tell you the kind of volatility perhaps you've had. And look at that. It's in the last half an hour, 20 minutes or so since we've been tracking this, Neeraj, that you've really seen that gap open up and, you know, the ratio sort of getting skewed. You know, we should also just pull up what the mid-cap losers are for the day, the mid-cap losers and the gainers for the day, because you've had an overall, I would say, tepid day of trade. Nothing too exciting happening. The standout stories on the positive and negative sides are Asian Paints. One of the stories really of the last hour of trade is the recovery here. And HPCL, if you pull up a BPCL, IOC, all of those that you know, you were talking about as well, Neeraj, and something you alluded to in trade setup, that is the worst over for OMCs perhaps. During close, you did see that coming in. Maybe an HPCL and an IOC can also be pulled up altogether. So yeah, you've had a decent-ish recovery over there.
Yeah, you have to argue that, yes, and Tamanna is right. IT stood out like a sore thumb. We spoke about that a lot of shorts piled there ahead of the expiry week, and that's what's happened to Nifty IT, 1.25% lower. So keep that in mind. Just want to wrap up with a line chart of Wokhart, because that was a big exclusive that we broke on NDTV Profit. If you can just bring that one up and see how that one has ended. In the dying minutes of trade, viewers, you would remember if you've just joined in, we broke an exclusive story about a possible QIP, and Tamanna, good reaction to that one as well.
Yeah, absolutely. Wokhart close to its day's high at 619, not quite there. Maybe a little pull off right at the bottom, and yeah, post-afternoon you saw that stock beginning to rise, and then of course NDTV Profits exclusive there. So that will be one stock to watch in trade tomorrow.
Yes, indeed. But for now, From Tamanna and me and the team that put this show together, thank you so much for watching. Alpha Strategist with the Motilal Oswal Wealth team coming up next. Stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket,
Well, thanks for tuning into this conversation of the Alpha Strategist. It's a monthly product that the Motilal Oswal Wealth team comes out with, and the men involved in the product Ashish Shankar and Nitin Shanbag join me right now to talk about this month's issue, and they're calling it walking the talk after calling 2024 as the year of the all-rounder, where you need all the asset classes. I presume, gentlemen, thanks for joining in. I presume that what you're trying to say in this note is that your belief around the year of the all-rounder and the good times continuing have gotten emboldened or gotten verified, if you will, by what the finance minister has done in the union budget. How important is that for the investing implications for the year at large?
Hi Neeraj, thanks very much. It's always a pleasure to be on your show and talking to your viewers. So you're right, as you know, we set the tone for the calendar year in January, and clearly our view was that all asset classes are looking fine, and this is a year where we are advising investors not to go overboard on their asset allocation on any single asset class. So if you have a certain asset allocation mix which is working for you, just stick to that, because whether it's gold, fixed income or equities, all of them look reasonably attractive and balanced as far as their own valuations are concerned. February, the Alpha Strategist note was centered around the budget, because that was the big development, the interim budget. Now, it is titled Walking the Talk, and as the name suggests, we believe that the government has basically stuck to the core principle of fiscal consolidation. And this is really, really refreshing because we are going into an election season, and generally there are expectations built before the election budget that there will be freebies, there will be giveaways, there will be incremental allocation to welfare schemes. As opposed to that, this government has really been very clinical about the budget. What they've done is they've given a clear path on fiscal consolidation over the next couple of years. If you recollect, post-COVID, we were comfortable with a slightly higher deficit because you had to do a little more on the welfare side. The economy slowed down, the tax to GDP collections came down. But over the last couple of years, we've had a reasonably good recovery. And now the government has again put the economy on a path of fiscal consolidation. We believe, and the other big thing, Neeraj, is that if you look at the quality of expenditure, right, that is improved again. What we are seeing is higher allocation towards capital expenditure, lower budgets to revenue expenditure. So essentially, this government is saying, hey, you know, we are going to keep the budget deficits tight. We are going to spend more on capex, which will spur future growth for the country. This is a big signal, especially to foreign investors, and it's a big signal from a economy point of view, because a better fiscal deficit means better currency stability in the future. As you know, most foreign investors, when they come to India through the direct route or through the capital market route, they like continuity in policy, they like a stable currency, and they like the fact that the government is essentially walking the talk. So we believe it's a good interim budget. Of course, we have to remember that it's an interim budget and there'll be another budget post the elections. But the signaling is extremely strong, and they've kept the currency in mind, and they've kept the fact that as a country, we'll continue to require a lot of foreign capital in the future to build out some of the infrastructure that we are trying to build. So it augurs pretty well for fixed income markets, because this ensures that there is no crowding out in the debt market from a government point of view. Hopefully, we will see a lot of FDI money coming into fixed income as well, as we get included in some of the global bond indices. From an equity standpoint, it gives continuity on the policy front. So all in all, you know, good budget, and you know, we are happy that the government has walked the talk when it comes to the overall measures.
Yeah, Nitin, you are out and out in numbers, man. And forgive me for bracketing you that way, but it just stands out when you talk. So I'm trying to understand what numbers stood out for you. Now the budget is long digested, right? So everybody's bored of it if we talk about the budget. But I'm sure you have a data point or two which could be so interesting. So Ashish has laid the context beautifully. Now supplement this with maybe a number or two which stood out.
Sure. So talking about fiscal deficit itself, we are talking about 5.8% for this year, coming down to 5.1%, which is rather significant. But the path towards fiscal consolidation then lays down a 4.5% number for FY26, which looks aggressive, but the fact that they did not do much as far as populism was concerned is a big merit, right? Now translate this into, borrowing programs and tax collections, right? The tax collections through GST alone have risen rather dramatically over the last couple of years. FY22, the average monthly collections were about 1.2 lakh crores, which have increased to about 1.5 lakh crores in 2023, FY23, and which will close in our, possibly around 1.7 lakh crores by the end of FY24. That's a monthly number, right? So that's rather significant. What this has done is it has allowed the government to borrow less from the market. So last year they were talking about borrowing 15 lakh crores. FY25, they are looking to borrow just about 14 lakh crores. And now couple all of this with whatever Ashish was mentioning in terms of potential inclusion in not just the JP Morgan index, but other global bond indexes as well, because now Bloomberg is also talking about, or rather having a serious conversation about adding the Indian government bonds into their bond index. The 10-year GSEC in India has come off from about 7.4% down to about 7.45 as we speak today. And this is a rather, dramatic, yield drop without actually the RBI doing anything as far as interest rates are concerned. So already investors who invested, as per our advice that we've been giving since October on the 10-year GSEC, they are sitting on a capital gain of 1.5 to 2% in absolute return, in addition to the coupon that they would receive on a year-on-year basis. So we are rather happy that things have kind of played out the way they have, and it still merits, allocation to the long-term GSEC. You would need to calibrate your fixed income allocation as we've been, advising over the last few months. I think some of the other things that you could do is get into multi-asset solutions. Some of those multi-asset solutions that operate as fixed income alternatives will actually give you 4 indexation benefits if you invest anywhere from now till the end of March and hold them beyond March of 2027, right? So automatically, most of the yield, which today hovers between 7.5 to 8%, will come to you almost tax-free. These are some of the ways that I can articulate in terms of numbers on how you can construct fixed income portfolios at this stage.
Okay, well, thanks for that. And some interesting observations from both Ashish and Nitin on the things. I mean, one is that there is something for both equities and debt for the year at large, which is what was kind of exemplified before the budget speech as well, and after the budget speech more so. And some interesting ideas out there for benefits from an investor's perspective, especially on the debt side, simply because the time period is such that we are on 22nd of February. So it's about 30 or 38 odd days that you have in hand that you can get an indexation benefit for the whole year if you choose to invest currently. So keep an eye out for that. Now, Ashish, the point most misunderstood by a lot of people was the capex number, which as a percentage has gone down, but as an absolute obviously has moved up. Now, there's a lot of conversation around how for 11 months of the year, because 1 month might be gone in Achar Sahita, this is a good enough number. I would love to draw your attention or tell us how you think about it from an investing angle, this whole capex plan, because I saw this chart on your screen wherein you've mapped out obviously the central government capex as a percentage of GDP, but also the capital allocation to the different sectors. I would love to know if you've done some work around what themes benefit out of doing capex in the way the government is doing.
Right. To just share some perspective, Neeraj, if you look at the budget allocations, the growth in capex over last year is about 16%. So this is the second consecutive year where capital expenditure is growing at double digit for the budget allocations, whereas revenue expenditure is a low single digit, right? Now, the other framework to look at, and this is a framework we look at, from an investment point of view regularly, is which consumer is going to spend over the next 2 to 3 years, right? Government is a consumer, there are private companies who are consumers, and there is households who are consumers. Today, the two consumers who are spending or who have actually laid down the budget to spend a lot, one is government. Okay, now let's look at government like you mentioned. Government is basically going to spend on defense, they are going to spend on railways, and they are going to spend on overall infra, whether it is roads, ports. So a lot of the companies which are government facing, P2G, you can see this in their order books, right? Order books are building up as a percentage of the sales. So we are essentially bullish on themes related to defense, related to railways, and related to overall infra spends from the government point of view. However, I would also like to mention at this point that the other consumer who's spending from a capex point of view is the Indian household. The main expenditure from a capex point of view for Indian household is real estate. And that is evidenced from the bookings that you see real estate developers getting. I mean, if you see the quarterly numbers which we are through, right, real estate companies are on a tear. I mean, any project that they launch is getting sold out like hotcakes, especially in the mid to high end segment, right, which basically tells you that there is a wealth effect. And from an affordability point of view, as well as from a lending point of view, things are very, very attractive for the consumer who's buying real estate. So these are two areas which are doing extremely well. Now it is a matter of time where companies will also start doing capex, because as we speak, the capacity utilization number is, I think, close to 74-75%, if I'm not mistaken. So at the most, optimum capex, optimum utilization, which we consider closer to 80%, is about 6 months to 9 months away. So we are already seeing a lot of companies, at least when we talk to them in their management calls, etc., laying out plans for future capex. So I think by the end of this calendar year, you'll have all cylinders firing. I mean, from a capital expenditure point of view. So anything related to the investment economy is looking pretty good. Just a mention on the earnings season, because that's another topical. That's another topic of discussion today. We are behind the quarterly earnings season. At the end of this, the broad numbers look pretty good. I mean, you've seen a 17% earnings growth YOY. We will end up this financial year at 20% YOY growth. This will be the 4th year of double-digit earnings growth for companies at Nifty, as well as in our coverage universe. And you're looking at 14% next year. So even from a fundamental corporate point of view, things are looking fine. And maybe Nitin can expand on it.
Yeah, I mean, think about it. This year, you would end at somewhere around 6.5 lakh crores as far as total profitability of the Nifty 50 companies are concerned, which is expected to grow to about 10 lakh crores in another couple of years. And the key sectors which are likely to drive it, as Ashish mentioned, are some of these old economy sectors, auto, and of course, BFSI as well. BFSI has done well. I think the difference now is between the private and some of the large PSU companies that are there. But I think the entire pack is running, and in many ways, this reminds us of the period between 2003 to 2007. Right, the fundamentals are extremely strong. In fact, the run rate in terms of earnings growth is rivaling the 2003 to 2007, and in some cases even exceeding that number. And that gives a lot of cushion to valuation. So while a lot of chatter is on the fact that markets are on a tear, or valuations in some pockets looks fairly exorbitant, but I think the earnings growth is quite up there in terms of providing the valuation cushion.
Okay. Earnings growth, and we've seen that with some of the companies for sure. Gentlemen, stay on. Need to slip into a very quick break. Come back and talk more about the note. There's some great data around the kind of growth that mid-caps, small caps, etc. have done. So on the equity side, we've discussed a bit of debt already. Talk a bit about the equity side on the other side. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, 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 And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with Alpha Strategist in conversation with both our guests and Ashish and Nitin. And gentlemen, a question on equity side, because I noticed this interesting statistic that you put out, right? That since the lows of calendar year 23, the kind of gains that have happened at the broader end of the spectrum have far outstripped. And we know this, but just when it comes in form of numbers, it kind of makes you stand up and take notice. So part one is the difference in returns that's happened. In part two, I'm borrowing from the previous answer that both of you gave, that in some cases, these might be justified because earnings growth will make up for it. So now I'm just trying to narrow this down a bit. We haven't done this before, but if I were to narrow it down to the small cap universe or the mid and small cap universe and ask you that based on your study, where is it wherein the gains have far outstripped the category or the Nifty as the case may be, but where by virtue of earnings growth, the numbers could be justified?
Sure. So maybe I'll just take on that question. Now, in the last year, as you mentioned, the mid and small caps have returned in terms of the total market cap. So we are talking about mid caps, which is the 101st to the 250th company, and the 251st to the 500th company. If you look at their cumulative market cap, that has expanded in the last year or so between 40% to close to 65%, right? Which in most circumstances looks fairly exorbitant. But now let's put this in context of the earnings that these categories have seen, especially over the last 2 to 3 years. The mid-cap earnings have grown in the vicinity of 25 to 30%, and the small cap companies have grown in the vicinity of 35 to 40%. And this is merely at an index level, right? So some of the underlying companies have obviously grown at a much, much faster pace. And if you remember, Neeraj, even last time we had discussed this, that there is actually no point merely looking at the headline index. You have to focus on quality companies, because not all those companies are extremely high up there in terms of ROE or ROCE profiles. But when we narrow it down to quality, whether it is within the PSU sector or whether it's private or any of these other sectors, in a diversified basket, if you're getting good quality companies, they will command a premium, but the earnings growth is providing a great tailwind, right? So we believe that while the markets might have rallied quite a bit even in that segment, and now let me give you one more context in terms of the price to earnings multiple. If you look at the headline earnings, the headline indices for mid cap, the long-term 10-year average is about 20 times. Currently, the 1-year forward PE is about 26 to 27 times. If you look at the small cap index, the long-term 10-year average of PE is about 16 times. Currently, it's trading at about 21 times, right? So these valuations are relatively higher as compared to the Nifty. The Nifty is at its long-term average of about 20 times, right? So hence, there is a lot of articles around the mid and small cap space. We believe that one has to be very, very bottom up in that segment. If one wants to take any incremental allocation to mid and small caps, it would be preferable to do it in a staggered manner over the next, let's say, 6 to 12 months. Having said that, on the large cap side or even multi-cap strategies, we continue to be extremely constructive, and we are asking investors to invest lump sum even at current levels.
people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Markets close in the red as broader markets outdo the benchmarks. Infosys Asian Paints dragged the markets lower. Dixon Technologies closes over 1.5% lower after hitting a record high on its factory launch. PNB MetLife sells ULIP as small cap fund. Now all eyes are on the insurance regulator, the IRDAI, as it is expected to take action in this case to prevent potential mis-selling. Ola launches a public version of AI chatbot Krutrim Assistant for consumers in multiple Indian languages. The payment dispute between SpiceJet and Celestial Aviation has been successfully resolved as the aircraft lessor decided to withdraw its insolvency plea. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, the show aims to bring you market headlines along with national and international news. But before we move on to the show and delve deep into the headlines, let's take a quick look at how the D Street fared during the day. My colleague Neeraj Shah joins in with a quick wrap of all the market action.
Well, the markets had a bit of a rough close, nothing too dramatic, but ending nearly at the low point of the day. Because midway through the day, they were off the lows, but nothing too dramatic. I mean, 100 points any given day can happen. The Bank Nifty led the fall actually, 0.5%, and the Nifty IT2 corrected quite strongly today. So if you look at what the Nifty IT did, 1.17%, ideally, actually the principal culprit. Frankly, let's get the first the main indices out of the way, and then I'll tell you the key contributors to the loss as well. Bring up the mid-cap and the small-cap indices as well. Mid-caps about 1/3% lower. Small-caps, which had flattened out, actually ended about 0.17% lower as well. So quite a bit of a fall that came into small-caps from the start of the day till late. Now, let's get the heat map up on the screen and show you what did well and what didn't. So a lot of red, as you can see, very little green. L&T up 2.5%. There is strength in Adani Enterprises as well as Adani Port, so that did okay. There's strength in Tata Consumer and Power Grid as well. The losers included Asian Paints, down about 4%, and a slew of metal and IT names. So from a Hindalco to a Tata Steel to a JSW Steel to the IT names. Look at this stack, Infi, HCL, TCS, all of them were in the red. In fact, if you bring up the contributors list, you will see what I'm talking about. It had ICICI Bank, it had TCS and Infosys. So IT, banking, Asian Paints by virtue of the fall. On the winning side, it was essentially L&T which stood out, small contributions from the Adani twins. But the real action was at the broader end of the spectrum. So a couple of newsmakers first, and that included maybe a Wokhard on which NDTV Profit broke exclusive about an upcoming QIP. Sona BLW, yet another day of gains, so up about a couple of percentage points. This did okay too. And then some other gainers, which we can pull up and show what did. So Data Patterns was up 10%, strong moves there. Adani Energy up about 8.74, Soba up another 8%. So really strong show by this one, as was the case with 360 One or PB Fintech, also very strong moves. On the losing side, there were a few names which stood out. The likes of Rain Industries reacting to results. Alchem Labs, big, sharp, volume-led downtick today. And Aegis Logistics down about 5%. Before we wrap up, if you can just pull up the Nifty IT losers and gainers, because that index really stood out like a sore thumb. Look at that. No gainers, all losers, and a clutch of names came off in the mid-cap as well as large-cap space. This remains a pocket to watch because there are a lot of shorts that have been piled into the IT stocks ahead of expiry. So it becomes a very important pocket to monitor.
That was the quick market wrap for you. Now, India's Pradhan Mantri Ann Kalyan Yojana will give free food grains to 80 crore beneficiaries at 5 kgs per month. But how will this scheme affect the ongoing G33 negotiations at the WTO MC13 underway in Abu Dhabi? My colleague Janni joins us to share more details about this. Janni, thanks for joining us. I really want to understand from you that what exactly first is the MC13 and how will the PM's Yojana impact the ongoing conversations that are happening over there?
WTO's MC13, which is the ministerial conference, is being currently held at Abu Dhabi from the 26th to the 29th of February. Now, one of the important topics that's being spoken about is about public stock holding limits. What that essentially means is the ability of a country to procure, store, and distribute food grains as it needs without distorting global agricultural trade. Now, G33 countries, which is actually a grouping of 48 countries, contrary to its name, is asking that the talks on agriculture, particularly on public stockholding limits, see some progress. This issue has been long pending since 2002, so this is already a 20-year time period where this issue has not been resolved. What seems to be the concern is whether developing countries can, in fact, exceed the limit that is allotted to them. About 10% of the produced value is what is allotted as a limit, beyond which, if they, procure and distribute food grains, it's seen as a distortion. Now, why does this affect India? India's Pradhan Mantri Garib Ann Kalyan Yojana is one that procures and distributes free food grains to about 80 crore beneficiaries. This is at 5 kgs per month. So this scheme will particularly be concerned with the developments in this particular dispute. What we have to watch out for, however, is how the member countries, the 164 member countries, work it out. WTO is an organization where it wants to achieve consensus on all topics. So the G33 nations in particular have asked to adopt and agree on special safeguard mechanisms, help out developing countries, considering that they have to take care of their domestic food security. But over the course of the next 4 days, we'll find out how exactly the needle moves, if at all, on this topic.
Well, that was a quick glimpse of the WTO ministerial meet for you. Now, on to the aviation space. There's some respite for SpiceJet as Celestial Aviation is expected to withdraw its insolvency plea against the carrier. My colleague Charu joins in with all the details of what exactly is up. Charu, thanks so much for joining us. A lot of action there in the aviation space indeed. What can you bring us on that?
Hi, Pragati. So what has happened is that one of the insolvency pleas that were filed against SpiceJet has practically been withdrawn. The lesson has said that the plea will be withdrawn, so the settlement has taken place. So let's delve a bit into this particular case. What happened was that Celestial Aviation, over unpaid dues, went ahead with an insolvency plea against the airline SpiceJet, and in October 2023, SpiceJet submitted that they would reach amicable resolution of the dispute and wanted a later date so that they can pay back the dues. Now we come to December and some of the dues were paid, and that is why both the parties asked for a longer period of time so that the negotiations could be completed and the dispute could be resolved. Now finally the dispute has been resolved. In fact, the Celestial Aviation's Council has also submitted before the tribunal that they have received their unpaid dues, they have received their payments, and now basically both the parties have said that the practical settlement in practical sense has been reached. Apart from this, two other cases have basically ended before the NCLT Delhi regarding SpiceJet. One was over unpaid dues by Willis Finance and one was by Wilmington. Apart from this, in Delhi High Court, some adverse action also is taking place against SpiceJet, where BV Finance and other lessors have approached the High Court against it. And a high-profile case against SpiceJet is also going on in Supreme Court, where they notably orally remarked that if you have money to pay for Go First, why do you not have money to pay for your unpaid dues? So let's see what happens on that front. Currently, on the NCLT front in the Delhi bench, there has been some relief to SpiceJet.
Thanks so much for bringing us those details. Now, in stock-specific news, we have an NDTV Profit exclusive for you. Yatharth Hospitals is all set to launch a QIP of 400 crore rupees, and that's what sources told NDTV Profit. Let's go across to our colleague Smriti for more on this. Smriti, thanks so much for joining us. Well, that's an NDTV Profit exclusive that you're bringing us. So, what exactly is Yatharth's rationale for this fundraise?
So you rightly mentioned Yatharth is going to raise funds through a QIP, and they've pegged the funds at 400 crore rupees. Now, just to give you a little context, last year Yatharth tried to get an approval from the shareholders to raise 1600 crore through a material-related party called Khorakiwala Holdings and Investments. It's an NBFC. Now, but that was rejected. However, the shareholders did approve a a proposal to raise 1600 crores from the eligible investors. So out of those 1600, now the company is raising 400 crores, and this is done at priority. Another context to add here is that the company's debt stands at 933 crore while the cash balance is only 84 crore. So which is probably why the company is going to go ahead with this QIP, and it's definitely on a priority basis. That's what the bankers are telling us. Now about the price of the QIP. Now the price will be determined on the 10-day average, and as things stand today, the price, the 10-day average is 561. So it'll be probably in that range of 550 to 560 rupees per share. That's what we're picking up.
All right, Smriti, thanks so much for bringing us those details. We'll come back to you as and when there's more. Now, on to one of the headlines that we mentioned in the beginning of the show. Bhavish Agarwal's AI venture, Kruthrim, has rolled out the consumer version of its AI chatbot. And this chatbot is now what is called the Kruthrim Assistant. My colleague Rishabh Bhatnagar joins us with all the details on this.
That's right. Bhavish Agarwal's AI venture Kruthrim has today launched the AI chatbot version, which is called Kruthrim Assistant. Now, this is currently open only for Indian phone numbers, so no email IDs. A very clear move at being aimed only at Indian consumers. Now, this is aimed to be built as an India-focused sovereign AI chatbot. And this was announced earlier in December 2023. This quickly became India's first AI unicorn as well, on the back of a $50 million fundraise that was led by Bhavish Agarwal himself, as well as other investors such as Matrix Partners. Now, what's Indian about this is that it can converse in a lot of Indian languages, so Marathi, Gujarati, Bengali, Kannada, Tamil, Malayalam, and many, many more, and even in English is what Ola Kruthrim claims. Now, in a blog post, Kruthrim has also mentioned that this AI chatbot might hallucinate in the initial phases, which is a common function that we do see across ChatGPT or Gemini for that matter now. When we spoke to Ola Kruthrim earlier in December, they had said that the data being fed into Kruthrim as a large language model will be from proprietary data sets, as well as some data partnerships that they could not reveal to us at that point in time. Now, this is just a first step that Ola Kruthrim has taken on their journey to try to become a full-stack, India-focused AI company. In December last year, the company had said that it will be building a family of large language models, India's first AI supercomputer, as well as designing AI chips. So they will not be entering fabrications, but only the design part of it. So early days for Kruthrim. Let's see how it fares, especially with the criticism that ChatGPT and the likes of Google's Gemini also faced in their early days. Back to you.
Right, thanks so much for bringing us those details. Now let's move on to a newsmaker that was there over the weekend as well. The Household Consumption Expenditure Survey. Now, indeed, it has been talk of the town, and the survey reveals that the gap between the urban and the rural household consumption has significantly narrowed. But not just this, there are several other very intriguing points that have been laid out in this survey. My colleague Pallavi joins us to give us the key takeaways of the entire survey.
Hi Pragati. So household spending has more than doubled over the span of over a decade. That's according to the Household Consumption Expenditure Survey that you rightly pointed out, was published over the course of the weekend. Now, here's a look at some of the key takeaways from the survey. Average monthly per capita consumption expenditure in rural areas was at about 3,773 rupees. This figure for urban areas was at about 6,459 rupees. Now, while, like you said, there is rising convergence between urban as well as rural areas, there's also rising inequality that was indicated from the survey's findings. So, for instance, the average MPC of the bottom 5%, the monthly per capita consumption expenditure of the bottom 5% of the country was at 1,373 rupees for rural, and this figure was at 10,500 rupees for the top 5%. Likewise, for urban areas as well, the average monthly per capita consumption expenditure was at 2,000 rupees for the bottom 5%. For the top 5% in rural areas, This figure was closer to 20,824 rupees. Other findings, important findings, included the fact that the share of food fell in both urban as well as rural areas. In rural areas, it fell to below 50% for the first time, whereas in urban areas, it fell below 40%. So basically, both urban and rural areas are now spending a lower share of their expenditure on food items. The share of cereals, pulses and vegetables also saw a fall, while the share of discretionary spending saw a rise. Packaged foods, durables, entertainment, medical expenses, conveyance costs as a share all saw a rise in both rural as well as urban areas. But education saw a decline as a share in both. That's something that's concerning and does warrant more monitoring going forward. Also, what's important, why the survey is so important, is because it will finally pave the way to revise existing CPI weights eventually. So, for instance, going forward, the weightage that is currently accorded to food might decline. That's especially important because food is one component that does, take up a large share of the basket for both rural and urban. But we'll continue bringing more on that. Stay tuned.
All right. Thanks so much for bringing us those details, Pallavi. Now, let's move on to another NDTV Profit exclusive that we have for our audience. Sources say that both SEBI and IRDAI are very well aware of PNB MetLife's ULIP that the company has launched as a small cap fund. My colleague Alex Matthew, who broke the news first, joins us with more on this.
It's a case of mislabeling of a product by an insurance company in India. We've got PNB MetLife Insurance, which has launched a ULIP, which is a unit-linked insurance product that is called PNB MetLife Small Cap Fund. Now, that sounds odd to you because most small cap funds, in fact, all small cap funds, are launched by the mutual fund industry. And that's where the problem lies. Because if you compare the two, ULIPs as well as mutual funds, there are a few very key differences. The first and the foremost difference is the lock-in period that you have for ULIPs. There's a lock-in of as many as 5 years. The other big issue is the amount of risk associated with the product, which is not very clearly defined by the insurance industry, in this case, not defined by PNB MetLife. Now, small cap mutual fund schemes are labeled with a very high risk by the mutual fund industry, and that same label does not exist for this particular ULIP. Now, we have reached out to the company and we're waiting for a clarification. We've also spoken to a few sources, and what they've said is that the regulators, both the market regulator as well as the insurance regulator, are aware of this particular product. And in fact, there has been dialogue between the two regulators to fix what could end up being mis-selling of a product. And we're expecting that the insurance regulator will step in with guidance or with possible action either against PNB MetLife or with a direction for the industry as a whole.
Well, thanks so much, Alex, for bringing those details. It's time for a short break, but please don't go anywhere because we have lots more lined up for you. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types.
Welcome back. You're watching The Reporter with us. Now, there has been a deal drought in the market, and that's what Gopal Jain, managing partner of Gaja Capital, had to say at the sidelines of the IBCA Conclave 2024. Let's quickly hear a chunk of the conversation and what more he had to say about the capital demands and the upcoming deals in the market.
Thank you. Well, there's been a deal drought in the market. On one hand, there's tremendous supply of capital. On the other hand, there's still a lot of demand for capital, but deals aren't happening. And I think in a large part because of valuations, right? We saw a phase in which valuations really went up because of very low interest rates. And I think as capital is repricing itself, and as time passes, we will see both sides come together. And I think this deal drought may resolve itself in 2024. It's getting resolved at the upper end of the market. I think at the lower end of the market, it's a little more difficult to get resolved because you can't staple cheap secondaries to a primary deal. But I'm hopeful that, this deal drought will soon be a thing of the past.
That was a chunk of the conversation from the conclave for you. Now, February 26th, the day marks 2 weeks of the farmers' protest, and a tractor march is being carried out at the Yamuna Expressway. Samyukt Kisan on Sunday announced that it will observe Quit WTO Day on February 26 and demanded that the centre should put pressure on the developed countries to keep agriculture out of the WTO in the ongoing MC13 at Abu Dhabi. My colleague from NDTV, Ishika Verma, brings us a ground report of all this.
Now, the farmer unions like the Samyukt Kisan Morcha are observing today as the Quit World Trade Organization Day, demanding that the Prime Minister, who's attending the World Trade Organization meeting in Abu Dhabi from today till 29th, pressurizes to keep agriculture out of the World Trade Organization so that restrictions are not put on MSP, on government procurement and subsidized food programs. Now, as a part of this, they continue to hold tractor marches at different national highways and state highways in the states of Punjab, Haryana and Uttar Pradesh. Now, amid all of this, the commuters, the general public who today got a slight relief when the Singhu border and the Tikri border partially opened up for the vehicular movement of them, certainly they are now concerned that they will again have to face inconvenience because of this. Thus, they believe that a dialogue at this point of time between the farmer unions and the government is very important so that the common citizen do not get affected. Now, this is Ishika Verma with Vijay Sushil Rathi reporting for NDTV Profit.
Well, that was the ground report for you from the farmers' protest. Now, let's take a quick look at an update from the Adani Defence and Aerospace. Now, the company inaugurated South Asia's largest ammunition and missiles complex. The facility is in Kanpur and is expected to be spread over 500 acres. Now, the Kanpur facility particularly is set to become one of the largest integrated ammunition manufacturing complexes. And the entire planned investment for this particular project is also expected to be at over 3,000 crore rupees, which, and in terms of impact, if we see, is expected to expect far beyond the defense sector. Now, in terms of job creation, over 4,000 jobs are expected to be created with this particular project, with 5 times the multiplier effect on specifically MSMEs. The local ecosystem is also to be benefited from the ammunition and missiles complex indirectly and both in other ways. Now, that's a standard disclaimer on your screen that NDTV is a subsidiary of AMG Media Networks, which is an Adani Group company. Now, let's take another look at what's happening in Palestine. In terms of a latest news update, the Palestinian Prime Minister quit over the Gaza aggression. He said, and I quote, "I submit the government's resignation to Mr. President Mahmoud Abbas," unquote. Now, this development comes in the wake of the developments related to the aggression against the Gaza Strip, as we also mentioned before this, and the escalation in the West Bank and Jerusalem. Well, that was all that we had for you on the Reporter for the day. For all the latest news and updates, please keep watching NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk. Others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. This listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Thanks for tuning into today's Talking Point. I'm your host, Neeraj Shah. The case for a chat today is centered around what could happen to equity markets, of course, but are Indian valuations still attractive? And one could look at global valuations and try and argue that maybe they aren't, but look at historical valuations and argue maybe, just maybe, there could be some more room as well. Would DI inflows further offset the impact of FPI outflows? And what are the expectations out of general elections 2024? Is it a done deal, or does a result still evoke some response